There we go. What is good, guys? How are we doing? Good morning and welcome to Happy Hump Day. Welcome to a Wednesday session here at The5ers. Hope you are all doing well. Hopefully you've had a good start to the week and a good couple of days. It is indeed Hump Day, so let us know how your week is going. It is also Fed Day as well, if those of you who are looking at the fundamentals, looking at the news, but we shall dive into that a little bit deeper in just a moment. But for now, guys, let's say hello to everyone. Rich is running a little bit late, so he will be here shortly. But you guys are going to have to come chat to me and look after me and keep me company this morning as I go solo through the rough seas of the markets. First things first, Christian Waven, what is good, Christian? How you doing, brother? MGN Thaland here, greetings. MGN a little bit early as well. I just seen 10 minutes ago. Christian 2 hours ago. God damn, keen. We have got Giovanni, buongiorno, bravi ragazzi. I don't know if I said any of that right, but buongiorno to you, Giovanni. How you doing? Usam, morning. Well, what is good? Usam, how you doing, brother? Good morning, London boy. What is good? Cowish, how you doing? Today for me, trading, I only have one watchword: no mercy, with a long sentiment. Very nice indeed, my friend. Just remember as well, we have got a lot of news coming out, so be very, very careful. Hello. How you doing, Syed? How you doing? Hello to you. Guys, I am not okay today. My neck, I've slept funny. My eyes feel really sore. And I can't properly look to my right. So if I'm putting weird faces, that'll be why. I'm trying to stretch off while I talk to you guys, so I can move properly. But I feel stiff today. Where is your board, brother? My board, as in my whiteboard that I usually have. That is back at home. That's back at my office. I'm currently in England. I'm about 3 hours away from home. Good evening, Henry. Good evening, Mama. How you doing? Cowish, Will, increase your voice if you can. Yes, I can. Let me just bear with. Is that better? Let me know if that's loud enough. Is it too loud? Let me know if that's a little bit better. Here, Master Will, what is good, my man? Good morning to you. How are you doing? Good morning, Will. Azrael Trade, what is good, brother? How are you doing? Good morning. Bravi ragazzi, good boys. So buongiorno, bravi ragazzi is good morning, good boys. From Giovanni. Pratik, good morning, bro. What is good, Pratik? How are you doing? Good morning to you too. It is indeed FOMC day today. So guys, like I said, we will be touching on the news very, very shortly. I'm going to bring a chart up. I'm also going to bring Forex Factory up. We're going to dive into the markets with this handsome gentleman who's just popped in. God, talk about segue, talk about timing. That was smooth on my side, you must admit.
That was smooth, dude. That was smooth. Hello to everyone.
Hello. What is good, Mama?
Hello.
Hello. I'm going to have to turn you down. That just deafened me.
What?
I had my volume too high on my headphones, so you just hello, and I was like,
my brain.
Oh my god, my brain.
My brain is inside of my neck now. What the hell?
Oh man, I'm having a hell of a day. Like my body's just not bodying today. I think I slept funny, so like my whole head feels like it's just been run over by a truck, and I can't move my neck to the right properly. So
can you move it to the left properly?
Yeah, I can move it. I'm gonna find that. It's just So I think I slept funny. Must have slept like
Will is becoming a bit of an old man. He's like,
oh, dude, I am.
Help
dude,
me.
I am becoming a proper old man, like
proper old man. Proper old man.
Yeah, I'll be wearing tweed in no time.
Patched elbows. You know?
Yeah, exactly.
You look like a university professor.
I was literally about to say university professor. Dude, I should do that. I should do that for my webinars. I should start coming in with chinos, suede trainers, and a brown patchwork or elbow patch suede tweed jacket.
Yeah, like an overcoat. And
Yeah.
you must have an undercoat as well.
And I must have a tie of a certain.
No. Not a tie, a bow tie. It has to be a little bow tie.
That is facts. I was thinking maybe like a Mickey Mouse bow tie one day, then a SpongeBob bow tie. Because you always find like university professors, they get a little bit creative with their ties.
Yeah.
I think you've hit the nail on the head. It needs to be a bow tie.
Trying to see if people realize
Exactly.
that there's a continuity change every day. Every time they come into what has Professor changed today? Oh, one of his shoelaces is pink. Weird.
That's good. That's good.
Dude, have you had a look at the market as yet?
I haven't. Literally, I've just set up, just sort of spoke to the guys now, halfway through saying hello, and then
this mug popped up.
That whatever that is just gate crashed our party.
Well, let me not prevent the party from carrying on.
I'll tell you what, let's continue saying hi to chat, and then we shall dive into the market. Have you looked at the market today?
Yes and no.
Okay. Well, I can see that your screen's up already, so I'm going to keep saying hello to chat, and then we'll bring your screen up, and then while you're diving into the market, I'll get the news up, because we have got a lot of news today.
Yeah, we do.
Couch asking, are you in some island or something? No, I'm not actually. I'm that. I know.
Islands.
Seychelles, Australia.
Seychelles in Australia. Yes, that's Seychelles. Not the other one. The one in Australia.
Not the tax-free island.
No. Not the very nice, fancy holiday destination that is beloved across the world. No, not that one. No,
Australia.
The Australian one.
Perfecto. Yes, no, indeed, Karish. No, I'm in it. I mean, I suppose I'm on an island. I'm on the same island that I live on, though. I am in the UK still. Although, I won't be. No, I was going to say I will be streaming from abroad in 2 weeks' time, but I won't be. I'm leaving actually just after the stream.
Fancy.
Yeah, no. So unfortunately, I won't be streaming from abroad, but I will be going abroad in a couple of weeks' time with my brother. Yes, Will. Now it's better. Good man. I'm glad. Hello, sir, from Dr. 8. What is good, my man? Did I miss something? Did you tell anything about today's FOMC? Nope, you are bang on time, guys. Like I said, just saying hello to everyone. Then Rich is going to dive into the markets quick. I'm assuming he's going to start off with the NASDAQ. He's going to leave gold for me, probably. And then we will check out the Forex factory and discuss what's going on in news. Welcome, Pratia boy, Kawish. Morning. Oh, hello, Rich. Morning, brother. Will enjoying beach holidays, dude. Yeah, you know what? I do enjoy my beach holidays.
Dude, who doesn't?
Fair,
like
no, that's fair, guys. I've got a real packed schedule agenda. Yeah, I like that. Yeah, let's go with agenda. I got a real packed agenda starting in 2 weeks, leading all the way to April next year. I'm jet setting, man. I got a lot of. Most of it is work, though. Actually, to be fair, most of it is work, but...
who says you can't enjoy your work?
True that. Raphael, bom dia. There you go, bom dia. Morning, Will and Rich, how you doing? Will, just happened to see your cigar cutter short on YouTube, which was hilarious. I hope you don't try spinning the cutter on anything delicate or so. I'm trying to think what cigar cutter reel that was.
The one where you cut your finger, mate.
Oh, they posted a short of that, have they?
You were playing with it on stream, and you're like, oh, I just cut myself, and it's just like, you muppet.
Oh, did they post that?
I don't know, but that's the only cigar cutter.
That's what I thought. That's what went through my head initially.
Yeah.
If they posted that short on, I'm gonna have to have a quick look. Yeah, they posted that as well. Oh god, thanks guys.
Yeah, sometimes.
Bugged me right off. Yes, no, I shall try my hardest not to cut anything delicate on my cigar cutter.
Like a toe, or a fingernail.
Yes, exactly.
Or a nose.
Yes, I don't think anything else too delicate would fit in a cigar cutter. Maybe.
Yeah, cigar cutter too big.
Yes, exactly. It's just like throwing a sausage in an alleyway.
Yeah.
Anyway, talking about the markets, let's dive into the markets and have a nice little segue on that one before we go too deep down that rabbit hole.
Yes, too deep down that very, very large hallway. NASDAQ, I'm going to start on the daily.
Sweet.
So not much has changed in relation to this flag that we had. You remember we were talking about this probably for the last 2 weeks or so, where basically we had, let's swing this one around. We had this symmetrical flag pattern, which eventually got broken, retested, and then absolutely sank off lower. So in this case, NASDAQ is not but bearish. The higher time frame is very bearish. I mean, you had this symmetrical triangle that eventually got broken and just continued lower. So nothing much to say on the daily apart from that. What I can say is that we had an area over here, which was in a base area, which we almost got to. We did take this base area over here on the left. And if I go down to the 1 hour as an example, you'll see that we just wicked the bottom end of it. I'm just going to move that out of the way. So we literally just wicked that bottom end of that base area and retested it again this morning before trying to push up again. So very interesting area to keep in mind right now. Going back to the daily, if we do break through this area and eventually close below, what is this, 27,500 or so, we actually close lower. The next port of call is going to be 27,377 to 26,875, which is this base area over here, which means that it was the last time price attempted on 2 days, in this case, two consecutive days, try to push price lower or at least break this current upward movement that we had. This was all the way back in April. All right. So we're right now back to where we were about in May, the beginning of May, this area over here. If we're going to have a strong reaction like we had done there, we should have seen it already on the first test where we basically wicked the bottom of that. We should already have seen a potential push up from here. That's why I'm thinking we're going to potentially continue pushing lower. If we have a reaction trying to push price back up again, this zone over here is a potential area where price can make its way back up to and then see if it can pick up some orders to try and push back down again. We've had 1, 2, 3, 4, 5. This is now the 6th day basically in a row where we're printing some sort of bearish price action. So we'll see whether or not it's going to end up closing as a bit of a retracement pushing up or if we're going to have a continuation pushing lower. Only time will tell. We do have some earnings reports coming out today and tomorrow, and on top of that we have FOMC and we have the financial rate decision from the Fed. So are they going to cut rates? Are they going to increase rates? We'll have to wait and see. We'll have Dirk and LJ in about 45 minutes to run us through more the macro and then the fundamental side of things, especially with regards to FOMC and then the rate decision as well. Let's put it like that. But for the time being, I think right now the low of day is in question for us. We've had already one reaction off of the low, which is why I had this area over here. So we had the low of yesterday, which was created during the New York Open, and then we tested it now this morning. We have yet to break up higher than today's high. We did sweep or even break yesterday's highs. We did sweep the New York and London highs of yesterday with this initial Tokyo move pushing up. So I want to see whether or not we can have a continuation to push up, maybe potentially come and feed some of this higher liquidity that's up there, and then potentially make its way back down to either the low of the day down here or to this base area just below this. If we're going to have some sort of downward movement, it's going to probably only be much later. I don't think that we're going to have too deep of a pullback down just yet, considering the fact that we have FOMC and the rate decision later today. And And then obviously we also have some earning reports as well at New York Open as well. So for me, NASDAQ was printing a higher low in relation to the low of the Tokyo session, which was also the low of day. We had a swing point just prior to that higher low being created. And then we had a nice volumetric push up. We've slowed as we came into the London session, and we're having a bit more of a pullback. On the 15-minute, we are smack bang at the 50 EMA as well. So I want to see whether or not... Okay, so we've already made a higher high. That's kind of like what I wanted to get to, is we have a higher high now. Now I want to see whether or not, or how deep, let's rather say, this pullback is going to be before we potentially start pushing up. So low, high, higher low, higher high. I want to see another higher low to potentially push up. And if we do that, I will be in a buy trying to at least get to the highs of day. So you'll notice how tight this will be in terms of stop loss. But if we can swing from here and start pushing up, I feel like we can definitely start pushing up higher. What I can say though is that we have a singular base area over here, which is basically where we tested. So drop, one base area, another drop. That initial drop did not create a new low, but the following up one did. But this one was already mitigated. So you can basically see it push down, retested, and continued lower. And since then, we've come back to it. So I want to see whether or not we can push through and start pushing up, maybe potentially taking the highs of the day. That's what I'm looking at the moment for NASDAQ. So 5-minute, that is what the 5-minute looks like. You can see very nice bullish movement right over here. Eventually slowing a little bit down, one more attempt, and then a bit of a pullback, creating a 5-minute base, pulling back again. Hopefully not too deep of a pullback. We can get back to maybe this area over here. So like this, and then continue pushing up. That would be great. So yeah, right now, a little bit more bullish on the day. Looking for potential highs to be taken. And then after that, FOMC push lower.
Yeah, nice. Oh, I rate that. I'm not quite sure what I'm looking for 100% as of yet. If I just bring my chart up, there we go. Can you see my chart okay?
Yes, we can.
Okay, amazing. Let me just...
Gold.
Gold. Now, with gold, we are still above the 50 EMA, and we are starting to print slightly bullish on the 5-minute. Going up to the 1 hour, we can see... Reset chart, there we go. Come back down here. Okay, so seeing on the 1 hour, we can see now that we have got this this nice little area of test, should we say? You know, we've come down, we've swept below all this. We've wicked, we've attempted, we've tried, we've pushed up, attempted to tackle back into this area here, tried to push back down lower, failed to break and close under, failed to break and close under here as well. And then we've put in more consolidation, more area for sort of confluence for upside movement. And now we've had this nice little push up, which followed through this morning's price action at 6 o'clock this morning. So as we've come into London Open on the 15-minute, we can see that we've sort of topped off just up here. I'm anticipating we can try and push into some form of area a little bit lower. I don't know how low we're going to come down to. Maybe if we can come back down into the area of 40-30. If we can do something like that, if we can move back into this 40-30 area, I think maybe around here even. You know, if I get my equilibrium out. There we go, center line, perfect. Let's try and get a fib retracement. Okay, so fib retracement is slightly lower, which I don't hate the idea of. So if we come down to here, that's a little bit nicer. So maybe now, if we work something like this, I reckon we could potentially be longing from... anything from 40.34 to 40.29. You know, if we can get something like that. But again, I don't want to see the bounce. I don't want to be trading this price action. I want to be trading this price action. So that's on the 15 minute. Again, let's have a quick look on the 5. The 5 minute, again, it's just adding confidence on the 5. The 5 minute is literally just an area to enter from. If I can see what's happening on the 15 and on the 5, then I'm very happy. Truth be told, if I can see what's happening on the 15 and on the 5, I won't. I'll pick between. So I'll either go for the 15 or I'll go for the 5. I don't see any point in analysing 5 and 15 when you're seeing the both. When you're seeing the same on both. So that being said, I am slightly bearish on gold right now. I'm wanting to see a pullback. I'm not interested in selling. I did have this indicator up this morning. The indicator has triggered a short signal. I've tried to find area behind it and reason for the short. I can see, other than what the indicator actually gives the signal for, I'm trying to give my own analysis behind it as well, and I can almost give my own confidence behind it. But to me, this is still high risk, so I wouldn't be interested in trading this because I like to be with the trend. However, I do really like the fact that this has, sent out a nice short signal, because it does add confidence to the fact that I do want gold to pull back into a nice area down here somewhere. If we can get that, like I said, I am potentially looking at being long for the day. Now, if I can get in and out of the trade within the next 9:23 now. What time have we got our first news out?
First news is going to be much later today.
Oh, 7 p.m. Oh, okay. I thought we had something out at midday. Okay, I'll tell you what. You know what? Today's... If I can be out before 1 p.m. If I can be in and out before 1 p.m, happy days. That'll be me done for the day. If I'm going to be in any... thing is, as we get closer to New York session... we got the Fed fund rates today. We got FOMC today. There's 2 really big news events. Plus, we have got this to worry about. We have got the one and only Twitter tangerine terrorist, or the tangerine Twitter terrorist, who could be speaking at any point today.
Yeah.
Especially given the fact that it's high impact news day, and it's very high impact news day as well. I do worry that he's just going to get, he's going to feel left out. He's going to feel FOMO. So he's just going to try and create some form of, high impact, sudden, non-expected news, just so he can feel part of the high impact day. So
yeah,
that's the only thing that worries me about Trump. So that's what I'm wanting to see. Like, I'm going to be super patient with it. We are getting a nice drop on gold now, which is absolutely beautiful. We've actually now had the tap underneath. So if we can close now underneath the 50 EMA, just adds a little bit more confidence that price is trying to push on down. I am bullish until this closes between the 40-20, underneath the 40-20. If it breaks and closes on the 5 minute under the 40-20, then I'm going to be a little bit if buts and maybes. I'll probably actually then consider asking myself, is this going to be is this going to be a continuation for bearish trend? Because if we do look to the left, guys, we have got bearish momentum. We are in a downtrend when we start looking at the 1 hour and the 4 hour overall trend. If I just reset my chart here, we can see that on the 4 hour, it's a little bit choppy, a little bit of nothingness going on. We're actually in a trading range. So on the 4 hour, we've got this low just down here. And we've also got this high just up here. There we go. We've had a pullback for continuation higher, but then we've had a failure to break higher and a push lower. That push lower is actually wicking beneath this previous low. It's not actually closing below it, not creating that lower low on internal structure. So right now, we are consolidating within this trading range on the 4 hour. On the 1 hour, we can see that we are moving below the 50 moving average. We did gap above it initially on Monday, but then we jumped straight back underneath it. We are shifting slightly on that higher time frame to the downside, although the 15 minute as of today, as of 3 o'clock today, so as of during Tokyo session, we have had that initial shift to the upside. Now, that initial shift to the upside, could that be the indication for price to move higher? Providing we don't break below 40.20, I think that we could end up putting in a higher low, having that continuation to the upside. Then I think we could start putting in bullish momentum for the, for the longer term. But for now, this is just a short-term pullback on a larger consolidative price.
Nice. That
Yes.
looks good. That looks good. This NASDAQ one of mine is pulling back a little bit more sharply than I would have wanted. I'm not entirely sure if this is going to be a pullback or a absolute just change up. So you can see here, yes, we slowed, but we started to pick up some nice downward pressure. So,
there is some really nice downward pressure.
I mean, if we take this fib movement here, this whole segment, we're at the golden zone right now, which is the 0.618 to half, basically movement, coming back into this area over here. I want to actually see us now slow down quite significantly. Potentially make some sort of doji candle or start printing some rejection candles with a wick below, and then another candle that starts pushing up. If there's another candle that starts pushing up and closes bullishly, I will potentially look at getting in for a quick scalp up to this high section here, if and only if we get a rally, a base, and a rally. Otherwise, no real point in getting in, because I'm not a fib trader. I'm just using the fib as a means to kind of like illustrate how deep of a pullback we've had already. So we're already at that 0.618 section, and we've got 1 minute 20 seconds left. We'll see. The 4-hour candle, there is an hour and a half left on it. We did have the previous 4-hour high. Oh, wrong drawing. Previous 4-hour high has already been swept, and we're getting closer and closer now to the open of the previous candle. So the previous candle open. I would love to see us close maybe up here on the 4-hour, or maybe a little bit higher, and then have a follow-up bullish candle on the 4-hour, trying to push price up. That would be nice. We'll see. 30 minutes before this hourly candle over here closes, I would love to see us... we can close below the previous 4-hourly one, but I don't want to see us close below the previous 2 hours previous hourly candle open. So I don't want to see us get to here, this segment here.
You don't want to see that?
No.
That's interesting.
That is going to start, if it closes in this area over here, that's bad. That's not a good thing. Yeah, that's not a good thing. That means that we're going to have effectively 1 more hour and on the 4-hour, and we'd be stuck in this area over here.
Yeah, fair. It's quite ugly.
It's not. Yeah, it's not pretty. It's not going to be pretty price action. Hopefully, so now this, I want this to end up being a rejection. That would be nice. Doesn't look like it's gonna.
Yeah, I don't know. Look, this it could. I don't know. We'll see. I haven't taken too much of a deep look on NAS yet. I was looking at gold, but
I mean, it's FOMC and rate day,
I know,
and we have so many of the earning reports and so on. It's looking like it's rejecting. So all I'm saying is that, like, I expect a lot of volatility. I don't expect a lot of like trending movement. I expect us to have some ups and downs.
Yeah. Are you expecting volatility throughout the day, or are you expecting... Yeah. Really? Okay, you're not expecting...
Yeah, no. I expect volatility throughout the day.
Okay.
I mean, if you just look at... where's my mouse now? If you just look at the full movement that we had from the bottom to the top there, that was 2 hours and 45 minutes, 323 points.
Yeah, fair.
And the pullback, you have, like this... 114 point pullback, This one's a little bit more. This one is 141 point pullback. So you're getting trending movements, but your pullbacks are large in comparison. So it's rejecting nicely here. I would like to see it close bullishly, and then another maybe bullish candle, a bearish candle, and then another bullish candle, and then I will get in.
Nice. I like that reaction from the NASDAQ.
You do?
Yeah, I do. If you draw a box from that previous high, oh sorry, no, the high, not the higher high.
What, this one?
No, the high, you've marked out the high.
From this one over here.
Yeah, from this morning.
So you want a box here?
Yeah. Look at the reaction straight from that. You know, we've
Yeah,
tapped in, and we've just moved straight out of it.
Yeah,
we've moved with a lot of volatility though, which is, or a lot. Sorry, not a lot of volatility, a lot of volume, which is
scary.
Yeah, maybe a bit. I think perhaps maybe even a bit too much volume. For me, it's like there's a lot of volume in that. Why?
Why are you so impulsive with this movement?
Yeah,
that's why I say I want to see a follow up. I want to see a
like you don't mind an impulsive move, but
yeah,
it's a big candle.
I would love to see a bit of a follow up, and then one bearish candle, and then another bullish candle.
Yeah, I rate that.
That would be great.
Yeah, I think that would be nice. Tomasa saying, well, what's the full name of the indicator that you use for marking up the buy and sell? The indicator that actually says buy, sell, it's called the Apex Brotherhood Hunter Framework.
Hunter Framework.
It's a Hunter Framework, I know, yeah, it's looking at thanks to ChatGPT.
Okay.
Me and Jochen couldn't think of a name for it, so we're like, what do we call it?
What do we call this thing?
Literally, what do we
framework?
Literally, like, what do we call this thing? So I was like, I'll ask ChatGPT see if they can come up with any names. I was like, this is what it does. This is how it works. These are the assets that it runs on. They're like, oh, blah, 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 this, that, the sniper framework, the hunter framework, the hunter executor. I was like, oh, that just sounds a bit too savage. I was like, I don't like that. But then it came up with
executor. Is it a
tiger? Yeah, literally, I was like, I don't know about that. And it was like the hunter framework. And I was like, okay.
As long as it's not Hunter Biden, then it's the Hunter Biden framework.
Yeah. Or the Hunter Trump framework.
Ooh.
Oosh. Ooh. Yeah. No, we no. we have like FBI break down my door now.
This is the police.
Yeah, have you seen those people when they get raided swatted on stream?
Yeah, I've seen that before.
Can you imagine? How worrying would that be? But how hilarious would that look? Yeah. We'll just get swatted on stream. For talking about
not like fly swatted either.
Yeah, no, just like FBI swatted.
People breaking into your house, guns at the ready, like
arresting me because I have
arresting you for what?
The Hunter Trump.
Because you said something. Oh my word.
Hashtag free speech. Anyway, moving on. Good morning, sir. Carl Dip, what is good? Good morning to you, my friend. I already short NAS 100 from 27,841. Interesting. So you're short in the NAS.
841. So
is that from yesterday or the small? Okay,
from here.
Yeah.
Maybe there.
Yeah, I'm gonna go there.
So what was your... Okay, I'm assuming your stop loss was at the high of day and you were aiming for this low down here, something like that. Did you take partials, or did you cut portion of your trade off, or are you just letting it run? We'll see whether or not...
Trin said, in the meantime, Trin saying, priceless analysis from you both, learning so much. Dude, that's amazing. I'm so glad. It's awesome to see you guys learning. You know, we do all this for free. We show up every day. So hopefully you guys, even if you take a little bit, you know, even if you take a tiny fraction of what we say and you implement it into your trading, or you learn from it, or you develop experience, or you relate to it, whatever it may be, that's success in my eyes. I say this. I say the same to the guys in the community. I say, guys, look, you don't have to learn everything, but as long as you take a little bit of value every single day from something someone has said, that's all that matters, because it's all about consistently improving. You don't need to become 100% better. Just 1% better each time will compound. Like the old saying goes, look after the pennies and the pounds look after themselves. In other words, it's the idea of trying to look after the smaller things in life, trying to, understand that small compounding effect slowly will add up into a larger result later on. But you got to see the bigger picture for that, and a lot of people really struggle with seeing that bigger picture.
Yeah. Sam is saying, Nas booked short trades, don't want to challenge Rich's analysis. Look, I'm not perfect, mate. I make a lot of mistakes in the market. It happens. That's just what I see. But you need to have confidence in your own trading style and your own trading analysis. And don't allow something that I have to say impact you. If something about what I'm saying is causing you to have doubt, that shouldn't happen, because you are the analyst of your own trading. So you should make sure that you're like, I understand what Rich is saying. However, I disagree because this and this and this reason. Unless what I have to say aligns with what you're saying, and then you're like, well, I agree. So ergo, I'll
hitting the nail on the head there as well. When you mentioned the idea behind, I disagree because anyone can disagree. Anyone can say, oh yeah, Rich, I don't like your short. I would much rather, I don't like your long. I'd much rather be short. Instead of saying, oh yeah, I think you're wrong, or this is what I'm doing, this is why I'm doing it. Genuinely say, okay, this is because, Rich, I think you're wrong because according to my plan, according to my plan, Rich, you're an idiot because we've got a break and close under here. Or, Rich, that's stupid, in my opinion. Why? I don't know.
Yeah.
Well, shut up then. Whereas if it's Rich, that's stupid because that candle's too volumetric and it's moved into another area of interest to the high side that I think there's actually a higher confidence price can go down. You're backing up confidence for your own strategy. Don't let someone else's strategy and idea behind a trade influence yours, because for all me and Rich don't know how to trade. We've only been trading 2 weeks. And if we're out here trying to tell you to short and shorting's amazing, you should definitely short, and then you're like, you've been trading for 2 years, you've got backed up data, you've got strategy, you've got a plan, and then you're like, well, hang on a minute. My entire plan says short, but this guy that I've just met is saying long. You don't know how long he's been in the market. Yeah, okay, luckily, I've been in the market close to 10 years now. Rich has been in close to 5 years?
5 years, yeah.
Yeah, 5 years. So, we got close to 15-ish years between us. So, okay, there's a little bit of a difference there. But the point in that being is when you see people on social media, when you see people in Discord groups, when you meet people at the pub, when they've told you in the pub that they've just passed an evaluation, I've just passed my P1 of the 5ers.
Congratulations to him, by the way.
Yeah, but that's the attitude. Congratulations. Oh, what made you do this? Oh, because I was short in this and this and this and this. Or this is my strategy. That's good for them. But a lot of times, people will pass a P1, pass a P2, and sometimes even get paid out of pure luck. So,
well,
not often, not often at all do they get to the paid out stage, in all fairness. But a lot of the time, you do see a P1 pass on luck. A lot of the time. And I'll say, yes. I'll 100% say that.
Yeah, in my mind, it's not difficult to do that, but to do it consistently is difficult.
100%.
And I will always add that caveat. I'll always say that to become funded is easy when you compare it to staying funded.
Yes, 100%. Well, that's
when
why
those
a
two
lot of
are,
my webinars that I
yeah.
talk about are about, a lot of what I talk about in general is about staying funded. Anyone can get funded. Not many people can
Yeah.
stay funded. You guys watched me trade an account for 2 years. You watched me pass phase 1, phase 2, and get funded. I'm going to draw down and earn it back. I'm going to draw down again, and then eventually blow the account. You guys watched me go through that entire process for 2 years.
Yeah, it was a minute.
Yeah, dude, literally. So it's about staying funded. I can pass an account, I can get paid an account. That's their easy stuff. Most people can do that. It's about keeping the account and looking after the account, developing that relationship with the prop. So yeah, no, 100%. When it goes to actually letting people influence your decision, not allowing people to influence your decision, you've got to make sure that you have confidence in your strategy, because you don't know how long these people have been trading for to pass an account.
Yeah, I think apart from all of that, it's the ownership. It's the fact that you take something that you claim ownership over. It's my analysis. I make the decision to take the buy or the sell. I place my stop loss, my take profit where I do. There's reason and rhyme behind what I do, because I have gone and tested it, and I have done the necessary work on this framework to get it to where it is today. And there's a sense of achievement for yourself if you take a trade and you're like, I believe according to my strategy that this is going to be this is going to be the outcome, and you see it happen. It's not from somebody else's analysis, it's your own. There's a sense of achievement there. It's that little bit of a confidence boost. It's that little bit of like, yeah, I can do this. So if you're constantly relying on other people's input, constantly relying on other people's analysis, for your specific trades, to take a trade, you're going to get to a point where you can't trade on your own, and it's not your win. Yes, the money is going into your account, but it's not your win. I don't know if this is kind of like resonating with people. The idea of this live stream is to be educational, first and foremost. Secondly, to be entertaining, and thirdly, to be a community. So the idea is, we don't want to give signals, because that would be us winning and you winning alongside us. We want to see you win on your own, with your own analysis. If we may be assisted with that analysis, or maybe assisted with the psychology, or assisted with the risk management, that kind of like stuff, that's what we want. We don't want to be the people that says, well, I got a great trade and you guys won with me. No. I want to see you guys grow, and I want to see you guys build your way up. So that's the intention. And you can't get that from a signals group, because you will always be reliant on other people's success for you to become successful. You should want to become successful by yourself with other people's input. So two different things entirely. Anyway, we're getting that little bit of a base and then a potential push up. We'll see whether or not this is going to lead to a potential push higher. If it closes now,
I was going to say, what would make you take that trade?
I want to take it now, like in 10 seconds.
So I was going to say, you're waiting for that close.
Yeah, it's in 5 seconds. I'm looking at this right now. I do like this for a potential.
Yeah, nice. Going off of what you were talking about, about gratification and about stuff like that. When it comes to, you said, oh yeah, I won this trade and you guys won with me. That's a great feeling for both the mentor and the mentee, providing it's done right. Because a lot of the people, you'll see on my social media, like, a lot of the time, so yesterday I think it was like the whole team was winning. And some of them took very similar trades. Ewan took very similar trades to Jochen. Jochen took very similar trades to like Fuzzy and all. But they're all very different trades as well. So it's the idea being like, when you work on a strategy as a community and as a team, then it's satisfying. Or let's say, for example, like this indicator that we're working on, it's satisfying. It's great fun to see the guys winning from it, but none of them actually take the same trade. Do you know why? Because they take it based on their analysis. They're like, you know, me, for example, you know, Ewan's already entered in a gold short today. I looked at it and I said to him, I was like, that's a bit high risk for me. I don't like it. You know, whereas, you know, I'll enter in an S&P short the other day or long the other day, and he'll say, I don't like that. I don't trade S&P. So it's about having your own ability to trade, but having a similar outlook on the market. That's what I quite like. What I don't like is, like you mentioned, Rich, guys, buy gold at 4K flat, stop loss at 3,900, TP at 4,300. I'm entering now. Boom, it hits TP. Yay, we all profited as a team. No, you didn't. You profited and everyone copied you. There's no satisfaction in that. There's no, oh, I'm so proud of my team. There's no pride in that. It's, well done, you got a bunch of copycats. That's all it is. There's so much more satisfaction and so much more sort of wow factor in the ability to trade with a community. Like you guys, for example, you know, in fact, a lot of people have said to me, Will, I'm trading the same analysis as you. I'm taking the same short as you, or I love that long, but you know, I think you can get a better entry. That's community. We're all trading together. We're all trading at similar levels even. Some are hedging. Some are like, Will, that's a garbage trade. I reckon it's going to go short when I'm long. You know, so that's community, is when you've got a difference in opinion. Some of you have the exact same opinion. Some of you have a slightly different opinion, but the same bias. You all got your own individual trade merits. And that is the importance in community. That's what's satisfying, because when, you know, I hit TP, or even if I'm not trading and I see like, I don't know, Daniel Bartle or Azrael trade, or, you know, one of you guys will actually take a trade and you told me this morning that your TP is at like 4,100. Then I get back to the market and I see 4,100 has been like smashed. I'm like, yes, Azrael trades just smashed that TP. You know, that's satisfying because I know that you guys have taken it. That's the whole point in community.
Okay.
Nice. How are we doing, guys?
How are you doing, LJ? Just thought I'd give a bit of a rant while I give Rich time to set his trade idea up.
That's right.
Yeah,
I'm a long gold from 4K, stop loss at 3,900, TP at 4,300.
Enter now.
4,300. Nice. 4,300.
I'm joking,
wow.
Rich.
Okay, that's. Are you?
Yeah, I'm joking. I'm actually hoping you're selling, LJ. I'm just looking at that now.
I was just repeating the example that Will gave before. I was just
Oh, okay. I don't actually have the stream open here, so I can't actually see your face at
It's
all.
The5ers
okay. Right.
.signals at lj.com. If anyone wants them, it's his new Telegram group. It's £3,000 a month, and yeah.
How are we doing, guys? Good morning. Speak of the devil, and he shall appear.
Indeed.
I'm here, so
Nice.
Whatever you do, don't
go.
go.
Say hi.
Yeah, whatever you do, don't go to the bathroom late at night in the dark and look at the mirror and say LJ 3 times.
Then he comes and hunts your stop loss. You know?
Yeah.
Oh no.
LJ turns you
Oh,
into
no.
the liquidity. He's standing in the mirror saying, yeah, nah, yeah.
Yeah, no, yeah. Yeah, no, yeah. Got your stop loss,
Yeah,
bro.
nah, yeah, you're now my liquidity. Oh, man.
All right.
How are we doing?
Oh, not too shabby, mate. Not too
I
shabby.
am good. So
sizing up.
handsome at Will the King. Oh, look at that. Cece, my favourite admirer. My biggest fan. For once, she's not flirting with Rich, though.
Yeah, I wouldn't be flirting with me either, knowing that you guys are in London right now. You know, having fun.
Change it to William the King, hey?
Oh,
Willie
yeah.
King.
King
Nice.
Will.
William the
King
Conqueror.
William.
King William II.
Yeah.
Or the third. We don't quite know just
Or
yet.
the third.
There's many Williams.
There is many Williams, to be fair.
He's the best one of them.
Yeah,
Out of all of them, he's the best one. We love him. We love William.
Many.
it was quite funny. I was talking about royalty and all the other day with my partner, and she goes to me. She was like, you're William, Prince of Wales," and I was like,
Yeah.
I was like, yeah, fair.
Yeah.
That's fair. And I was like, you do realize there is a actual Prince William, like a William Prince of Wales, though, right? She was like, yeah,
Yeah,
no.
yeah. It's
She was
the
like,
one
I
we're
know.
talking to right now.
She was like, I know. That's why I said it. I was like, okay, fair. It's good.
That's kind of cute, dude. That's kind of cute.
Dude, that was pretty sick. I was like, oh no way. There is actually the royal family, a William, Prince of Wales.
Willie, Prince of Willie.
Prince of Wales.
Yeah. Willie, won't he? Willie, won't he? We don't know. But
Who
he
knows?
is
Willie
Prince.
or Willie not?
Yeah, Willie or Willie not? That is indeed a question.
To will or not to will?
To Willie or not to Willie? That is the question.
That is the
What are
question.
you looking
Anyway,
at, Rich?
so
Here? You seem very focused.
I'm in a NASDAQ.
He's hyper-focused on the NAS.
I'm in a NASDAQ buy. No, I actually I had a meeting with my manager this morning, and while in this and setting everything up, I also have some extra stuff in the background that I am now looking at as well that I need to give some attention today. Otherwise, it is going to fall to the wayside, and I'm going to feel like a muppet because I didn't get to it when I had the opportunity and all of that kind of like stuff. So I'm not too fussed about this trade. If it loses, it is what it is. I don't really care. I'm more focused on the other stuff. I would love for it to be a winning trade. That would be, that would be lovely. But if it isn't, whatever. So what? It is what it is.
As long as it's part of your plan, who cares?
Yeah, I mean, we had the pullback. We are creating a higher low in relation to the previous one. We got a bit of a push. It's looking good so far. I want to see these higher high or the previous higher high get tapped. If it doesn't, it is what it is. I'm following my plan. The only thing that I'm not too keen on is the fact that if I look at this hourly candle, very large wick on the bottom end, and there's only about less than 7 minutes left before this one closes.
Yeah.
And I'm starting to feel like it's probably not going to close above that point. So I'm a little bit skeptical. The 4 hour, there's 1 hour left. It's looking nice and bullish so far, but there's still another hour left. So for a potential push up from here would be lovely. 15 minutes, it did not really do much already. So not filling me with a ton of confidence, to be dead honest, but
I don't mind it. I'd be targeting around where you're looking at, like 2,900 on, sorry, 27,900 on
yeah,
CFD.
somewhere over here.
I was going to say 2,900. That's some serious all-time highs.
Yeah.
Somewhere over there, yeah. But we are getting a little bit more of a reaction now, so I think it's because of this hourly candle close right now. It's making that bit of a trident, where you have a short wick, longer wick, and then a short wick. I have a feeling this is just going to come down, eat my stop loss, and then kind of like dwindle around for a few hours. That's what I feel.
I would have my stop a bit further,
Much lower.
But, yeah.
Yeah, obviously.
I would have had it on the higher low, if I'm honest. Me personally.
This one.
Yeah, but then that would have made the R ratio way too crap. So I that wouldn't have been the trade that I would have taken.
I'd have it like halfway in between.
I mean, it is what it is. I've taken my trade.
What a
So
political answer.
yeah, I mean, midway between the two.
Yeah, I would have had it somewhere in nowhere, but somewhere in the middle.
Somewhere,
yeah.
nowhere, in the middle, potentially, maybe. We'll see.
Tell me about
Henry will jump into that stuff when Dirk turns up as well. With that said, good morning, everyone. Give me like 2 minutes just to jump up before we sort of roll over, and then
cool.
I will return in a second. Get ready for FOMC day. Big day today, that's for sure.
It is a big day.
Indeed.
FOMC rate decision, and
all at once as well. All at once. So it's going to be. Yeah, it's. I feel like it's going to be a big one. Last month wasn't so much. I was a bit disappointed, but we'll see. We'll see what happens this month. Also, guys, I'm just seeing there's 139 of you right now. So absolutely smashed that like button.
139 likes.
139 likes, apparently. I'm joking. No, there's not quite. There should be, but there's not. So why isn't there 139 likes? Guys, if you haven't already, smash that like button. Let's see if we can get
Smash it.
Do you reckon we can get to 200 likes by the end of the day? I reckon so. 200 likes by the end of the day, I reckon it's possible. 136 of you right now watching on YouTube. So, in that theory, there should be 136 likes. Guys, absolutely smash that like button. Guys, if you are new to the channel as well, if you are new to the 5ers here, make sure that you subscribe to the channel. Click that bell notification if you want to see or get notified when we are live. I've clicked the bell notification. I don't know why, because I'm the one that goes live.
But I'm the one that is on stream right now.
Yeah, do you know what's even worse as well? It's not like I come in halfway through. I open the stream. Like me and you are the first ones live, and I've still clicked that bell notification. It's like, why have I done that? It's like, just in case I need reminding when we're live. Just lying in bed one day and get a notification on YouTube. The 5ers have gone live. It's like, and you're like, oh no.
Like on your phone. It's like, yeah, I know. I know it's live.
Hello? God damn it, YouTube.
But we do appreciate every like and every subscribe. It really does help the channel. So we do appreciate everybody being in and assisting us by growing the channel. Obviously, we want to be the biggest, greatest of all time, the GOAT of prop firm streams. So I almost said GOAT account.
We want not just prop firm streams. We just want to be the absolute GOAT of all trading streams.
Yeah, I want that.
Like screw these creators as well. Screw the normal retail creators that do all sorts of weird stuff on their stream. Let's show them who is boss. Let's show them who are the kings of trading, not just in the prop space, but in the trading space.
I like that they are there.
Go on. I feel like there's something to that.
Because the more they screw up, the more people come to us. So
that's true.
You need to have that little bit of friendly competition.
You do. You can't own the monopoly and not have something to compete with.
Yeah, I mean, then what's the point?
It's boring, isn't
it? What time in the UK do we start? We start 1 hour after the London Open. Mm-hmm. However, we are going to be adjusting that in the very, very near future. We will be starting at London Open, but we will let you know when that happens. It's going to be potentially in the next 2 weeks or so. We're going to open up 1 hour earlier. Still the same length stream, still going to be a 6 hour long stream. We're just going to have a 1 hour earlier start and then a potential half an hour break in between with a little bit of some fun stuff happening in that little break. But yes, we will be starting the stream about 1 hour to half an hour earlier within the next, let's say, 2 weeks or so. But generally, we start the stream at 9 GMT, GMT plus 1, so 8 GMT.
Yes, exactly. So make sure that, guys, you stick around for that. Because, like I said, we're only improving. And you know what? How we improve is by you guys sticking around, you guys smashing that like button, showing that you like what we're doing. But also, like, when you guys have recommendations, if you guys have anything that you'd like to see, if you guys want to see, more competitions, we do like 1v1s bi-weekly now. We do giveaways every now and then. We're up at 110,000 subscribers, which is absolutely insane. So, if you guys want to see stuff, then drop it in chat. Let us know what you want to see. We can't improve unless you give us something to improve on.
I mean, stream-wise, I feel like we have a really good stream. So I would like to just take the stream and just to the next level. I just want to go upwards and onwards, that kind of like thing. Yeah, because obviously the bigger we become, the more we can do as well, because there's more incentive. Because people actually like what we're doing. And if you like what we're doing and you tell us we like what you're doing, we're like, well, we'll do more of that. you know.
100%. Not only that, you know, with you know, Master Richard Butler at the helm of the ship, you know, we can steer this into any direction. Not only that, guys, you know, there's a couple of projects that come through in the background, you know, that's super exciting. You know, I've got some massive plans that I'm going to be putting forward to this gentleman down here, and if we can do some form of, you know, project collaboration within the 5ers to make it like some super projects going on, then like I said, guys, you know, give us, I reckon, 12 months. You know, this time next year we are going to be unrecognizable. You know, it's going to the improvements that are coming through, that are just coming through our ideas alone without you guys as well, is insane. So if you guys can back it, if you guys can get on board as well, you know, show us the community, show us the support, then guys, you know, we can vouch putting the effort behind it.
Exactly like this. If you guys are starting the London session, I'd like you guys to cover the FTSE. We would very much like to do that. We'll do that. Yeah. We do have a very, very how can I put this? Not menacing, maniacal, maddening. We have Dirk in the background, looking all menacing.
Good morning.
Morning.
Still gotta work on my diabolical laugh, though.
Yes, but that was very much appreciated.
You're welcome.
Thank you so very much.
Thank you very much, Jill, for that. Yeah, you guys are awesome.
Dirk,
like the evil laugh.
Where are we streaming from today? You've become quite the traveling trader right now.
I think in Polish it's pronounced something like Wrocław.
Wrocław.
Yeah. I meant actually for the last 2 days to look up what the name is in English. Let me quickly Google that.
Do you have a German version of it?
Yeah, it's called Breslau.
Breslau. Okay.
Yeah.
Breslau.
And in English, it's Wrocław. Wroclaw.
So that being a Polish, you're in Poland right now, correct?
Yes. Yeah, correct.
So being a Polish word, I'm assuming it's probably not pronounced as a W, is it?
No, it's gonna be a V in it.
Yeah, it's like a V.
Oh no.
It depends.
Just like
here we have it. Wrocław. Okay. Yeah.
Because
it's going to
one of my best friends is Polish, so he's told me before that it's not English pronunciation when you read it, and I was like, okay, so it's not a W. He's like, no.
I tried to learn some sentences in Polish, and this morning I finally got the courage to try them out when I went into Zapka to buy some stuff, and I just earned like weird eyes looking at me like, what is this crazy guy saying there?
You know when
I'll just stick to Jindop, right?
like Will might know this one, and now obviously Dirk, you know this as well. But like the idea of going into a country and quite not knowing the language, and then you try and communicate with somebody, and they're like, "I speak English, don't worry."
That's happened so many times.
You screwed up the enunciation or the pronunciation of that word so badly that they're like, "Let's stick to English. All right, let's just."
Although I have to say, English is not that common here in Poland. I mean, expectedly around the elder generation for sure, but also not with the younger generation. It's like it was quite rare to see somebody outside hospitality really being able to communicate at a sufficient level of English without using your hands and feet.
Yeah, like a proficient level of just regular verbalization of a word. Yeah,
that's really
not
cool.
needing to go like hand, heart,
food.
I love this. Please,
like
more. Give me
this one. 2.
Yeah, 2.
Dirk, so when you try to pronounce certain things in Polish, like if you've mastered a certain sentence, do they just start speaking like fluent Polish at you?
Well, when I come into a shop and say "Dzień dobry," they answer me in Polish. So that's the only thing I can say. Hello, good day. You know.
Because I remember ordering food in when I was in Hong Kong. And I had literally just a couple of words, and I went up and I was like, "Lego, guy," which was like, "That one, please." And that was like pretty much all. And they were like, would you like that? I was like, oh, hiya, I'm going here. So like, yes, thank you. And then all of a sudden, just out of nowhere, they just started like reeling this, just absolute fluent Cantonese at me. I was like, oh, I've really cocked up here.
But I think you have that in every language, no? My wife.
Yeah, and I was like, I should have just stuck to English.
When you and your friends talk in German, it's like a machine gun firing so fast. And I think that's true for every language.
Yeah, fair, true that.
Even Australian.
Yeah. So guys, have you been trading anything, or are you already in Fed mode?
No, I'm not trading anything today. Like
I'm currently in this.
Yeah.
What is that? Nice. Oh, you are in the NASDAQ again.
Yes.
And
I jumped in as well.
Is about to be hit.
Say again.
Your TP1 is about to be hit.
Hopefully, that would be nice. It would be nice. Yes, it would be nice. I'm currently in this, but gentlemen, I'm going to have to love and leave you. I've got a little bit of admin work in the background that I desperately need to get to. So we'll see you guys in about 2 hours' time. Everybody in chat, thank you very much for being here with us so far. Please drop us a like and subscribe if you haven't already. And then Mr. Dirk and Mr. LJ down there are probably going to go through all things FOMC and rate cuts or rate gains. Probably a rate cut. Probably nothing. Yeah. So, guys, have fun and ask them all of the questions that you can. I am going to hop out.
Cheers. Awesome stuff. Nice one. See you later.
See you in 2 hours.
I was gonna look at entering into the NAS as well. I thought to myself, if we close with a nice bullish candle here instead of just wicking above, then I'll consider, entering in because we've got a nice little consolidation zone now. Nice entry above, a nice break and close above would be nice, but we're still at the previous high. We're wicking a little bit, so I don't quite think it's ready for me to enter just yet. It may end up being an off-stream entry if I get what I want to see on the NAS. So, guys, I'm going to hop out as well. I'll see if I enter. If I do enter, happy days. It won't be on my stream account. I thought I could try and enter in now, but it's not going to allow me. So, guys, I shall see you in about 2 hours' time. But yeah, like I said, make sure you smash that like button, subscribe to the channel if you are new here, and look forward to the conversation on the fundamental side. Anyway, thank you very much, guys. Peace.
Take care, Will. See you in 2 hours. LJ, how are you? You're muted.
I was. My bad. Going all right, going well. Been busy today, but good. Just cracking on with things, getting stuff done. So yeah, haven't looked at the charts too much.
Right.
I did early this morning during Asia for just a little bit when we had that bit of a dump on the NASDAQ, then picked right back up. Caught some of that, went to bed, had a nap, got up early afternoon, and then got on with things, and now back to the charts. So yeah, ready for Fed Day. Going to be exciting. I think we will get some fireworks here. And then on top of that, obviously, we've got earnings and such coming through down the line also. So ready for a spicy day. I don't know. What do you think? Are you going to trade today or not so much? Because obviously you're on holiday and then it's Fed Day or... Yeah.
I try to keep it to a minimum, not only because of holiday reasons, but I was busy getting my new quant strategy online, which finally started trading yesterday, but I didn't start trading because there was still a little error in the bridge to the MT5. So I missed out on 3 trades yesterday. Would have been a 1 hour day, but so be it. So it finally started this morning with an Aussie dollar long, which I lost. But that is to be expected. Whenever I start a new strategy, the first trades are always losers. So I've gotten used to that over the years. We can talk a little bit about this if you guys out there are interested in this, like how the whole process has been in creating this strategy, because it has been a process of 7 months or almost 8 months now. And I took everything down, dumped it into Claude and say, hey, can you, from this process I went through, maybe generate a little presentation that people can see, how long it sometimes can take until you find something where you think, okay, this is ready now. This is ready to live trade. If it's going to be successful live is on a whole different sheet, of course, still. But I'm pretty confident in this one. It looks very good from all angles, except probably the ones I haven't looked at yet. And so
always the way.
I was very busy with that in the evenings, getting this done. I did open this morning, not too long ago, 9:45 my time, a little short in gold, just because we are on the gold future on the 50 minutes still a bit in a downwards trajectory. And we've seen some nice order settlements up here. So I went short there. Take profit is down at 4,025, looking good right now. So let's see how this one develops. But probably this is maybe going to be the last day trading positions I do today, due to the fact that I'm going to be outside later. Plus, of course, also due to Fed, the interest rate. The probably not interest rate cuts we're going to see, pretty confident about. I think has risen to like 70% on CME also, that we are going to stay flat. But the other thing always is you sometimes see kind of weird moves, plus the interesting moves are going to come later when Kevin Walsh is going to speak at 8:30 my time. This is going to be very interesting. I wonder how he is going to, or if at all, he's going to comment on the labor market, for example. There are some interesting things going on, like, for example, you now have, of course, less foreigners in the labor market. So you and I, we've always talked about, you have this baseline of 100,000 newly generated job per month that kind of keeps things where they are right now. And I read some interesting comments on this from some analysts saying like this number actually is more like 32 to 36,000 now, because you don't have all of this immigration going on anymore. And I wonder if this is a question that might pop up from one of the journalists there, and what Kevin Walsh potentially would answer to this. It's one question actually I would like to ask him. Then the other thing also, we've talked about Iran and the fact that energy prices are going to come way down again once that conflict finally settles. That this is kind of like the main inflation driver. We've seen PCE coming down, being negative. I think it was minus 0.4% the last reading a couple of weeks ago. Other angle is, of course, chip prices, DRAM prices. There are two angles to this. First of all, that China has started its own production of chips with a still oldish technology that they are using for wafer production, but they are going to catch up very quickly, I'm sure. So that's a thing for AVM, I think they are called, that have a monopole on this right now. The other thing is that we might see, in my opinion at least, like these super high price hikes for DRAM, for chips and so on, being reflected maybe later this year in the CPI readings. So I've seen something like that this could be an effect of almost 0.66% on a yearly basis on the producer side. Not talking about the consumer inflation, I'm talking about the producer inflation. Yeah, so a lot of interesting things going on, those being the main two. We've seen just because China is starting to produce their own stuff now, what happened to some of the stocks like SanDisk, Myron, who have been like 40% down from the high now. So very interesting. For me, it's a good time to buy right now. So we finally reached what I've been talking about for the past week. So I've been showing over and over this graph and said, once we hit these bull market support bands on the NASDAQ, which was the case yesterday, I'm going to start buying again, which I did. So yesterday was for me the starting point to get back to rotate into US tech stocks again.
Yeah, so seen a bunch of your guys' comments around FOMC. Yes, we're going to smash through that. Don't worry, we've got a whole bunch of stuff to talk about on the FOMC, cover every single direction, what the market is saying, what positioning is like, what commentary across from institutions and stuff is coming through, what they're saying on Bloomberg, and then also our own opinions and ideas, and I've got some charts and that kind of thing to roll in there for you guys. We'll try smash through just a couple of the other questions I saw before. Guys, I have a serious question. When is the official gold open? If it's something that is confusing me, I use the NYSE open as the gold open, but I guess it's not the correct one. Oh, I can see we already had answers in chat. It depends what gold market, like, are you looking for like the London Metals Exchange? Are you looking for like just the futures contracts? Like, what specifically are you looking at? Like, when does the heaviest amount of volume come in, or when does certain markets open, and what kind of contract? Because that's going to also depend. Apart from that, I think I saw something else a bit higher. More Fed questions, definitely. We'll get through to that, like I was saying. I did see... where was it? I did see this from Shane as well. I once was chatting with an Indian who said even our crows in Australia have an Aussie accent. So I would believe it. I would believe it. They do have a very specific sound. And I got to say, I've never heard a crow sound the same way in any like foreign country, like any kind of videos or something else I've seen. That is a very interesting observation, actually. We have a lot of bird species down here, of course. I'm pretty sure we have the widest bird species on the planet in Australia, so maybe something to do with that. There was another question from Henry Dirk, just as you were talking about your algo stuff before. Do you use Pine Connector as the bridge?
I do not. I used to use it, and it works well, in my opinion, so there's nothing wrong with it, but I've developed my own solutions right now because it's, for what I'm doing most of the time, is Pine Connector is, first of all, too slow, and second of all, I do not work with TradingView signals, TradingView alerts as triggers for trades anymore. So everything you always see here in the background being done on TradingView is really just for visualization. Like I have everything running on servers in which have like Python script in the background that actually do the execution layer. Because I think I said this before, I don't want to rely so much on third-party solutions anymore, because you never know, are they going to hike prices like crazy? Are they even going to be around still like a year or 3 years in the future? But if you depend on TradingView alerts to translate them into trades, and like latency, for example, and slippage is not so much an issue for you, then Pine Connector works just fine.
There you go. Hopefully that helps, Henry. Okay, so first, what do we want to crack into first? Because do we want to tackle the Fed first? Do you want to talk about what you're looking at right now and some of the algo stuff you're talking about? And then we roll into the Fed and say that Aussie dollar. You've got that stuff with inflation, like all of this wraps together. So where do we want to begin? Where do you want to begin?
I think we should begin with the obvious today, which we also have most questions already about, that we should talk about FOMC and interest rate decision, and the fact that we've been talking before on a number of streams also that our opinion deviates from the public's opinion by quite a margin at the moment, and what that could mean for the rest of the year also. Because the decision today by itself is not going to be that exciting. I would be very surprised to see a rate hike, I must say. So I'm with the 70% of the market participants expecting the rates to stay flat today. But from September on, that might change by a lot. So I haven't looked through the questions. Actually, I just saw FOMC popping up a couple of times.
Yeah, so it's pretty much FOMC, what's your opinions, and then some of them with tangentially related assets and their direction, I guess. So, okay, so certainly, yeah, with the Fed. Now, first of all, with what you were saying before, the questions around the labor market, or actually, I'll start this way. Okay, so today with the decision, I expect the most impactful thing to actually be the statement this time. If there's any changes, that will probably have the most impact. Less so than the question time after the actual Fed conference sort of meeting. I think Kevin Walsh will stay pretty close to his chest unless he has something extra that he wants to reveal or potentially play his own personal cards outside of the Fed committee and start to direct something one way or the other. So we definitely have those. There's definitely a few things we could be looking for on both sides, but right now I would expect the actual statement to be the most impactful. So from last Fed meeting, I definitely highlighted that this next Fed meeting, the second Kevin Warsh Fed meeting, is going to be the most impactful. It's the most important, the highest driver for the next 5-6 months, basically into the end of the year. This is where we'll hopefully get either more information or at least cues to the general direction. It might be more discreet, a bit more subtle, or he decides to go a much more overt direction. But we suddenly have the Fed participants pretty much split, right? Kind of 50-50. So Kevin Warsh himself is right in the middle and basically is the full tilting mechanism to one side or the other. As we've spoken about for a while, and Dirk said before, our opinions are definitely that they need to eventually go towards cuts, right? Inflation hasn't really been rearing its head, despite everyone talking about this endlessly. We've had the Middle East conflict and prices across the board running right up. Oil, natural gas, helium for a little bit, fertilizers, all this kind of stuff. It's then since dropped off. Recently, oil picked up a little bit after we had the resolution to the Middle East situation, then it's kicked on. But you can see right now, we've dropped right back. So we had the pickup higher. This is Brent. Came up through here, 95. We've dropped right back into the 80s once again. Now we're sitting in kind of middle park at about 89. When we started having this run up, everyone starts screaming that oil is going back above 100. And this is West Texas up here to 92. It's just not going to happen. I can't see it happening. There's no rationale. We're now only missing a couple barrels, a couple million barrels a day with the Strait of Hormuz situation. And even if we get the Bab al-Mandeb corridor completely shut off, that's only about another 4 million. So at the peak of the war, we were minus about 20, 22. Currently, we're minus about 4 from the Strait. And so if you add another 4 with the Bab al-Mandeb and problems around Yemen and the Houthis, we're now back to 8. So we were dealing with that for quite some time, and that was already where oil came off. So I can't see that as a problem. But you keep getting these talking points and headline pieces like we just had from the ECB talking further about if higher oil prices persist, inflation risks rise. Now, we've already had oil very high. We've had this massive driver from the chip sector and everything else going on with the AI push, right? That has increased prices of DRAM. We're now seeing CPUs go up, graphics cards go up, like everything has gone up. We've seen all of that input. And we've also seen, rates, even not from rates have stayed higher from central banks, but also the bond market itself on the short end and the long end of the yield curve running higher. So despite that, the economy is kicked on. People are saying that the fact that it's kicking on, despite all these challenges, means it's overheated. I don't think that's the case, just there's a lot of investment. It's just a good time. Not everywhere is working amazing. It's mainly America and that chip sector driving everything. But if we then see these costs in particular regarding, if we're talking about inflation, these costs do start to come off, just like Dirk was saying with the Chinese chips coming on board, and we see the whole commodity push come back off. We haven't seen inflation move. The actual inflation prints have been very tame. They've stayed stable. So you've got a massive potential for this to come off even further, which tells you that rates should then come down. The other portion with that, for the fact that the short and the long end of the yield curve have risen so much, that's done a lot of the work for central banks on its own. So they don't have to move so much because the market has already priced higher rates. And you've got this split portion where the bond market is somehow, normally the bond market is pretty good. They're pretty spot on most of the time. But they seem to be projecting some kind of future inflation shock. That's what pundits are reading from it. I don't think it's to do with that at all. there's debt refinancing cliffs after COVID and such that have then skewed some of the refi calculations in there, which has then driven up bond yields. Less so some kind of imputed future risk to things like inflation or a very, very hot economy overall. So you can see there's a lot of moving parts in there. It's very back and forth. But net, if you just watch the inflation numbers, they have stayed subdued despite we've had every kind of inducement which should have driven them higher. And at some point, central banks have to come back off that factor and start to reduce rates. And we also know that, of course, Trump wants rates lower. The US administration themselves, the government, has to roll over a bunch of debt, and they're going to want to do that at a much lower rate. So I think from here, like we've talked about this, we've got definitely a split between the forward inflation swaps, which are to the floor. We've got the Fed rhetoric right up to the ceiling. And this is another nice comparison which goes back towards COVID, when we did have those peak inflation prices, which inflation numbers, which were significantly higher on a month-on-month, year-on-year basis than they are now. So I can only put everything together as that this needs to roll off. And we have seen from yesterday with the Fed Watch tool, we had 63% chance of sticking, 36% chance of a hike, and then now that's dropped to 70 and 29. So just between yesterday and today, we've dropped a fair few points, and we seem to be starting to move in that direction of no hike. But it is quite interesting that we do still have a almost 30% chance of a hike. So when you get that, that means there is definitely going to be a move, even if it's a no hike, which is on net the base expectation, because that needs to be washed out. The other thing that I did see that was very interesting, I saw Citadel basically calling for a shock rate hike from the Fed. And this goes into the next thing where people are talking about that Kevin Warsh needs to hike rates to save his credibility and the Fed's credibility, which I think is ridiculous at this point. I think that would completely wipe it out. Now, it's also Citadel doing this, right? But you have to listen to some degree, because they pass about 25% of all trades on the stock market and about 40% of all retail. And I think it's like 28% of all options trading or something in the US. So very, very massive. But this was their head of macro calling for a shock rate hike. Now, I don't know if this is some backwards play for positioning, and then they're gonna, front run everyone, right? And they're actually flipping the book.
Of a sheer fact that the volume is going to spike then tonight, and they are going to be on the receiving end when it comes to commission, trading commission, or processing commission, however you want to call it. In addition to that, I'm very much with you on what you said the other day about Kevin Warsh, that he's going to use the time until the next Fed meeting in September to kind of get everybody on the board onto his side, because we have, of course, some very conservative, classical central banking dudes still there, that are still making decisions based on something that is like 40 or 50 years old. And the one thing, and I think Warsh has talked at some meeting about this also, is what I said on Monday, is that we are looking at supply-driven inflation at the moment. It's not a demand-driven inflation, and the Fed, a central bank, can only really effectively fight inflation that is demand-driven. So because they cannot do anything about producer prices overseas, and Kevin Warsh knows that, and probably everybody on the board of the Fed knows that as well. But from knowing to actually translating this into action or no action, actually, that takes some time because, there's, of course, a lot of pressure on these people as well. I can imagine a lot of them are also afraid of, if we don't react now, and when inflation really comes, then people will say, see, you should have hiked the rates. Why didn't you do that, So they are now in a position that everybody who normally works in a company or like us as traders is constantly being, we have to decide now without knowing the whole picture. If we are good in guessing or researching what is going on in the background, we might be able to guess the picture or do a near guess. But somebody working at a Fed, which basically has a life mandate, if you're on the board, then is not under so much pressure. You're not being punished really for mistakes very much, except when you're, of course, the head of a Fed. So before Jerome Powell, now Kevin Walsh. And I think Kevin Walsh is quite good in handling the situation and balancing the pressure he gets from the administration, especially from Trump, of lowering rate hikes to kind of brush this off and accept it this is what every chairman of a Fed under every president has to go through, especially under Trump. And, what is he going to do about it? He cannot just fire me now again. And then like reforming how the Fed works in a more proactive way, that they are not just looking at, what was the core CPI right now, and we base our decision on this. Of course, CPI is also something we probably could discuss 2 hours about. I have a lot of, I'm not going to say controversial opinion of how that thing is calculated, but how it's detached from reality, in my opinion. And that's another thing that I kind of, I don't know if I feel worried about it or if it's something good, because the whole thing ties into AI, chip production, of course. How could it not be, nowadays as well? And I just read that in large part, all the financing we are seeing now that is flowing into AI, flowing especially into data centers, which is going to be 800 billion by 2028, is not financed anymore over the bond markets. It's financed by private credit debt. So that's completely outside of what we see going on the treasury or bond markets. I think that's very interesting. One could, of course, say, well, that makes it very dangerous because it's kind of a shadow market. Yeah, and we've seen what can happen to this shadow market just this year, when everybody wants to get out at the same time. But on the other hand, we have private players, institutionals committing 800 billion. That is, they are going to force this to become profitable, enormously profitable eventually. I think the discussion rather is how fast is it going to generate profit for everybody involved. And if the profit is just 90% of what is expected, okay, then we will see some sort of correction. But I always have to remember what, like, one time in my career, a CMO, so the head of marketing, told me, he said, like, Dirk, when you run a marketing campaign and you have limitless money, you can just throw so much money at it and force it to become successful. And I think I think that's a good metaphor to what is happening in AI right now. And this is why, and I want to tie this into what I said earlier in the beginning of the stream, why I think that the portion of software, hardware that flows into the calculation of the CPI is going to become more important over time. And I think the effects of this we might see in the end of 2026 in the first readings, but it's not going to offset completely the reduction we see once oil falls to something like $50 or $30, which I am convinced it eventually will.
I agree, and on that as well, like Kevin Walsh himself has openly said a number of times that he believes AI to be deflationary.
Yeah,
right. It's tech once again,
and we've seen that. Sorry to interrupt you. We've seen that not now anymore, but over the past 20 years with personal computers, TVs. I mean,
TVs are the
like
big
a
one.
giant, like the TV. I don't know if I think you cannot see it in the background here. It's like in this Airbnb, they have a giant LED TV, which like 10 years ago probably cost like €5,000. Now you can get them for 900 or something like this. And eventually, once production is up to demand again, supply is up to demand again, we are going to see the same there.
Yeah, same with smartphones, right? And yeah, you can argue that phones are now more expensive than they were back then, but the thing is, the amount of utility you gain for that product, you essentially the deflation or disinflation, whatever you want to call it, pretty much goes down to like 1% of the original price, right? So it's also not just prices coming down, but actually the utility you get per dollar, basically, that runs up, and that's what we're talking about, right? So, so I definitely think that's going to go through. I see a lot in the market as well with people. Same thing with the inflation situation. I've seen people talking about AI being inflationary because of costs of data and like energy and all this stuff. I'm like, you realize that's gonna force and forge massive innovation, and all of that has to come to zero. Like, it has to for this to work. And like you said, they're gonna make it work. They're gonna force it. They're just gonna throw everything at the wall until this is done. And we're seeing that with energy. Like, we need huge amounts of energy, which means you have to go to some kind of renewable type source to actually have this function. And then obviously that has permeating effects for the actual society. Everyone's energy bills come right off. Cost of other things like general manufacturing that we still do have going on comes right down. Cafes, like all the small business stuff, that comes right down. Offsets rent and all this sort of thing. It's massively disinflationary. So I still find it very odd that there's this other camp, I don't know, wanting to go the opposite way. I don't know if it's this split, maybe older people or just people that just want to be contrarian for the sake of it or something. It's very peculiar. But it's such a large number of people that it's weird. Normally you always get like a few. It's quite significant, which at the same time is very good, because that means it presents a very good opportunity in the market to either invest or trade to capture the other side, right? When you have the more people doing that and then they're wrong, you get a bigger bang for your buck on the other way. So I'm definitely still aligned with that. In summary, what we highlighted, 63% chance of staying put yesterday, 36% chance of a hike. That's now dropped down to 29 and 70. So 30-70, we'll call it. You can see we're already moving in that direction. That's still quite a lot to price out if they don't hike. There are portions around that with the speech and such that will layer into the December meeting, which has kind of been the primary one that we've been focused on the whole way through. Yep. And how many rate hikes or potential cuts or staying flat by December actually come through. That's been the predominant driver since the war started as well. And hence I've shown you guys the charts with gold, how that's perfectly tracking. Gold is basically moving on the chance of a rate hike in December at the end of the year or not, right? And then there's the question of any in between or not. So definitely on the side of no rate hike. Potentially, we got to see how the committee actually splits, whether Kevin Walsh has managed to lean them more dovish. But I think if he's going to lean them one way or the other, it's going to be slightly more dovish. And if they stay sort of pat on where they were last period, then we've got the same kind of outcome, and then it'll come down to Kevin Walsh speaking, which, like we were saying before, this is the next important one. And then it's probably going to be a layup for the dunk in September, right? So hence getting that layup, though, the market starts to forward price that. And I can only see that as tilting to the dovish side. We did also have Trump yapping on yesterday and the day before, once again, about wanting rate cuts. So he is starting to vocalize himself, Trump once again, about rates.
Imagine them hiking the rates today. Would be really fun to see what Trump has to comment on that on Truth Social.
Off to the gulag. With that one.
Really,
yeah. No. So with that, I guess we'll smash into what this means for some of the charts and stuff in a sec. The only other portion I was going to give an example of, I don't have it up here, but similar deal how I've been harping on about the Aussie, right? I know, Henry, you asked about this before, about the Aussie and the inflation data that we had. So if I jump over to the Aussie, this is another perfect example. We saw this massive drop off today. We had the inflation data come out, and surprise, surprise, it came in lower, right? As I've again been harping on, I don't know why the central bank is hiking rates. It's ridiculous. Inflation is just going to come lower, lower, lower every single time, and it has done each repeat print. So on top of that, we've also had, the changes with the budget and taxation, which equates to roughly 2 rate hikes itself. So I can't see any kind of move for the RBA to actually press higher. That would be absolutely insane, especially they've probably already gone too far. So Henry, on this, basically going forward, I would see the Aussie start to take quite a dip. I think we could come back down into the low sort of 68s on the Aussie basis itself. Now, the counter catalyst, which we'll roll into next to, is what we have today and the direction with the Fed and the US administration and Trump and their goals and that kind of thing, which should be seeing the dollar come right off. So thus, I would see the Aussie sort of stay a bit static, run higher, but then sort of back and forth in a bit of a choppy range around this like 68.50 to 71.50, 72 maybe. And it's probably going to sit around here for quite some time overall. So play it sort of end to end. So hence, if we get the no hike, stay flat, I don't expect them to drop rates at all, but it will be just a stay on hold. And then it's going to matter what's in the statement and the breakdown of participants if Kevin Walsh has got anyone to shift. Now, either way, we probably will have some volatility within it when things come through, but then we'll find a direction, which I would assume will be lower for the dollar. And things like the NASDAQ, just like you were saying, Dirk, we've got quite a nice buying point here on the daily if we go out longer term. This was your... Sorry, let's hide all this so we can see it. Your bull support bands, and this is right by the 100-day moving average. So we came down through to there, ran through it, retraced last night. That was exactly when the S&P also created a double bottom, and then ran higher, and we managed to close basically on the 100-day moving average on the NASDAQ. Now, the NASDAQ has taken an extra hit because the Kospi keeps getting whacked. We had another 10% drop the other day. This is the amount of margin debt for retail traders, which is hence why we're seeing, the Kospi itself is a much smaller market in terms of overall volume and participants, and they're all very highly leveraged. So when we see this, it whips around quite a bit.
What was that number again when it came to margin calls in Korea? Like 1 in 10 adults? 8 adults?
1 in 20.
1 in 20
adults. Yeah, something like that. It was,
imagine that. My God, that is so crazy.
It was like 1.2 million got margin called. I think 350K got 100% liquidated. So the others got margin call, but only partially liquidated. But yeah, so this is an example chart of that. So you can see when we've had these massive calls, that's when we've seen these big volatility in the NASDAQ, because it flows over into the chip stocks, the AI sector, and all the rest. This was from the previous cool down. This doesn't include this week's 10% drop. So that's basically why you're seeing the difference in performance from the NASDAQ and, say, the S&P, which has held up much nicer. You can see this is still quite strong. Now, on that as well, this is another cue. Throughout this week, day before yesterday, we saw the average, I think it was just over 50% of all stocks on the S&P 500 actually reach new all-time highs.
Yeah.
Right? So you don't tend to see that when there's some kind of expectation or something of a rate hike coming through or some kind of further tightening of financial conditions. The indexes are being dominated by the tech players. So that's why we see these drop-offs. But if you look at a broad market measurement, you see the average of players hitting new all-time highs overall. So those things don't tend to line up. And also certain people wanting to be doom and gloom and calling for the market to fall out of bed, the NASDAQ to fall out of bed, the war to continue, almost like they just want to be right on these shorts. That doesn't tend to happen. You don't get these kind of crashes when the average stock across the board, broad market, is hitting new all-time highs at all. So
look at Apple, for example.
Indication.
They hit.
They went over 5 trillion.
For a brief second yesterday, they hit 5 trillion in market cap, which formula before that only Nvidia had reached.
Yeah. So they've taken back the crown.
Yeah.
Now I think they got like a touch above Nvidia's peak market cap. Yeah.
Yeah, that was the 5 trillion. That was the highest before, which was achieved by Nvidia. Yesterday, Apple touched it, closed a little bit lower again, but I think today they're going to trade above it. 5 trillion.
Fair play for Tim Cook, going out on top. You know,
really, yeah.
Gotta be happy with that. To be fair,
settle for generations ahead.
Yeah, exactly. So yeah, if we then go back to. Like we were saying, the dollar, I think, comes off. Things like gold, we've got a potential to absolutely rip from here. Let's go to the daily quickly. I'll get rid of... actually, we can keep it there. I think we could pretty easily hit 4,200, depending on... Especially if we get the full dovish tilt, we could punch right through that, with how much is still being priced in for a potential rate hike and just how opposite a large portion of the market is to our call. If it's just on base and it is more of that layup and Kevin Walsh does keep his cards close to his chest for one more Fed meeting, then we're probably looking at these high points through here, where we've definitely got this rounding bottom. First port of call, 41.26. That's not very far in terms of gold, especially when we have these volatile days. That's only like 100 points higher. 41.30 to 40, basically where we got this trend line, and then up towards this 50 moving average on the daily, which is right by those tops. I think that's an easy target, and I think we'd push through beyond there to about 4,300 towards the end of the week, if that happens.
Let's hope so. I'm still in the long position from last week.
Yeah. Okay. Sorry, Dirk. I was yapping for a while.
You are yapping with reason, so continue yapping.
I mean, hopefully it was coherent enough.
It was. No worries about it. And I mean, in a nutshell, really, it's like. Funny enough, both of our game plan at the moment, where we align very much, whether that is a good thing or not, that especially the discrepancy between what the Fed and market is expecting in terms of inflation and what markets are trying to price in forward-looking with the swaps, that might be, if it works out the way I think it will work out, might be the trade of a year, in my opinion, because that means, we have very good prices now, with very good levels to whether you want to invest long-term, in a currency or, buy the stock directly or buy some ETFs, buy some physical gold or electronic gold, don't like buy long-term, of course, CFD gold, because you're going to be eaten alive over weeks when it comes to swaps. But yeah, that's the story. And funny enough, it's, in my opinion, for the foreseeable future, are going to depend on what Kevin Walsh is going to say tonight. So for sure, I'm going to be sitting there. For you, probably going to be early morning already, or you're going to have breakfast then, and going to listen to every word. I'm very sure we're going to see some nice volatility. Whether you want to trade that, I don't recommend that. Also depends what account you're trading with the 5ers. I don't know how the rule is, honestly speaking, during a speech, if this counts like a news event, like for half hour and you're not allowed to trade, or if it's just for economic events. like the actual release of the interest rate number tonight would be interesting to require. Do you know that, LJ?
Yeah, I'll check. I think it's the release, so the statement when it comes out, and then I think it's like a tentative piece for the actual.
But anyway, it's not a recommended trading strategy. You have the background quant companies that are specializing in having news parsers that are in real time analyzing every word that comes out of the mouth of Kevin Walsh, and then they match it with a database and react with trades like basically 10 milliseconds after the word has been said. You cannot compete with this, so don't try to trade that. For us, the more important thing is like either if we see an overshoot in volatility, which we sometimes do, then you can try to play the reversal into the correction, which should be risk on, like LJ was outlaying as well. And I don't think it's going to be a non-event. I think it's going to define, at least for this week, what we're going to see going forward. And we still have quite a lot of news and data coming in anyway this week going forward with tomorrow. I think we get a lot of inflation data from the EU also still kind of important for the forward trajectory of the ECB, of course. And in general, be a little bit careful. In my opinion, on days like this, trying to day trade the market is basically a coin flip. So only when you see really something jumping into your face, like this morning when I tried my little gold short, that was really just something, that jump into my face, not this one here, it's on the future, on this one, that just jump into my face. But the closer we get to the actual Fed decision later, the more unlikely it is for me to trade something, especially if you rely on indicators, because every indicator out there is just a tool measuring price in a different way, or volume for that matter, and that can skew up your indicators for a while. So before and after half hour of the actual interest rate decision and what Kevin Walsh is saying, I would refrain from paying too much attention on what any indicator out there is telling you, especially if you're working with something like RSI. Going to see very quickly, oh my God, the RSI is at 100. This for sure is the turnaround point. I should short the market now. No, can mean the exact opposite. So be a little bit careful. From experience, these events are very often events where retail traders get shaken out of a market, and you do not want to use your evaluation account or, God forbid, funded account, just because of some wacky price movements during news events. That rule for most accounts is there for a reason, that do not trade news events rule.
Precisely. So it's sort of trade within the aftermath, and throughout today, we'll keep highlighting a bunch of like the key target levels, support levels, that kind of thing that you can potentially lean on. But just like Dirk was saying, just because you've got like a RSI, a stochastic, a MACD, any of these kind of indicators that are printing at sort of well overbought or well oversold, when you do get these large shifts, just like Dirk highlighted, that this is really going to set the tone for the next 5 months, 6 months at bare minimum. And then from that bleeds into next year for the next 6 months after that. So this is really between now and, if it's not today, the layup into September to set out the next 12 months, which could be a completely different shift from where we are, especially when we're seeing market participants very split. You're seeing banks, institutions, some calling for rate cuts, inflation's gone, who cares? Kind of like where we're positioned, saying that we've had all these shocks and all these kind of inputs that should have seen it just rip, but we haven't seen that at all. It's actually been printing lower sort of consistently. And that's despite the qualms around calculations, which Kevin Walsh himself has spoken about, that he wants to change because he doesn't see it as effective. And so if you take the inference of how he wants to measure it, we're even lower than that once again. Yet at the same time, you still have other participants roaring for this whole inflation thing, everything's going to fall apart, AI is a bubble, private credit markets, all this kind of stuff, which we're not there yet. We're just not there. If I could see the AI and chip makers and tech stocks like double in price again, so we're not at 5, we're at like closer to 10 or like 9, then maybe I can start calling it a bubble, but we're not ripping onto there just yet. And the idea is that over the next however many years, if they do start getting towards those kind of prices, they will have stepped into their boots a bit more anyway. And it's sort of more justified. They might be then pricey, and we might have to have a correction just as you naturally do through business cycle and other shifts and changes that are probably going to be prompted from that AI push, and when it does actually start having those effects. But a bubble, I can't see it. So
yeah. The only way it could be a bubble is, like I said before, if like the enormous promises of profit that will eventually come from this are like not at all fulfilled. It's like, oh, we do not see any gains in productivity, which cannot be true. I mean, for myself, I'm seeing I'm doing like 5 times more work than I could do before. So if it's true for me as a single trader, single entrepreneur, it must be even more true for larger corporations. We're not yet seeing that to the scale, of course. But yeah, I also still remember like 2 things, actually. So I still remember very well when the first company hit a valuation of $1 trillion. Like the naysayers back then screaming also, oh, cannot be like this, No company can be worth more than the GDP of a moderate-sized country. And we are now, knocking on $5 trillion. Who says 10 years down the road we are talking about 25 or 30 trillion US dollars? The sky is the limit, really, for that. It's just hard to imagine numbers like this. I mean, I get this. $1 trillion is, and $1 billion is already an unfathomable amount of money, and not to say $1 trillion. And so first of all, that the second, what makes this so interesting is, like, to a certain extent, of course, it reminds me very much of a .com bubble. But like I said before, .com bubble, we had a lot of companies that didn't actually produce anything, that just put, oh, we are on the internet, on their logo or on their company information, and then their valuation just went through the rooftop. It's going to be the same but faster like this, but back then we didn't have like something like 800 billion in investments every year, or by 2028 that went into this. So the development back then of the internet was, in hindsight, already quite fast. I mean, how fast did we go from dialing up with a modem? 1998, I can still remember that very well. Or 1994.
Terrible to set up.
I was so proud going from 33.3 to a 56K modem. And, now I'm sitting here in Poland in an Airbnb where I have like a couple of 100 Mbits of connection and a ping of 2 milliseconds. And this is just the beginning, really. We're not talking about data centers in space. But I've never seen, like you also said, such a discrepancy between, this is probably going forward with bumps down the road, of course, with like crashes of 20% or maybe even 50% or something like this, but still the trajectory being massively, probably even exponential going forward. And so the difference between this and what you hear from the average person out there, or also from like the mainstream media, if you want to call it. I don't like that actually saying mainstream media, but mainstream, I mean like what everyday people out there who are not like in the bubble like us here, or like you guys out there are seeing, and they see like, oh, mass layoffs because of AI, oh, this company screwed itself over, lost 300 million because they didn't limit their API usage limits, and stuff like that. You only see the bad things, just because bad news, sell better. And I've yet to see, honestly speaking, also when it comes to investing, a contrarian investor that actually long-term makes money. Contrarian, I mean, like when we are in a phase like right now where there are massive investments that says, like Michael Burry, for example, oh, overvalued, I'm going short.
Yeah, it's once every 15 years or something that they get or even 20 years.
I mean, he's probably ripe now for having another success, because his last one was like almost 20 years ago right now. And
COVID, I guess he had some around COVID. But
yeah,
again, it's one every 15 years.
That's what I mean. Around these times, financial crisis, Fukushima was an event like this.
It's like
COVID for sure.
4 times in your life.
Yeah, you have like this is where reality and expectation, within civilization diverges very much. And I think we're in a time like this, but in a massively positive time. It's either massively positive, and this whole AI thing is going to bring us abundance, or that, of course, could be the flip side of the medal. It's the end of humanity. And since I cannot, it's coming anyways. Nothing we can do about this. So I rather speculate or invest into the direction of, this is going to eventually lead to disinflation or deflation. I like disinflation, by the way, better. Deflation always has like a stagnation sound, which it is not. And we're going to lead to disinflation, meaning that we can afford more. Everybody's going to have a better life, or the general public is going to have a better life. There are always going to be people who are sadly left outside of something like this. Or, I cannot speculate on something like, AI is going to kill us all, which is the far other side of the medal, of course, the other fat tail, so to say, because then there's nothing left. So,
nothing to worry about.
Yeah, if I speculate on this, I'm not going to enjoy the fruits of that.
And even if it was true,
guys,
even if it was true, you might as well, have a good time in between and just forget about it. Like it doesn't, because it's like that question of knowing the day that you're gonna die or something. Like, would you want to know that, or leave it a mystery?
You don't want to know that. And I mean, the same rule that applies to everyday life, in my opinion, applies to investing and trading as well. You can be afraid sometimes, or better to say, you can be cautious sometimes, but you gotta step out of your comfort zone if you want to be successful. You're not going to be successful by just staying and sticking with the stuff where that always worked for me. Maybe you can be successful like this in a corporate setting, like the average middle manager or vice president in large corporations. I think is a good example for staying within your comfort zone, playing the game, and then, of course, being somewhat successful at the price that you never going to escape the treadmill. I rather, but took some time for me to learn this as well, be the one that's not cautious and that gets his fingers being beaten bloodied sometimes. But, if I'm successful with something, I'm going to have a massive payoff of it. Not to say, the personal freedom all of this that brings also.
Yeah, and that's how you learn and you get better. You got to build up that scar tissue and actually, get that graft, that grit, learn those skills, the nuance, that kind of stuff, and then you'll take off. Yeah, it sucks in between, but you always hear people as well say after, they're like, they hated it and it did suck, but they also look back on it with favor. Like, it was also one of the best times in retrospect, because it built them to where they are now. They wouldn't trade it for anything, and you're happy. So
and I have nothing beats that feeling, when you've accomplished something that you were afraid of, and then you tell, that was not as bad as I thought, or it was as bad as I thought, but I pulled through it. I think that's like one of the greatest feelings in the world.
Yeah, definitely. I've always thought like you have to seek out challenges. Like, most people seek to do something to then get comfort. I want to do something to seek a challenge and then try and find the next challenge and the next, and because then it makes the other things people consider challenges for you easy, because you've ratcheted up that skill level so high that it's just it's by the by for you.
Then people are going to tell you, you're so talented, it all comes natural.
You're so lucky.
Oh, sorry, I went through the trenches, to get here.
Yeah. I just have to jump up to the men's room, if that's right, Dirk. Sorry. I'll come back.
Sure. All right, guys. Honestly speaking, sorry for that. I haven't looked much through the comments here. I will do that in a second. Just very quickly, for those of you who have just recently joined in the last maybe minutes or 20 minutes, we only trade, or I actually have two trades, a short scalp on the gold future right now, which I opened this morning at around 4,045. My take profit for this is sitting at 4,025. So we are roughly $7 from that away. Still, let's see if we can hit this. Actually, probably trade like this, I should put my stop loss now to break even on this trade. I'm just going to let it roll like this because I need to accumulate more trades and more statistics, and I don't want to skew the maths. So once with this trading method, I have something like 300 trades under the belt, then I can analyze better, when would be a good time in hindsight, to take my stop loss and put it to break even. Should I change something about my take profit targets, maybe use a layered tier and take profit targets like LJ and like Richard are doing that, and so on and so forth. On the other usual suspects that we usually trade here, being NQ, so the NASDAQ future, ES, the S&P 500 future, or any of the currency pairs. Nothing right now. I still am in this longer term gold trade, which I opened last week Monday, sorry it was. And with LJ Live, I know he's out of this trade, but this is the trade where I exactly want to play what we were talking about here, meaning that if Kevin Walsh somehow says what we think he's going to say, what we laid out earlier, what especially LJ laid out earlier, this should be a risk-on event, and then potentially we should see gold turning around to the upside again. Now, I might be totally wrong on this, of course. Thus, of course, I have a stop loss, and I think the stop loss is in an area just under this order block pocket that makes sense in my opinion. We'll see how that plays out. As always, I'm going to leave you the nice marks like I did on my last dollar-yen trades, where you then can later on see, did I succeed with these trades or didn't I succeed? Dollar-yen at the moment for this quarter at least is pretty much break even. Still up a little bit on this because my risk to reward ratio was, of course, a positive one, or one in my favor. This is why I'm not sitting at losses right now, but at a little profit still. Going to do the same for the rest. So you always see kind of, where are we, or where am I with my live trading action, at least with the trades that are open shortly before or during the live streaming, how those are going. All right, let me quickly check now in terms of what the... So, your stop losses will meet you soon. That might be the case. Do you swing trade in CFD or futures? It depends. So when we talk about swing trading, so really holding on to positions maybe for a couple of days, I tend to use futures because you have the overnight financing. Not if you swing trade, for example, the NASDAQ on the 5ers, you have a pretty severe swap every night. This is because the business model of the 5ers is more tiered or more aiming at intraday traders, for example. So in that case, if it's an intraday trade, I might take it on the CFD as well. I like to use futures, for example, to price stuff. Thus, this morning I took this gold trade, which is going to be an intraday trade at the NASDAQ future. By the end of the day, it doesn't really matter if your goal is to get an evaluation account to funding. You should, of course, trade with CFD, or you are trading with CFD automatically, which is the instruments you are using. Anyway there. Welcome back, LJ.
Thank you.
I am with you on your gold trade, but against on euro dollar. Yeah, I'm not trading euro dollar at the moment. Maybe you are referring to what you did earlier.
I
go
for it.
Want to jump off very quickly and make myself fresh coffee. Back in 5.
No worries. That's all good. Dude, I'm sorry. I'm gonna be completely wrong on the pronunciation of your name. But yeah, be ready to meet a stop loss. I assume you're talking about this now, because I saw you said I'm with you on the gold trade, but against you on euro dollar. Now the thing is, euro dollar and gold tonight are going to move in sympathy. So if we do get that risk on, they're both going to run higher. This is not necessarily like, okay, enter right here, but this is the general box on some kind of retracement to look for us to move higher. This is just a, scaffolding out of the general direction I expect. So we've got this trend line here that has capped us a couple times. So basically we've got this slightly condensing angular momentum, but we're now printing higher and higher prices. And then any kind of dip through here is a fair buying op. And what you could run is somewhere between here, this 100 moving average on the 15-minute, or down to a double bottom around the 200. Because we do have some time between now to get through New York Open, sorry, finish London, get to New York Open, run through New York, and then leading up to the Fed. Of course, the couple hours before any Fed meeting, once we get into that first burst of activity in New York, we tend to sort of calm down a bit because everyone's just sitting on their hands waiting. All the pre-positioning is sort of done, and it's often been done the past couple days or week before from large institutional players and such. But you could run something like this. Reasonable stop, just to give a little bit. The announcement will be very binary, so we should either shoot up or shoot down initially. Then if there is any kind of nuance within the statement, then you'll see that whipsaw activity. But you don't want to be trying to like pocket it, have a massive stop, let it come down here, get wicked out, see it come back up, try and re-enter, comes back down, and then we eventually find direction. You're probably better to keep it a bit tighter, and especially with slippage in that. So maybe you get slipped out down here at worst, another 5-10 points depending. Then you can find if we do get like a double bottom, or we just reverse or wait for then this break for us to run higher once we find direction. That's probably the way I would play that. So overall. And Void saying before, swing in trade or CFD or futures. I know you were talking to Dirk before. I would say swing in CFD. Futures are not too bad to swing on. You just have to have the appropriate capital allocation. So obviously the contract sizing is more aggressive in futures than the lower sums that you can get in CFD to carry that like fluctuation risk and multi-day time risk over, depending if it's multi-days or week or multiple weeks overall. And then options, yeah, I'd say Dirk definitely probably takes a lot more of the swing trades via options, or if not, like it'll be majoritively option heavy, and then potentially like a offset or some kind of hedging or some kind of differential through like a spot kind of trade. But normally the best way is to run it through options, because then you do have that capped downside, and obviously if you buy in at the right time, depending on volatility and such, you can get a decent price and run it to maturity overall. Well, I feel like, yeah, I called you Void, but like I feel like people get confused. Sorry, Akram. Void Akram. Don't worry, mate. I love you.
I always forget that your real name is Akram. That's why I always call you Void as well. I always try to remember it and be like, what was it again? What was it again?
That's why I often say it, because people forget or don't realize. Plus, you change your name every single week. Right? Like every time, like YouTube has that time period of how often you can change it. As soon as it comes up, you change your name. You know? So.
But it's always some alternative to Void, you know, so it's at least we can notice it.
Okay, Adnan Nasir. There we go, man. Thank you for that. Yeah. Sorry, I couldn't tell where to break it up before. Yeah, I know it's jokes. It's jokes. What do we think about NAS? So we can run over the NAS. We were talking about before. Now, on the higher time frame, if we go out to the daily, essentially what Dirk and let's reset this chart because that looks terrible. What we were highlighting, we've got this 100-day moving average. And so long as everything stays pretty stable, we don't get the rate hike, we stay sort of put, and potentially just more of we're going to wait and see. There's no real indication of any kind of lean towards hikes or some kind of tightening of financial conditions, which we've already had heaps of that from the input prices rising up, from the bond market itself having the front end short-term yields and long-term yields rising on their own. So it's done a bunch of the work. So there's no real need for it. With that said, then I could see us running right the way on to about 28,400 if we're looking at CFD. So back up towards this 10 moving average. Because this is very much a springboard. Just like Dirk was saying, this is a perfect buying kind of area if you have that sentiment, that view on the market. We've got like a, I think this is about 10% or so drop now. If that'll work. Yeah, almost 11% drop from all-time highs. So that's a pretty good discount. And that's the kind of pricing that you would normally expect in any given year. You do tend to get those eventual drops anywhere between 10 and 14%. That is normal. It's once you start breaching 14%, something is kind of wrong. And then it's whether you then press that 20% marker beyond that. That's when you have something that has gone from wrong to structurally changing and like stuck. Not just wrong and then it was fixed, wrong and it stayed an issue. In simple terms. So this is a pretty good springboard from here. So anywhere buying up through here, we had a nice buying opportunity before where, if I can move this, Rich got in and I did on a personal account. He got in through here somewhere. I think he had stop like that. He's got TP4
nice
up here. So just a touch above where we already reached. Nice. I had my TP here. It was on my... This is on TradingView, it shows the 200 moving average up here. On my broker accounts, both of them, it shows the 200 moving average just down here. So that's where I had the TP set on that. So I've taken that little chunk out there. But anything through here, if we get another little dip, I wouldn't mind holding that. And especially with that kind of risk reward, you could go... Zoom right out. This would be the target up there. So it's still like a 2-to-1. And obviously coming into the actual meet, depending on where we end up just before, after we go through New York Open. And obviously we do also have more earnings tonight as well. That's something else to remember after the Fed. So we're going to get a bunch of machinations coming through. So you could tighten it up something like that, and now you've got a massive like 10-to-1 type of trade. And you just got to be careful on the entry. So 10-to-1, 5-to-1, or you just, play it a bit safer, 2.5-to-1, which can't complain about either way.
Who's coming out with earnings actually tonight? There's some big players still left, I think, no?
There are, yeah.
What do we have here? Earnings today. Oh, so slow. I want my desktop PC back. That's the one thing I'm looking forward for next Monday. Having my fast PC again.
Yeah, definitely. It's you feel naked without it.
Yeah, right? Really.
Yeah. A tool you use like every single day. It's frustrating not having it. Flash Golden, whereabouts are you in NZ? I am not in NZ, I'm in Australia. So just across the pond. But I live in Queensland. So.
Where the giant spiders are.
Yes, giant spiders, a bit warmer, and about 2-hour plane trip to New Zealand. Not far.
That's really not far.
So. Yeah, it's quicker to go there than to go to the other side of Australia. It's about 3.5 hours.
I always wanted to go to New Zealand, actually, but it's like this thing, you fly like 12 hours to Singapore, and then you have to fly another 12 hours to Auckland from there. And that's what's keeping me from that. If you don't want to shell out something like 10,000 euro to do that business class, and you want to be a little bit on a budget, it's like, okay, not feasible.
Yeah. That's why a number of people sometimes do like a cruise thing from there that stops off through Australia, then it goes to New Zealand, and then down. And oftentimes you jump off the cruise partway, and at least you can, I don't know, have a nice time in between. I guess it takes a bit longer, of course, but
can enjoy the drinks on the cruise ship. Nice.
There's a lot of good deals on cruise ships. I see often. I'm like,
outside of Europe, yes, like also like over in the Caribbeans, you know, you can book like a cruise like a couple of days for like $400 or something.
Some other ones that are like a month or 2 months or 3 months, and it's really cheap. I'm like, that's cheaper than renting anywhere. You've got food and other stuff paid for. If you want to, you know, you get your staples. If you want to spend extra, you can. But it's like, damn, you could do that. And if you've got like a remote working job, you're golden. You know, there's some portions where they go into pockets where obviously there's no sort of Wi-Fi.
Yeah, but they almost all of them have Starlink installed.
Now they do. That's what I was about to say. Yeah. They're now getting Starlink on board. So
I don't know why it's too cheap.
Perfect.
Like everywhere else in the world. Like last year when I went on a Norway cruise, you know, for 7 days, my wife, my daughter, me, and we paid like €4,000 for the whole thing. It's like, we probably could be on a month or 2 months cruise, you know, in other parts of the world for that amount of money. Yeah. The only downside is because there's 24/7 food and drinks available, you know, you tend to make use of that. So staying a week is, you know, probably the maximum my body can tolerate in terms of calorie intake anyway.
I've thought about it, like if I didn't have my partner and stuff now, I'd probably, you know, be doing heaps of random stuff like that. Like, I'm just gonna, you know, pack up, go on a cruise for 3 months.
A friend of mine is taking a sabbatical now, starting in November, and then is going to travel the world for 1 year.
Yeah.
If I would be single, I would like live a month there, then move on to other parts of the world. That's really the nice thing of doing what we are doing. You know, you basically just need a laptop, internet connection. If you are streaming, of course, or recording stuff, a camera, decent microphone, and then off you are.
Yeah, it's brilliant. It's brilliant. Flash Golden, sounds like New Zealand. Yeah, I mean, pretty similar, but I got less of the fashion chops, bro. Oh, hey, bro, how we doing? Fashion chops. You know, that's more New Zealand.
Sounds more British, actually.
Fashion chops, bro. Oh, hey, bro, come on, bro. It's New Zealand.
I think you have a super Australian accent, your English. Like, not knowing you, just hearing you talking, I immediately would know this guy's from Australia.
Yeah, definitely not super. There's definitely people with much more heavy Australian accent. I would be like a light. It's kind of like people with British, more like city, a bit more. What's the word? I don't know. It's elegant rather than the really
like
coffee heavy,
cleaner,
Yeah.
It's the same here. The region I originally am from in Germany is like a very clear high German. If you're like down so I'm from the northern parts of Germany. If you're somewhere in Bavaria, somewhere in the outskirts of Munich, for example, even I cannot understand the natives. So it's like, what language are you talking to me in? So that's crazy. I mean, same in English. Everybody can tell immediately that I'm from Germany just by listening to my accent. And no matter what I've done in my life, I cannot get rid of it. It's like really ingrained in me.
Yeah. What do they say? Once you're like a certain age, it kind of just sticks, right?
But I had this also. I mean, I was living for a year in the States when I was 17, so 1994. And even then, I mean, I hardly, after a year, because there, was no internet and so on and so forth, so I was talking and thinking and dreaming in English. And when I was talking German, I had a heavy American accent after a year. But I still, when talking English, I always had my German accent. So I sounded the same like I do now. Probably my English was a little bit better than it is now, but never got rid of the accent. But I guess you just got to be happy that you talk, that you can communicate in two languages. So.
Yeah, definitely. I've always heard it's around like 12, 13. Like if you don't really like move somewhere or change before then, it sticks. It does warp, it does shift, but there's always that underlying that comes through. So
probably brain is not as flexible anymore.
Yeah, definitely a light Aussie accent. Yeah, because other people say like, oh nah. Like when people say no, it's like nah. It's like more of a N-A-U-R-R, like nah. It's not, doesn't. I'm exaggerating it, obviously, but rather than like no.
The sole fact
it's like
that
nah.
Aussies always like to use the mate, hey mate.
Yeah, mate.
That's a dead giveaway as well.
Yeah, exactly. Like Shane's saying, never go full bogan. That's what full bogan is. That's like the very heavy Aussie accent. So, and yeah, Shane also Brizzy accent to be more accurate. Definitely, that's fair.
When I tuned in yesterday for a while to watch you guys, I saw you were watching that video of this Australian breakdance girl lady from the Olympics last time, and that you mentioned.
Oh, the other day,
in Australia.
Yeah. Now I've forgotten her name.
Don't ask me. I just remember like everybody laughing, of course, in a nice way about it. Everybody except Australians, it seems.
Yeah. No, she was terrible. Like, yeah, she's just not a great person. And like I was saying, like, people here made like comedy shows and stuff around it, and she tried to like sue people and shut them down. And these are just like very small, like comics. Just it's so un-Australian what she did. And you also represented Australia, and you did a terrible job. What are you doing? You know? Yeah. Anyway.
Minecraft clips. Seems today gold sell with full margin. I assume you mean don't do that, man. Never go full margin. Always calculate the risk per trade that you want to do. Otherwise, 9 out of 10 times or 7 out of 10 times you will break your account, and the other 3 times will earn you some money, but it's not sustainable in the long run. You'll never get to a funded stage with that.
Interesting question, Dirk. And we'll jump further into gold, Minecraft clips. I actually don't mind these buys from here overall. This is that. You guys can ignore this. This is like that smile. I wish you could hide certain things on certain time frames.
Yeah.
Or something. Here we go. We'll go to this clean chart. That's a bit better. Yeah, I don't mind this kind of entry, something like that, approximately.
Yeah, I can see where you're coming from, but I think it's a bit lower. I would be on the 50-minute still look to something like 4,014, 4,015 as a point of entry if you want to go long, that is, which I do not want to do today anymore because I'm already long in the swing gold also. Brilliant. Short in the scalp gold, long in the swing gold.
I'd probably run something like that. I think today we could get as far as up through here initially, and then depending how hawkish or dovish, if it's excess, we could get right up to those tops. But I'd expect we get like something like that, then that over tomorrow and the next day into Friday.
I hope we do. I mean, I was telling the guys earlier when you were away for 5 minutes, this short scalp I'm in, or day trade that I'm in gold right now, I said I was thinking about, putting my stop loss to break even, so to the 45 area on the future, that is. But I want to keep it running because I'm still, for this type of manual trading, in the process of collecting data. So once I have something like 300 trades done manually under my belt that I can analyze, do I need to really, based on data, change anything in my stop loss or take profit strategy? Am I better off with, using a take profit ladder like you are using? And, that's interesting. Thank you.
I'll check that out, yeah.
But until then, I rather collect the raw data. So if this, which is very well could at this point, goes into the other direction, it's fine with me, since I'm with a larger positioning long anyway in a swing trade, which is the one from last Monday. So where we are just slightly above my entry right now. And that's the one I want to keep going, to get this nice 3.9R if everything goes well.
Yeah, I think that's quite nice. Quite nice. I would have my TP a bit lower, right?
It's going to get adjusted. I know myself.
Yeah, I was wondering why because you've got kind of the support bands and the other moving average coming over. Like,
things when I open the trade, the chart looked different still, no? Like the support bands were somewhere else back then.
Right. Okay. Yeah. Fair enough. I'm basically other thing I was thinking, like, I'm considering picking up another futures account tonight. Should I do so to trade this?
How many do you have now already?
I want to complete the Infinity Gauntlet, so all 5.
Right. Sorry, I have to take the call here quickly.
That's right. Yeah, go for it. All right. Jump back to my screen for now. So yeah, guys, we covered a bunch of the Fed. Hopefully I was coherent enough and succinct and that kind of thing. If you guys do have any questions or around some of the particulars or whatever that we've been talking about, then just throw it at me and I can, give some clarity on stuff. I was definitely jumping around so many bits and pieces, trying to give you guys the full rundown, but also break it down into somewhat of a digestive narrative for you guys. So I will probably hang around throughout today as well, though, because I know there'll be more people jumping in over time that will have the same kind of questions. So I'll try and stick around a bit to answer anything else you guys have overall. But yeah, if there's anything in particular, then hit me up. I'm just trying to scroll through chat at the minute to see if there was anything I missed. I don't think so. I'm pretty sure I'm up with it. Giovanni, guys, please, for the futures intraday account, what time can we keep positions till? 10:30 p.m. and what happens if you forget to close positions? What time is 10:30 in your local time zone? Hang on, I got to sneeze.
Bless you.
Sorry, guys. So basically it goes to just before rollover. So basically you don't want to hold it to actual rollover. And I believe it's 10 minutes before rollover you're meant to close out. The exception is obviously on days when there's like bank holidays and that kind of thing, where the futures markets will close early. So then that's a whole different question. Now, as far as holding it overnight, if you do something by accident and you're on like the intraday account, not the swing account, I'm not sure if it's instant cuts or if it's a warning system. I don't know. I haven't tested it. I don't feel like testing it. The best thing would be to ask support, or probably even in the if you have a futures account, should be able to get access to the futures Discord. So outside of the 5ers Discord with the CFD accounts, there's also a separate 5ers futures Discord, which is purely about futures. You should be able to ask similar deal as we have. They've got like a ask the members or ask people just in the Discord there. Should be able to get a pretty quick question, pretty quick answer from that. So, but yeah, I believe that's what it is. I definitely know it's 10 minutes before on like the end of like a Friday before end of week. So that means not on the 10-minute mark, like before that. So, don't wait until 11 minutes and then you didn't realize, depending on the server time and maybe your local clock on your computer is like slightly off or something, and then you breach an account because you held stuff over the weekend. So yeah, so better to close positions. Yeah, definitely ask Dave. Like you said, he'll know better. I that's my assumption. I know that's what it generally is, but I don't know about the full nuance. Normally, I try to have everything closed out before then because I do have to sleep at some time myself. So for me, that's like 7 a.m. right? So I try to be in bed. I've still been up to 7 a.m. Lately, actually, but I try to get everything closed out as far as trades around 5. So about 2 hours before rollover my time, and then I've normally got some like admin stuff to do after that before I actually sleep. So
exactly. So Joshua is asking, how do I buy the lowest 100K? Because when I try, I see 491. You click on the link below, which leads you to the 5ers homepage, and then you see the offer up there. You click on Start Trading, and then you can select that one. As easy as that.
Try and show you guys in the actual hub. I just got to make sure if I click through this, it's not gonna.
Yeah. So see, when I click on this one, you see this here. Start trading. I also don't want to click on it because of what you just said.
Yeah.
And
so let me just walk through it myself.
I did it before. It worked exactly that way. You just have to be careful that you don't select like the normal regular 100K account, which adds up to the price you were just talking about, Ben. Yeah.
Okay, I've got it here. So I can show you guys. Just give me a sec.
What is that? We cannot view well. Just set the setting of the visibility of the chart. I don't know. Sorry, what you mean with that. As far as I know, it's also for old customers, no? I mean, I assume so because I.
Yeah, it is. Yeah, it's for old. It's for everyone. It's for everyone. So I'll show you how to do it. So, basically, when you go in your hub and you click up in the top corner to get like a new order, new account, obviously you go to CFD, you go here, and they are in these guys. So if you go to the high stakes here, scroll down, you go to 100K summer plan, and then that's the 149. That's the cheapest one. If you want the So that'll be the 10 and 5%, right? 10%, 5% targets. If you want the 8 and 5, you click the classic button here, and it brings up 179. Okay. Now for the 1-step summer plans, you go over to where the hypergrowth is here, right? You click this and go down to 100K summer plan, and you'll see it's 249.
But that's the one only with 1 step, no? Not 2 evaluations.
That's the 1-step one. Yeah. It's just a 10% target, but the difference is you have 3% daily drawdown, the same as the others, but your total drawdown is 6% instead of 10%. But it is 1 step. So it's a 10% target, and then you're funded. But yeah, so that's where you'll find them. If you go to the high stakes here, 100K summer plan, and it'll have the 149, that's the cheapest one, or if it doesn't show the other one there, you basically just click this from the classic to the higher one, right? I can see it is kind of confusing, but hopefully that helps for you guys. I think it was just a matter of trying to get this actually into the system where it had to be planted somewhere without going through a bunch of problems. And then, yeah, hence, if you guys are looking for the 1-step, you'll find it in here. It basically comes under the growth sector, and you'll see the 100K there. So hopefully that is helpful for you guys.
It is. And yeah, it's a pretty good offer. So really like to potentially get access to quite a decent sized funded account already for, 0.15% of that in costs.
Yeah, did you? We had this as well. Does it have the same rules? Did you have the 5ers website up still, Dirk? Like the actual main.
Website, I do not, but I can.
Oh, sorry. I can open it
again. Yeah, I have to search it, or I have to click on it again.
No, sorry.
If you have it up, then
have not.
No. I just closed it because you were already in the hub, so
yeah.
I figured I don't need to do it anymore.
Yeah, no, I had the hub, but not the main front page. Here we go. I've got it. Okay, so does it have the same rules? Slightly different rules depending on if... so from the regular high stakes, they all have slightly different rules, and then slightly different again if you're on the 1-step or the 2-step. Now, if you guys go onto the 5ers website, just on the main front page, the introductory page, scroll down from here, you'll see the banner at the top, of course, up here. If you scroll down further, I can see my screen's kind of lagging out a bit, but hopefully we can deal with it for now. You'll see this is the summer plan here. So we've got it for the CFDs, and then also now for the futures here as well. So we got swing and day trade 150K for those as well. But we'll run over the CFD since that was the question. Go to summer plan. Now, the 1-step, you can see the difference is maximum loss is 6%. This is for the 1-step only. So instead of having the 10% maximum drawdown for a normal high stakes, it's 6%. And the daily loss is 3% instead of 5%. Now, you still have the scaling target of 10%, and it will scale 3 times up to 175K. If you hit those targets. You also have, instead of the minimum days rule for the normal high stakes of 0.5% for at least 3 days to progress a evaluation period or a funded stage, it's now a consistency rule of 50%, right, for your trades. And you can see this says per day. So it's basically 1 day of trading can't be more than 50% of your entire profit. So essentially, where you had to wait for the 0.5, 0.5, 0.5 over 3 days, if you wanted, you could technically do it in 50% and 50%. So 2 days trading, if you really, really wanted to. So this is very generous. It's a slightly different structure. People get a bit weird about consistency rules, but if you've got 50% of your entire target on 1 day, that's a massive banger day. It can happen sometimes. You've probably had a really good day, but it should not be the norm. So therefore 50% is very generous, so no one should really have problems. And if we put it on that same measurement, that now instead of the 0.5, 0.5, 0.5 and waiting the 3 days, if you really were trying to push it, you can go 50-50. So it's actually 2. So it's technically less than the 3-day minimum right there. The only other piece is that you have a payout cap of 2K. So that's for your cut of the 75-25 split. And that's on a fortnightly basis, right? So on the regular high stakes, if you had 100K, you ran it up to the full 10% target, you get your, I think it's 80% on the high stakes, the standard program. So you get 8K yourself. But obviously if you're running it up like that, normally people don't stick around. So the entire point of these plans is for you to take it a bit more steady and get those steady payouts. If you make more profit, like you do make that 8-10K, you can just leave it sit there and get several payouts over the next, fortnight, as long as you just obey the 30-day rule, put in some tiny small trade just to keep the account active. You can just take those profits and have them just keep rolling in overall. Beyond that, with the refund, you get a full refund from the third payout. I believe that's on the one step. I think the two steps you get it partial in between. And for the one steps, you can have two of them, and they're $2.49. So about half the price of the standard 100K high stakes. The two step is pretty similar, but you just have a 10% overall drawdown as the max static base drawdown instead of 6. And then of course you do have to go through the two stages. So whereas the first stage is just a 10% target, as we can see just here, the two-step, well, it's not listed just there, but you can see it up here. So 8 and 5. So 8% for the first target, 5% for the next, or you can get a slightly cheaper one, which is 10% for the first, 5% for the next. Now, depending on these, they have the exact same profiling, same rules, same breakdown. Just one is slightly cheaper because it's 10 and 5 versus the 8 and 5. So yeah, 8% target, then 5% target, 10% for scaling, the exact same. The consistency rule for the two-step ones is only once funded, however. For the one step, it's also during the evaluation phase, because it is one step for that 10%. Right? So the two steps, they don't have that. But they do have the 2K payout cap, and they do have a slightly higher profit share of 80% instead of the 75%. And so yeah, there you go. And you've got the bonus stuff. This is part of the refunds. I'll have to confirm how they go. I think it's similar to the high stakes where you get like 10% and then 10%. So hence on the first eval you get 10% back. On the second evaluation phase you get another 10%, and then you get a full refund from the third payout with these accounts. And again, you can have two of them. For the 8 and 5, two of the 10 and 5, and you can have two of the one step. So one evaluation phase accounts. So for a total of 6, right? So you could get 600K in funding. And then if you wanted to add a 100K high stakes regular system as well, you could have up to 700K overall. So, and obviously these ones are positioned a bit cheaper, so it's a really good entry point for some of you guys that do want one of those larger accounts, but maybe can't quite fork out the whole 500 or so US dollars for the standard high stakes. This is a really good entry point. 10 and 5. Sorry, 8 and 5 is 179, and then the 10 and 5, which is the cheapest one, 149. There you go. Hopefully that covers everything.
Yeah, maybe a word on this. I think from the comments I can tell like that some do not understand what that means, that the 50% consistency rule.
Yeah, okay, so with that, say we go over here, let's look at the one step as an example. So the target is 10%, right? So the consistency rule is basically you can't have, as you can see, this says per day, not per trade, it's per day. So 1 day's trading cannot make up more than 5K or more than 50% of your total target. If you make 5K and say you make 5.5, in order to obey the consistency rule, you would then have to go past the 10K target, right? So ideally what you want to do is your biggest day of total profits will be less than 5K. So it can be 4,900, and then you could make 4,900 the next day and like $200 just after on the third day, or an equal 5K and 5K, but that's going to be very hard to get it right on 5 and 5, obviously. But essentially that's all it means. So your biggest winning day for a single day cannot be more than 50% of the total profit. So it's a maximum cap sort of roughly of 5K if you're just looking at that 10% profit target, which most people obviously go to the 10% and then stop, of course, right? So that's basically what it is.
And then the reasoning behind this, Sorry, continue.
That goes the same for the two-step. However, the two-step, it's only once at the funded stage. The one-step is during the evaluation period and the funded. But yeah, so it's pretty simple. So just don't make more than 5K in one day. So that's more than 5%, essentially, is what we're saying. And you'll be fine.
And I mean, the reasoning behind it, I think is obvious as well for everybody out there. You, as the company, you have to protect yourself from, those strategies that do lucky punches. I go all in, I make 5K or 8K or 15K or whatever, and then when I get funded, when in reality that was not based off skill, but just off pure luck. In theory, you could play stuff like, at this one company, I do the exact same trade, but instead of long, I go short, and then one of them is going to get to the funded stage eventually to take like scam strategies, I really want to call them, or harakiri strategies out of the equation, because obviously that's not sustainable. It's all geared towards, teaching you or forcing you to have a somewhat solid risk management. And I think the 50% are already very high, honestly speaking.
Very generous, yeah. Very generous.
Very generous,
yeah.
If I would see you like with a 100K account and I see one day you made 50K, I would actually question your trading strategy, honestly speaking.
Yeah. Yeah, 50% of the target, so it'd be 5K, so 5%.
Yeah.
Rather than 50, it'd be 5K.
Yeah, sorry. Of course,
But yeah, no, on my sort of big days, I might clean that up, but there'll be aberrations and sort of irregular. Right, that's at the high end. Sometimes it can go a bit further than that when you have really banger days, but you only get like a couple of them a year, like a handful, that kind of thing. So if you guys are trading like normal, you won't have to worry about it at all. It just kind of goes in the background, like it won't matter. For instance, the futures has a 40% consistency cap, and that's on an individual trade, not a daily basis, as well. So it's far more generous than even the futures setup. And it's firm protecting itself, and it's basically just to stop people trying to like buy an account, go full margin, and then see if they make the entire target, and then try and get it funded, and then make profit. And they're not really trading; they're trying to gamble and play the system or something like that, rather than being actual traders and going through the process and with considered and thoughtful approach and strategy and everything else, right? So this is it sort of quells that aspect. So if you're a normal trader, you do this every day, like you don't have to worry about it. It won't be an issue. And just like Shane said, it does end at the end of August, right? This offer for now. So it is the summer plan, hence for European summer and such. Definitely winter down here where I am, so it doesn't really line up for me, technically. But so you guys have till the end of August to pick up those accounts, and you can get 2 of each type, so 6 total. And
Hello.
Hello, welcome, Rich.
Welcome back, Richard.
Connor's saying, so you could actually potentially run 600K across the one step and two steps. Sounds like a dream. Yes, exactly. You can run 600K across the lot of them if you want to. So there you go.
Yeah, so max allocation per funded summer account is 175K. So you start with 100K, and then you can scale it 125, 150, 175. And then you would effectively be on max allocation, but across the 6 together, that's over 600K in funding, which is pretty good.
Yeah, exactly. So it's doesn't, exactly like Rich said, it doesn't quite go up to the 500K like the standard high stakes. It does scale up, but it only goes to 175. So
it caps at 175.
150, 175, yeah.
You get a refund after your third payout. So the refund for the account cost, it's going to depend on which one. Like for argument's sake, in the one that LJ has up right now, the one step one, you will get a refund of 90% because 10% will be given to you as hub credits. Okay, so with the two-step one, it's going to be 70% is going to be refunded to you. The other 30% will be refunded to you as hub credits.
Yeah. There we go.
Sarafat Ali, please stop spamming. We're not doing any giveaways today, unfortunately. If you don't mind, stop spamming, please. That is going to potentially lead you to getting a timeout or potentially banned. So please don't do that.
Don't do it. How's your NASDAQ trade? I think you took in some profit already, probably, no, Richard?
Yes, it hit TP3 and it looks like it's about to hit my break-even stop loss. I'll bring it up quickly and you can see.
Yeah, I took it as well, Rich. But like I was saying, that TP3 kind of target area was what I had eyes on. So yeah.
So it hit TP1 relatively quickly, which was nice. But this was just as we were leaving the stream, and then a little bit of a struggle, and then a nice little push again. Took TP3 relatively quickly after TP2, and since then it's been doing naught but drifting lower yet again. So it's most probably going to hit my stop loss over here, but I am happy that it ended up reaching TP3. TP4 would have been lovely. That would have been a 2.5% gainer, but in this case it's a 1.5% gaining trade. 0.25, half, 0.75, and then 1 that then all get added together. So yeah, looking good. But
I have a good one. I have a question.
Yes.
Since you've already hit, you probably have to go. Oh wait, no. Oh,
no, so we're still
okay.
We still got 3 minutes. But I'm also going out on a high note, just very quickly before you ask your question.
Yeah, sure.
So my gold trade from this morning also hit that take profit, and that's going to be probably the only trade I'm doing today.
Nice.
That's fair. I feel like
this live.
I feel like you've still had some good trades whilst on holiday, Dirk, so you can't complain.
I did. Actually, it was quite good, you know. You get like everything done in the morning, and then you just go out, and I didn't have the urge, you know, to constantly play around with my with taking profits early or putting my stop loss to break even too early and stuff like this. So when it comes to manual trading, it definitely helped, yeah.
Beautiful.
Especially in gold. Yeah.
Yeah. My question to you, Rich, was going to be, since you hit TP3, because where it's if you hit like TP1, TP2, and then come to the stop, you're still in profit, right?
Yeah.
Remember?
Yeah. So this is a flat profit, like net zero if it were to come back down again.
Yeah, but when does that kick in? Is that at TP2 or
TP2? Yeah.
Okay, yeah. So
once TP2 gets hit, my stop loss automatically moves to break even.
Given that, would you not just close out the rest of this trade and then be able to start fresh? Because you did hit the TP3, you're now still a touch above, and you just
we've spoken about this before. We've spoken about this before where if I'm going to close a trade at TP3, why don't I just have my trade run from TP1, TP2, TP3 and then let that be it? It's the idea that some of the trades are going to run and hit TP4 as an example. But if I were to close this trade right now, what if it starts reversing from here? And then eventually runs to TP4 as an example. So it's the idea of taking one idea and just sticking to it. If I keep changing the way that I approach the management after TP2, all of my backtested data basically becomes null and void. It means nothing now because the backtested data was on this formula, effectively. So the evidence that I have to substantiate whether or not my trade is one to follow to potentially provide me with the profits that I'm looking for, I need to stick to it. So that's why I don't change it. So this is a risk-free trade. I can always go and re-enter another trade if it were to set up and present the way that I would like it to, but This one has got zero risk on it. Even if it does hit stop loss now, there's no loss. I've already banked 1.5%, so I'm happy with this. So
that's the thing about backtesting also. No, I have had often too that like what works best according to backtest and out of sample testing is actually counterintuitive to how you would approach it in a manual way.
Yeah. Yeah. So in this case, I would be looking at it, be like, I want to close this trade. But
of course.
that I don't want to feed that idea of like, I should close this trade right now.
Yeah, okay.
If that makes sense.
I know you've been busy as well with other stuff, like you were saying before. But basically, my main question was, since where we are now, I feel like it's almost setting up for another run, just like you're potentially going to hold it to see if we hit TP4. You could basically just take whatever's left on the table right now, since it's in profit, essentially re-enter the same trade, right? Enter a new version, but have your stop now where you originally had it, because I see you moved it down a touch lower, and you could have bought off this moving average here and basically have the same setup and get like a double bubble if we do then push towards that TP3 or TP4 once again. But you've taken...
I mean, I can get in right now with the risk that I've already taken off the table, because there's no more risk on this. The stop loss is at break even. So this is a risk-free trade. If it were to run up now and reach TP4, that would be a 1% gain. I can always just go and add another 1% as an example to kind of like, let's say, play with the 1.5% I've already locked up.
Exactly. And then that's when you get those big stacking profit. That's what I was trying to highlight. And that's why I was trying to say this as we were going, because I was like, this is gonna jump up, because I just
it does, as well. But remember one other thing as well, LJ. I even though I'm looking at this and be like, it's probably going to run up, I'm still looking for my very particular entry model to play out.
Yeah, of course. Yeah. That's where I will take like a side. Yeah, you do it much more mechanically. I'll take like I'm seeing this thing. I think it's the same. It's close enough within variation, and I'll just punch it.
For me, it's all about the expectancy and how far above or below my back-tested expectancy I am. That's what I care about. So I don't care about the outcome of the trade in terms of its dollar value. I try to look at it from the sense of my back-tested data stipulates this bracket, basically mid, upper, and lower portion of the bracket. This is my expectancy, over-expected, under-expected. So within an area of an error margin, basically. Mm-hmm. So in this case, this hit TP3's expectancy, great. Now the next trade I'm going to take has to be the same principle, the same entry criteria, so that I can remain in line with my expectancy. Otherwise, I'm going to start taking trades that look good, but aren't necessarily tested, or they look good, but I have no empirical data to add to it to say, yes, this was a good trade because it's a good trade because I reached expectancy. It's a bad trade because I didn't reach expectancy. That kind of idea. I don't know if the way that I'm explaining it makes sense, but
I know
that's
what you're
how
saying.
I view it. Yeah.
You don't want to mix in the sort of B trades that feel like they're a bit better than B, but they end up being B or B minus when they kind of looked like A at the time or A minus, but they're really lower. Hence I just thought this is one of those selective times where it might be like I would say the same structure is still in play.
Very much.
I feel like if you hadn't got in earlier, you probably would have been looking at that to actually get in on similar criteria in general.
Yeah.
Anyway,
I mean, if it were to present now with a rally-based rally, I'll probably enter again.
Yeah. Okay. Yeah. There was one other question, just quickly, Rich, before you got to jump out, Dirk. Because this was from like 25 minutes ago now, which I was waiting for you to turn up. From Shane, do the summer accounts scale the same way as other accounts, and how does that work for the 2K payout cap? We answered the scaling thing, but as far as the payout cap, I assume that does also scale up in the same percentage base.
No. So
No,
it doesn't. So you get a flat 2K cap across all of the scales. So it doesn't matter if you have 150K, you're going to be capped at 2K payout. So
that's
you
why
need
I wasn't sure.
You need 4 2.5K profit days to get them. Okay, so let's put it like this. Depending on which account you get, the 80-20 split would mean that you would need to make $2,500 to get the maximum 2K after split payout. Okay, so that 2K is after the 80-20 split. So you need to make 2.5K basically to maximize or to at least reach that cap per payout. So the scaling works on the 10% as per normal. So you need to reach 10%. So effectively you need 4 payouts, 4 max payouts, then you can scale. And then it will still be 2.5K required for a 2K payout, as an example, on the 80-20 split. But now instead of you needing 4 of them, for the next one you'll need 5. For the one after that you'll need 6, and then you'll need 7 for the last one. And once you've reached the 7th one, you'll stay on that 170K, but you just keep making 2K, 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 2K payouts. So it's it doesn't scale the payout, it scales the account size. So technically, you're getting more risk tolerance available to you for the same kind of payout levels going forward. So you can have effectively 11 months worth of payouts every 2 weeks. So 22 payouts for you to reach max allocation at a 2.5K profit reach and 2K payout. So you can have a whole year that you're just building this up, and getting 2K per account payout every single 2 weeks. Maximally, obviously. Talking
per
about
account
maximum.
as well.
Yeah.
Per account. So if you have 6 accounts, you can have 12K payout every 2 weeks, which is 24K a month for 11 months before you reach max allocation on those. And every time you scale up, you need less risk. You have less risk to push it up higher.
Yeah.
So
I see.
Okay, cool. More the idea of having this as the consistency is not just in your trading, but also in the payouts.
Yeah, nice.
Okay, thanks for clarification, guys. I gotta move. I'm going to see you back from my usual office next Monday, back to reality. Take care, everybody. And remember tonight, interest rate decision, half hour after this, Kevin Walsh speaking. There is for sure going to be a lot of volatility, so be careful. Don't lose your account because of making silly mistakes and trying to trade what Kevin Walsh is going to say. There, better stay on the sidelines, wait a little bit until the market normalizes again. Yeah, take care. Bye-bye.
Thank you, Dirk. Have a good one, Dirk.
See you, Dirk.
See you, Dirk. Have a good one, man.
What's up, Will?
Welcome, Will.
Yo, what's good, guys? How you doing?
Come on, man.
Not too shabby, Nige? Not too shabby.
Not too shabby, mate. Not too shabby. Seen that NASDAQ hit TP3? Looks nice.
Yeah, it did. Very nicely. LJ's trying to goad me into taking another trade. Whose phone's ringing?
Yeah,
that's Will.
It's definitely Will. Yeah.
It's room service. Question here, Rich. How much you sure when you take this trade that it's going to be, or what's your winning probability? Oh, I see you've asked it.
Let me jump back in a sec.
All right.
Yeah,
no
that's true, man. Yeah.
Like 5-minute break and I'll come back.
Yeah, no problem. How much you sure when you take this trade in the morning? What's your winning probability? What's your entry model? And how do you follow a single entry model daily? So I can walk you through why I decided to enter this in the first place. But to answer the first portion of the question, like how do I know the probability? I don't. Nobody knows the probabilities, all right? We can speculate on what we believe is the likelihood of a trade going in our direction. And we can only know that based on our back-tested data. So I am a mechanical trader, okay? I have a take profit point and a stop loss point that is always pretty much the same, all right? So the idea is when I've done my backtesting, I did my backtesting with a very particular entry model in mind. And I know exactly what the probabilities of each take profit point getting hit based on the backtested data that I have available to me. And that backtested data that I had was initially when I started doing this was 6 months. I now have over a year's data for that. So I know exactly in theory, how often each one of my take profit points should be hit. Now, the way that I do that is I add what backtested data I have, I add a margin of error above and below each one of them. So to give you an example, if TP3, or in this case, let's say TP2 is expected to hit 62% of the time. What I will do is I will add a 4% margin of error above and below that. So I would say, okay, 62% of the time it hits TP2, but 4% above that, so 66%, it can also hit it, and 4% below that, 58% of the time, I could potentially also hit it. So I always look at my expectancy with a margin of error above each and below each expectancy. So in this case, my backtested data for TP1 is a set amount. So a set amount of time it hits TP1 based on my backtested data. And I assume that every time that I take the exact same probable sell or probable buy, that I'm going to have a similar outcome within a margin of error. I don't know if this makes sense to you, but that's how I see it. It's all based on my backtested data. Okay, so what made me want to get in is the fact that we had this downward push from the day. We had been bearish across the New York Open. We took all of that back again. We started pushing lower again. We hit up higher. So we broke higher than this area over here. So we broke higher than the previous day's New York session high as well as the London session high as well. So we swept that with this movement here. Then what we did was we started pushing lower, and then we eventually tried to take and sweep the low of the previous day, which happened to be the low of the New York and London session as well. We didn't hit the low, but we came close enough with this reaction here. Now, on the way down, we had the high of the day so far. We had let's say over here, we had a lower high, a lower low, a lower high, another lower low, another lower high. So just price action, just making its way down, another lower low, another lower high, and so on and so forth. And eventually we plateaued. We came to the absolute low of the day. What followed up was price turning around. Price started to, instead of printing lower highs, it started printing higher lows. And it then created a new high for me to work off of. So because we had a lower high in relation to the low of the day, we started to print higher lows over here based on or in relation to this one. So these 2 points here are taken into consideration. So effectively, we now have a new upward trend that's busy forming. And I trade reversals and continuations of trend. So this that I had here is the reversal model for me to push price up higher to continue trading. I'm going to look for a buy. If I wanted a reversal, a continuation, that would be, for argument's sake, here, where we're starting to push up again, I'm going to look for what I call rally-based rallies and drop-based drops. And a rally-based rally and a drop-based drop is a very simple concept. Here you have a new rally that is forming. You have one candle that's in the opposite direction trying to prevent this price from continuing higher. It fails, and then you have another rally. So I would then potentially trade the entry there, trying to push price up higher. So for trend continuations, I trade rally-based rallies, and for reversals, I have one low, I have a high, I create a higher low, I'm looking for a higher high, and then I'm looking for a potential entry model similar to the rally-based rally, drop-based drops. That's my trading in a nutshell. And that's why I took this trade. Then my risk management is I split my entries. I split my take profits into equal portions. So TP1 is a 1-to-1 when compared to my stop loss. TP2 is a 2-to-1. TP3 is a 3-to-1. And TP4 is a 4-to-1. And what I do is I remove 0.25% at each TP point. So if this was a 1% risk trade, when I hit TP1, 0.25% will be taken off. Being a 1-to-1 means that I will lock up 0.25% of profit, and I will reduce my effective risk down to 0.75%. If I take into account that I've already locked up a 1/4%, that 1/4% can cover another 1/4% of risk, effectively leaving me with 0.5% of risk. Should this trade come all the way down to stop loss down here. So when TP2 gets hit, I move my stop loss, which was down here, to break even. So I lock up another 0.5%. So it's a 1/4%, 0.5%. So 0.75% is locked up, and my trade becomes risk-free, meaning I no longer have risk on the table. Even if this were to go down, I might get slipped, but I'm now risk-free. I can't lose more than what I've gained. So it is a profitable trade regardless of what the outcome is. Unless I get massively slipped, like crazy. I don't know. Like Will decides that he's going to be muted, and
I know. I said 2 words, and I was like, I need to unmute myself.
yeah.
I was like, don't bother. Yeah, no, literally, unless you get like severely slipped.
Yeah. Apart from getting super slippage, this is not going to be a negative trade if and only if TP2 gets hit and my stop loss goes to break even. That's my trading in a nutshell. I trade reversals intraday, and I trade trend continuations intraday as well. I don't hold a trade overnight at all. I don't sleep well if I do that. And I never risk more than 1% per trade, and I'm most comfortable risking about 0.5% per trade in general. I get roughly 2 trades a day. So my average, I think, over the last few months was like 1.9-ish trades. So I get almost 2 trades every single day. And in general, my win percentage across all of those trades is about 62 to 65%. So
that's some pretty good stats, to be fair.
Yeah, I mean, I'm not a multi-millionaire by no stretch of the word whatsoever, but my method of trading has helped me become profitable and stay profitable. So I don't know what to say about it. Like it to me,
it's a profitable strategy traded by a profitable trader. That's all you need now.
I don't know. It's just
it works. It works for you. That's what matters.
That's exactly the thing. It's just like it works for me. Like, yes, obviously, I spend usually 2 times of the day in front of the chart. I trade the London session predominantly. I get some really good trades just pre-London as well, and then I get good trades in New York session as well, but I treat the New York session differently than I treat the London session because they're not the same. The volatility picks up. The movements are a lot more like larger in relation to the London session's volatility. So
yeah, no, exactly. Yeah, no, exactly that. I'm just seeing this comment as well. Hi, Will. Whenever I see your smile, I feel energetic and positive. Dude, that is sick. That is genuinely the nicest thing I've been told today. So, dude, you know what? PNS, you've made my day. Thank you very much. Novel Navigator, grandma ringtone. I mean, fair. That's such an old-fashioned ringtone. But yeah, no, exactly. I like this as well. How many trades in that 1 year of data do you use stop-loss based points, not structure?
All of them. All of them is stop loss.
Based on points, not structure, though.
Points. It's always 40 points. 40 points in NASDAQ.
Yeah, nice. Dude, I like that. I mean, I like it and I don't like it. Well, you know my thoughts on stop loss placement. You know, I think it's a fantastic method. Part of me doesn't like it based on my risk management method, but the strategy that you use, well, as you know, I've somewhat adapted myself.
Yeah, you have a variant of it.
Yeah, exactly. Yeah, no, exactly that. So, dude, I rate that a lot.
Will looks like Tom Hiddleston.
Looks like who? Tom Hiddleston?
Hiddleston.
Right, do
you not? Oh no, mate.
Dude, I'm poor with names. Really bad with names. Tom Hiddleston. Oh, it's not the first time. I hear that all the time. Yeah, no, I
Low-key, you look like Tom Hiddleston. Low-key.
Yeah. I can hear you. I can hear Alex laughing at that.
Yeah, because I just made a pun.
Oh, the Loki pun. Yeah, fair.
Yeah, because he plays Loki. Anyway.
Moving on swiftly. I'm just having a look at gold at the moment. Gold looks like it seems to be reversing, seems to be heading a bit more to the upside now. Let's have a look. Okay, nice. It seems to be potentially... In fact, actually, I may jump in along on this. Let me share my screen, because I'm not actually sharing my screen yet. Oh, this is going to be a faff now. It's going to be such a faff. I'm going to have to open up my stream. Then I'm going to have to... Oh, not the stream, but the trading view. Then I'm going to have to open up my MetaTrader 5 and make sure it's in the right account.
And if he spends too much time in the sun, he looks like Tom Ato.
Ha 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 ha! Funny. Gotta get out of bed earlier than that. Okay, now I need to. Oh, I can't be bothered. I'll just place on my phone. Nope.
What are you trying to do? Are you trying to take a trade?
Yeah, I have the wrong accounts logged in on my laptop. Oh. It's just going to be such a faff and an effort. You know what? Screw it. I'm going to let the trade go. I can't be bothered. I'm over it.
Okay, wait. What are you trying to do? Let's talk it through.
I'm looking at a long on gold.
All right.
So we can see here now that we've come down. Like I said, I wanted to come down into this equilibrium of this area here. We've come down perfectly into it. We did come a little bit lower than the fib retracement, which was a little bit frustrating, but nonetheless, we move on from that. We've got a nice little area here. We've tapped into absolutely perfectly as we're heading back to the upside. Now, we've got a beautiful reaction from, we've had this nice consolidation, break and close above perfectly. And truth be told, by the time I actually find the right accounts, log into the right accounts, get the risk management sorted, it's probably going to be too late on this account, probably going to be too late on this trade. So this would be, I'm going to draw it up anyway, because like I said, it's a beautiful trade. If we can target high of day, for a 1 to 2, beautifully as well. Yeah, nice. This is what I'm looking at.
Welcome back, LJ and Buyu. What's up, mate?
Yeah, what's good, guys?
I'm loving our new little pause. Hands up in the air if you're excited.
Phalanges, wandering phalanges.
That's the most lackluster hands in the air, Will.
He's got one of those.
Terrible. Hey guys, I'm kind of shy.
I'm happy to be here.
I'm new here.
My name's Will, and I'm really happy to be here.
Hey guys. Nice Will.
So
sorry, continue. I feel like I interrupted. Just excited for FOMC day today.
You're excited for it?
It's gonna be interesting because I was looking at the target, the probabilities for the target rates, and it looks like 2/3 reckon we're going to stay the same, but 1/3, a whole 1/3, reckon there's going to be a rate rise. So I am tactically getting out of my positions because, I'm now a bit scared, to be honest.
That's a valid emotion on FOMC day, I can't lie.
Yeah, I really don't want to be holding trades over FOMC if they do a surprise fund rate rise.
Okay. Do you know what I'm going to say as a counterpoint to that? Is if you look at statistics and you see that 70% of people fail at trading, right? Would you be doing what the majority is doing or the minority is doing?
Okay, but we're not talking about failing traders here. We're talking about the professionals, whoever makes these numbers, the big boys.
Very well. Same concept plays.
I was literally going to say same concept. Can I just say 90% of these hedge funds lose money most of the time? It's only in a short stretch of time they make their money.
That they actually make money.
Yeah,
so
the rest of the time they fight for break even.
Okay. But also, we are seeing an increase. I think at one point it did go down to 10%, but I really dislike that it doesn't show that on the chart. But we're
Does
seeing
it
an
not have the
increase.
history, like historical?
Only on like a week, daily type thing. I will say, where we were just an hour and a bit ago when I was talking with Dirk, if you go back to the probabilities.
Yep.
Scroll back down. Down a bit further. Yeah.
Yeah.
So you can see we're now at 35.8 and what's that, 64.2?
Yeah, 64.2 where the 1 day 28th. Yesterday was 31 and 69. Nice.
Yeah, so it depends on the timing rollover, because the 1 day just before when we were talking, when I was on with Dirk, it was 36% from yesterday, right, for a rate hike. And today was showing up as 29. So it depends on the... I don't know how they calculate. Like, it's on like a 24-hour rolling basis.
I'm not sure, but what I'm going to do is something I haven't done before, which is go on historical.
The 1 day ago, yeah, that's exactly. So that's what I was next going to say to go back to.
I'm assuming it's like end of day or like lockout of the day. So
but
let's say the final one at that day.
That's what I thought, but you would think the 1 day, we were just talking about this an hour and a half ago with Dirk. You would think the 1 day from yesterday would still be sat at 36% of chance of a hike, but now it's showing 31.
No idea.
So if it
has to have some sort of lockout period where it kind of like locks up the information for the day.
I would have thought, but that's how I definitely thought it did run.
Yeah. Well, let's go through this together. So if we go back to the start of May, we were looking at a bit of a spread. I think the current is the 350.75 at around 90%. The 325 around 10%, that's going down. And the 300 to 325, that's going down by 2 basis points. And since then, we've come along and we erased the chance of having 2 rate cuts. Where are we at currently? 350.75. Yeah, we raised the chance of having 2 rate cuts down to 1. So we were heads on, okay, we're just going to keep it the same. Very small chance of a rate cut. And that was mid-May. And then the possibility of a rate rise starts coming to play around shortly afterwards, mid-May. That went all the way up at the 22nd of May, up to a potential of 2 rate rises. Okay, we're not talking about that anymore. But that went up to a percentage of 18%. Came down a bit again. Start of June, mid-June, we were talking about, okay, yeah, we're going to keep it the same. And then boom, 40% chance. Mouse, stop. 18th of June, boom, 40% chance that we're going to have a rate rise with a 60% chance that we're going to keep it the same. And they have been back and forth on this. They really don't know what's going to happen. And to my knowledge, there's not been much forward guidance from Kevin Walsh. Not great. Things are picking up with... Yeah, it's only been a month. He's not had long in the job. We've had a pick back up in the stuff going on with Iran. It's I wouldn't necessarily call this bang on. My lean is we're going to keep rates the same, in line with the consensus, but I would not put the chance of a rate rise completely off the table. That's all I'm saying.
Fair. I highlighted to Dirk that Citadel, their head of macro at Citadel, was calling for a surprise rate hike. Now, I don't know if I trust Citadel, right? They do a lot of sketchy not sketchy stuff, but they just have their place. It's just like Jane Street. But they are such a massive market maker. They handle about 25% of all equity volume. About 30% of all options volume, and about 40% of all retail volume for US related stocks, indices, US related assets. Absolutely monstrous, right? This is a massive player, that of the entire market. Like, this is huge. Now, often they sort of do this stuff if they're trying to, I don't know, they often have some other nefarious other things ongoing where they'll just flip their mind just before, or trying to pre-position stuff or rebalance books in certain ways. So I don't know if I really agree with that. But yeah, there's definitely this rhetoric of some kind of rate hike. I don't see it. I don't see it. Dirk doesn't see it. None of that makes sense. If you look at the inflation regime models across the globe, like they've just created, and this is despite we've had the Strait of Hormuz situation. We've had the massive demand from chips. We've seen DRAM go through the roof. CPU prices now increasing. Same with graphics cards are going back up, just like we had the massive graphics card Armageddon during post-COVID with the crypto mining and that kind of stuff. And this is the forward, inflation swap, 1 year forward inflation swaps from like banks and everything, which has gone absolutely to the floor. Meanwhile, the Fed chatter and talk has gone wide up, as though we've got inflation biting at us, right? And then same with this, which I brought up earlier as well, and have done a number of times the past couple of weeks. This is the syntax of breaking down the statement and how much inflationary talk and such and rhetoric is actually in the statements and general Fed talk beyond that as well from Bloomberg. Now, you can see it's just as high as after that massive inflation drive that we had post-COVID. Right? This doesn't seem to make sense given the current situation. So I think more so right now, there's a bit more of a political influence, and people talk about things about credibility and confidence and that kind of stuff, and how Kevin Walsh is going to steer the Fed, less so the actual monetary policy aspect. So you've got these different pockets. There's some people that are looking at the economics and think we should have rate hikes, hence we see that pricing above 30%, or around 30% at least. Then you've got the other people that's saying it's nothing about that, it's about credibility, and if Kevin Walsh wants to gain credibility, he has to like hike rates or something to do like against what Trump wants and against what the kind of split board of the Fed wants, which I don't see that. That would catch everyone off guard. It's completely against market pricing. Even if you do have the 30%, you still got 70% on the other side. This would derail everything. I think it would delegitimize his position and make it total confusion and all this kind of stuff. So I think net, you still have to actually go with these numbers and lean on that side of no cut, and then it's going to be more about the statement and then his comments after at the question time following that, right? Now, this time it might be more to do with the statement. There might be more activity there, and then we'll see if Kevin Walsh actually wants to reveal his cards a bit more in the question time, or if he still decides to keep them very close and maybe just gives one or two tidbits. Like I was saying with Dirk, there'll be more of a layup. So this is definitely the big one that's going to set the sentiment for the next 5-6 months, which then rolls into the further 12 months. So it's definitely going to be a lot of fireworks. But it's the question of, does he firmly, or not firmly, but more moderately to firm set that direction right now? Or does he just give like a slight layup and then wait for the dunk coming in at the next Fed meeting through September, which seems probably the case. But either way, the Fed itself, the other committee members are very 50-50 split. So it's literally Kevin Walsh to toss it this way or that way. And if you look at all the other rhetoric that he has and what he wants to do with reforming how we measure inflation, core inflation, all the rest, and take more real-time data, real-time numbers, and market inputs, then that would see inflation way lower than the current measurements and metrics that we use. So I think either way, you still have that tilt to eventually that downside, or that slightly more dovish on the basis of probabilities, rather than some kind of hawkish tilt. And right now, people are literally looking for a hike, which would be very much hawkish. I think at the most you could get is staying flat and not really commenting too much on an actual hike, but rather just echoing the same stuff that we've had month in, month out, even when Jerome Powell was still here, that we're looking at the Jews from the Middle East situation and any other kind of inflationary inputs. But I can't see it coming through. Because the other thing is the bond market on the short end and the long end of the yield curve has already risen massively, which essentially does the same thing as having rate hikes for central banks. So they don't have to do the work themselves overall.
Yeah, no, that's a fair point. For me, apart from, the potential of a rate hike, I also, like I've said before, I'm on the side of, we're going to keep it the same. I'm just being cautious around anything unexpected to happen. But I'm also looking at it in terms of if 35% of whoever makes these interest rate predictions are looking for a rate hike, if they are wrong, 35%, if they're wrong, that could cause a big move. Yeah, either way. Yeah, they're going to get smashed, right? So when rates come in exactly as expected, you see a move, but it's not necessarily that big because we've already predicted it. The market's already priced it in. When you see more of a divide and it goes one way or the other, that's when you get the big moves. So I think this FOMC possibly could have bigger moves than the recent ones that we've had up until now, where it's just been a safe bet of we keep it the same.
It'll be the biggest in the past 12 months, for sure, since they last hiked rates. This is going to have fireworks, no doubt. Just like you said, that 30 to 35% is definitely a very large amount. Now, even if that pricing is not necessarily expecting a hike per se, but more expressing a view of sentiment, because this is also like a leading chain, not of just this announcement, but the leading chain. So it's based off like a forward probability of like the average hikes over the next like number of months. And then that tends to come down to a derivative of the current month. Doesn't always mean necessarily that we actually get a hike, but it's the average of total hikes expected over the next qualifying period. And in particular, what we've been eyeing is the December Fed meeting this entire year, especially since the Iran war kicked off, and how many average hikes or basis point increases we're going to get by then. So yeah, I agree. Definitely, if we do just get nothing, they stay and hold, and there is a more neutral or dovish tilt, they don't give any kind of indication to hawkish sentiment in general. And depending on the split of the Fed, where Kevin Walsh has been able to tilt people or just keep it neutral the same, and he's going to further that at the next meeting, we could see a massive rip. Because, yeah, there is definitely a much larger split than typical right now. So it's poignant, like you were saying, to sort of stay out ahead of this.
Yeah. And it's interesting to go through the forward guidance. So as mentioned, current, we are on 350.75. I'm just going to zoom out a little bit just to make it easier to get the whole screen in. That's beautiful. Right. So September, they've gone from something like 40% to now 20% prediction of just keeping the rates the same, with everyone being like, oh, we're going to hike rates further to what you were saying. And that, as we go on, gets worse and worse. And by the time we reach December, some people are predicting how many hikes is that? 1, 2, 3, 4 hikes. That they're on the more eccentric side of the market at 2.9%. but still the general direction has gone from, hey, we're going to be cutting interest rates, if you were to look at this previously, to, hey, we're actually looking at raising rates. But Will, been very quiet, pondering.
Cool. Just to finish on that, just particularly because we got this chart up here, you can see how scattered it is. There's a very like broad distribution, but there's definitely a weighting to that upper side. Now, if it just doesn't happen, all of that has to wash out and we go the other way, and potentially it's either flat or lower, right? So you've got massive asymmetric odds on the other side that there's no hikes, and potentially a cut at some point, right? That's definitely where the asymmetric trade is, especially when the current market conditions and the direction we've seen stocks come off, we've seen the dollar being strong. That means if that happens, you've also got asymmetric odds that this is going to get wiped out. And we see these popular trades that we've had absolutely reverse and crater the other way. Whereas if we get a continuation of that same aspect, it's only, we got a further general push, but it's not going to be crazy. But the crazy side is on the opposing end. So this is normally where I like to position the opposite way, especially when we actually see the other portents of data, and if they do go off data, which they are highlighting, which are showing the opposite side, asymmetric risk reward is on the more dovish side overall. Sorry, that's my
rebel.
That's my
okay. So that being said, then, so for those traders out there thinking, I didn't understand whether that may as well have been Sanskrit, for those
talking about the traders out there or yourself, Will?
A bit of both. I'm speaking on behalf of us all.
That was harsh. I just gave you some grief. Sorry, bro.
For those who are looking at trading throughout FOMC, how would you position yourself? Would you just say, due to the fact that there's going to be, like you said, fireworks tonight, due to the fact that there's going to be potentially a little bit more volume coming into the markets and a lot more volatility than there has been over the past few FOMC releases and certainly Fed rate decisions, what would you advise, or not necessarily what would you advise, if you were in a position of these other traders, perhaps myself, who's not a fundamentalist, the guys in chat who either aren't fundamentalists or potentially don't even understand what we're talking about? How would you best position yourself going forward into later New York session?
I would wait at least 45 minutes to an hour after the initial statement release, right? We get that, and then half an hour later we get the sort of conference and the questions, the Fed meeting, like the chat, where journalists can ask questions. Normally then the 15 minutes into that, once we've got some of those core questions out of the way from some of the journalists that get first preference, the market will have fully digested the initial statement and then get some of the lead on and the follow-up with those questions and the sentiment and how Kevin Walsh comes out and presents himself, and also the first he always comes out, or any Fed chair comes out and they give like a few tidbits, basically reiterating certain key points. Sometimes it's literally just a replication of the actual statement. Sometimes they do that plus add some other bits to give that lean. That is when I'd start to look for the market finding a direction. So between that, in those first 45 minutes, we're definitely going to have a bit of chop and change. So you can get wicked out, get snapped out, especially if you're more technical trader, less macro or event driven, just like you were saying, Will. It would be poignant to wait till about that 45 minutes to hour period after the release to actually find some kind of trades. Now, at the same time, especially today, you're going to have to realize at that point we're coming very close to the close. So once we do that, find that direction, that's probably the final direction. And then also coming up towards the close and around that time, we are going to have further earnings releases for stocks as well. So we get other gyrations within the S&P and the NASDAQ and such, with some of the tech players and that coming out, that could also imbalance that kind of thing. So that's where the indices will have a second bubble but the FX pairs might have a bit more of a run and get direction and just keep going.
Yeah, nice.
But I'd be looking at that 45-minute to an hour period. Sometimes if there's a very clear view, and you'll know because you'll see it on the charts where we're just ripping inside that half an hour or even the first 15 minutes, then after the initial statement. But generally you want to wait until the actual question time from the chairman. And the first couple questions, and the market will sort of decide.
Yep. And from me, your local Lukaku lookalike, apparently, I'm getting out of all my trades before FOMC, half an hour before. I'm going flat. I know there's always a bit of excitement around FOMC. Yeah, it can go to the moon. You know, if I just leave my trades on, I could get rich in one session. I'd rather be safe than be sorry. A lot of people lose their accounts on the big three. That's CPI, FOMC, and NFP. Those big three. I'd rather take it easy, get out of the trades, and then when I'm looking to get back in the trades will be at the end of the speech, so end of the Fed statement. That's when I'll start looking to get back into trades, seeing what setups are there once we know what's going on. For me, taking a stance, be safe, don't be sorry. I'm getting out. I don't want to risk it for the chocolate biscuit. Yeah, I am going to take it very cautiously today. Yeah. I've already started selectively taking off some of my trades. If they've hit the equal high or equal low that they are at, I've decided to say, okay, I don't think they're necessarily going to break through those or continue breaking through new equal highs and equal lows before the meeting. So we're probably going to see a bit of ranging on a lot of assets. And in that case, just, you know, leave them flat, don't risk it, and you can always come back later because your account can survive if you've got no trades on. But if you've got trades on and you get blown out, I feel sorry for you. I feel sorry for you, but you know, it happens.
That's the biggest thing. I agree. Yeah.
Like you said, it's the big three, man. It's CPI, NFP, and FOMC. You know, when we have big news events like that, certainly like Fed rates and FOMC today.
Thank you.
Good damn, delicious, man. There's my tea when I need it. Oh, threw me right out of that, didn't it?
Will's getting a bit hot under the collar there.
Is it inappropriate if I take my top off on stream? It's getting hot in here. Yeah, but yeah, no, exactly. The safest thing you can do at any red folder news event, especially like you mentioned, the big three, is just stay out, just stay flat. Even as a fundamentalist, unless you're like swing trading or you've got some big positions on, or you know you're maybe a little bit more fundamentally driven, then I suppose you're going to have room and wiggle room to breathe with the data that comes out. But even then, sometimes you're going to get caught with your pants between your ankles. So especially those of you, and it's going to be, I reckon, a good 60 to 70% plus of you who are out there are analytical traders. They're more technical traders. Best thing you can do, any red folder news event, just stay out half an hour to an hour before and after. Big news event, minimum an hour before, minimum hour after. The reason I say before as well is you get a lot of lull periods. We get a lot of sort of sideways price action, lacking in volume, lacking in sort of volatility. And then all of a sudden, boom, excitement hits, speeches are made, questions are asked, you know, all sorts go on. You know, the people start putting in their order, placing their limits, etc. You know, you get the big banks moving, you get the reports that come out. And then all of a sudden, you know, you've been slipped or you've been taken out, you've lost the account, you're regretting it, you're revenge trading, you go in with a bad attitude or negative mindset going into tomorrow's trading being Thursday, Friday. Certainly if it's NFP as well, NFP Fridays, you're going into the weekend feeling like absolute garbage. Like Boo, you said, the best thing you can do is be safe rather than sorry.
Definitely. Jay the Great, give me 1 sec, and then I saw your question just now, and then we'll address that. But yeah, exactly, guys. Don't if this is not your wheelhouse, just stay out. You don't have to trade every single event. There's a million events every single year, every month, every week, whatever, right? You don't risk your entire account on like one day in a couple hours span just for the sake of it. So when we do have the end of the cataclysm that we're going to have tonight, I do expect fireworks, right? Just because, like if I can speak, tongue twisted, was saying before, we definitely do have a significant split, which is much larger than most Fed meetings. That is something that I highlighted with Dirk in the past, leading up to Kevin Walsh taking over, that we would get more volatility, a larger differing in opinions in general, and both from the Fed itself and from the market going forward with Kevin Walsh, especially since he doesn't want to do so much of the forward guidance type nature and that kind of thing. So when you have these situations, and especially when this is a very rare situation where we've got a new Fed chair coming in and someone that is potentially very different to the prior, and also on top of that, just in terms of himself, wants to completely reconfigure the Fed, right? So there's a lot of chop and change with everything going on right now. When you do set that momentum, that direction, it will tend to persist through the next couple of days, weeks even. So if you don't capture it today, tonight, during the release or just after release, guarantee you can come back tomorrow, 12 hours later, and you'll probably find further direction, hit some kind of top so you can jump in part way, going to the next resistance points or support points. Then you're probably going to get some pullback, and then it will tend to continue in that same direction as the entire landscape gets sort of reconfigured. So you'll definitely have another chance tomorrow on the Thursday and the Friday to jump in and make something up. Don't risk your account. Don't risk the profits you've made this week, this month, or whatever on one single event in a span of 60 minutes or something like that, right? It's not worth it. So
yeah, no, literally that. Like you said, there's multiple trading days. There's 5 trading days, in a week, and there's 52 weeks in a year. You don't need to worry about trading every single day. You don't need to worry about trading every single week, but certainly do not trade on the days that you particularly aren't going to be optimal. And that is days that you haven't slept, days that you're not feeling like you're performing at your best, days that you're maybe psychologically, challenged for whatever reason that could be personal to you. Whatever the case may be, they are days that you choose not to trade. And unless, like LJ has mentioned, unless you're a fundamental trader, unless this is your flagship, sort of strategy is based on fundamentals, days like today, I certainly recommend at least taking half the day off. At least trade London, take the rest of the New York session off. That's what I'm going to do. Me and my brother, we're going to go out into a village just down the road. It's about a 15 minutes drive, and we're going to have coffee, scones, and just enjoy this nice little river. We're just going to just chill, just spend a bit of brother time, and just have a catch up, discuss what our projects are going forth over the next few months. It literally, sometimes this is what it's about, being a trader. You're not only a trader, you're a businessman, you're an entrepreneur. And sometimes as an entrepreneur, you need to take time off. You need to take that time away from your entrepreneurial ventures to actually subconsciously grow your entrepreneurial ventures and reground yourself and realign yourself with your entire goals. Due to the fact that there's a huge amount of news coming out with the Fed rates and the FOMC, this is my opportunity to say to my brother, right, I'm not trading. Here's an opportunity. Let's go out. It's sunny. I've actually not packed for the sun. I'm wearing jeans, and I've had to put a t-shirt on instead of my thick ass polo shirt. I haven't packed any linen, so it's a bit of a pain in the ass. I'm going to be sweating, but it's sunny. It's a nice day. FOMC, not trading. It's a fantastic opportunity to just go out and enjoy the fruits of being a profitable full-time trader. And guys, this is a message to those also out there who are potentially full-time traders or certainly profitable traders with the rest of the day to do what they want to do. Go do anything but trade.
Fair.
Yeah. And I think now would be a good time to go over the news around trading as well, because, sometimes people forget about those. So for instant funding, hypergrowth and bootcamp, they're the 1-step and the 3-step accounts that we have. News trading is allowed, except for bracket strategies around news. And bracketing is when you are adding both a buy stop and a sell stop at the same time in the news. Meaning if one side is hit, then you entered in, and when the other is hit, then you are also entering the market. So basically, you're saying, if it goes up, I'm going to enter the market and go long. If it goes down, I'm going to enter the market and go short. Be very careful around those in general, especially around big news events.
It's literally sitting on the fence with your trade, and it's pure. It's at that point, it's pure gambling. You know how we pulled LJ's leg earlier on, said that's the most political answer ever. Yes, but no, but if, buts, and maybes. That's what you're doing in effect when it comes to bracket trading. You are literally if, buts, and maybes. I don't know, but here we go, sort of attitude.
Yeah, fence sitting on trading.
Literally, yeah, it's literally that.
Yep. And another reason you want to be very careful about that is because the spread becomes huge, noticeably huge. So even if you get entered in on, say, a buy stop, your spread may take you out of your stop loss at the same time, almost immediately, because the spread is that big.
Yeah, or if you bracket them, you can get tapped in on the long and the short.
Yeah, I was going to say, you get tapped in on
the spread expands, both. Yeah, you can hit on both at once. And now you're instantly just minus whatever the differential is.
Yeah.
Just by
default. Don't be a pussy and just no stop loss, innit? Instant market order, no stop loss, no TP. Just go for full margin.
You just told people not to trade around the news.
Don't listen to me. I don't know. Dude, I don't know what I'm talking about.
For the high stakes 2-step, to continue on that before we move on, holding open trades over the news is allowed on all of our programs, but we do have limitations on orders being executed during the news. So executing orders 2 minutes before until 2 minutes after high impact news is prohibited. We use Forex Factory to determine what news is like high impact. And any profits made at that time will be deducted from the account and won't go towards your target. Losses will be absorbed by you.
They will count as actual losses on the account. Yeah.
Yeah.
Yes.
Indeed.
Right, guys, on that one, I'm going to have to shoot off and skedaddle because I want to jump in the shower before I go out because I am sweating in my jeans over here. And I can't wait to get them off. So,
Oh yeah!
I tell you what, if you want to hop over onto my other stream, you get to watch that. I'm joking. I'm kidding.
Reminds me of
anyway, guys.
Jackass.
Yeah.
Remember when they did the thing on the treadmill with the sweatsuit?
Yeah, literally that.
Yeah, God. Anyway,
guys, I'm gonna love you.
Enjoy, Will.
Thank you very much. Make sure you smash the like button. Make sure you do subscribe to the channel if you haven't already. I shall see you tomorrow morning. Good luck in FOMC, guys. Good time to give us the link. Good luck in FOMC. Good luck in the Fed rate. Guys, please, just whatever you do, stay out of the news if you're not 100% confident and sure. But, guys, again, I shall leave you in the very capable hands of these awesome people. Peace.
Cheers, Will. I see there was a question here earlier from Jay saying, "Hi Richard, I've been stuck for days now. I completed the first stage of the 100k bootcamp account. I've been waiting for a new account for days now. No update on the account, saying the official email isn't working." How do you mean it's not working? As in you're not receiving feedback, or what about the email is not working?
Yeah, so what I'd say, if you've gone through the email system, go into the Discord. You'll see there's the support and there's a live support channel in the Discord. You can go through there. There'll be a link to actually go to live support. Now, you can ask your question, fill in the details, that kind of stuff. Initially, it'll come up with like an AI response because a lot of people have just very general questions. But you keep going through there and then eventually go through like, was this helpful or did it solve your problem? You can say no. It'll say, do you want to connect to a live support agent, right? And you can do it that way and then talk to one of them and describe your situation. And they should either be able to reset if it's like a hub problem where the dashboard is not connecting up with the MT5 terminal and the trades and such, they should be able to reset it right there. Or if not, if they can't do it right away, it'll probably take like 24 hours. They'll escalate the ticket, and then you should have it within the next 24 hours, 48 hours, sometimes in half an hour, depending on the backlog of things. But that would be the best way to do it if your emails, if you tried that and it's not coming through. Go through the live support agent avenue, and you should be able to get fixed up.
Yeah,
there you go.
That is what I was going to say. The three of us over here, we don't have any connection to the support agents, so
we don't have access and stuff. Yeah.
In general, when we give suggestions, that's the same direction we have to go in as well. So if I needed to talk to a support agent, I would have to use the email address, or I would have to go through the Discord or go through the hub itself with the AI one, and then via that talk to a support agent. So same boat, guys. Not entirely sure why there's a delay for you, unfortunately, Jay. But if you've passed the first one, you should have theoretically received the the following credentials for the next stage within 24 hours already. So we'll have to find a way to escalate that.
Is it a situation where your MT5 dashboard and trading logs showing the same profit as on the hub dashboard? Or is there like a discrepancy? Or is it they're both showing the same thing, it just hasn't ticked over? Because sometimes as well, if there was a delay where it hasn't ticked over before, if you put in a very minor trade of like 0.1 of some lot on whatever asset, like the most minor thing, enter it, close it, it might then trigger it to kick over. Yeah, it's showing the same. Okay, so if you haven't tried doing that, put in the most smallest trade size you can, just to see if it'll then re-trigger the thing and potentially tick over on its own. Otherwise, go through what I was saying before. Just describe your situation. Say, I've passed it on the MT5. It's showing the same numbers on the dashboard, but for some reason, it has not crossed over to give me the second evaluation account. And then support should be able to either reset it right there or escalate the issue. Okay, yeah, well then, yeah, you're clearly well past it, so...
Yeah, but you also have to bear in mind that for some of the evaluations, there is a minimum trading days that you may need to watch out for. And the minimum trading days, it doesn't count as a trading day until the end of that day. So if this is something that just happened like now, then
it's on Bootcamp, though.
It's on Bootcamp.
Yeah, so it doesn't have that. Bootcamp doesn't have that. Yeah.
Okay.
Yeah. Yeah, try that out and see how it goes. If not, I can try help you, maybe, or I can try talk to someone and see if we can sort that out. We'll see. That's not to say that anyone that has problems start messaging me. I probably shouldn't have said that as soon as I said it, because I'm going to get swamped. I already do get swamped with a billion messages.
Yeah, guys, we are not support agents, please.
Yeah.
We are not support agents. I can't escalate anything about your account issues and stuff like that. You have to go through either the email, the help@the5ers.com, or go through the Discord. So
yeah. Because otherwise it gets too messy with bits and pieces flying everywhere. So they try and keep it, structured and makes everything better.
Yeah. Mr. India, please add me in the winner list, sir. I have no idea what you're referring to, but we don't have a giveaway today. There's no winners list thing or anything like that today. So not entirely sure what this is about, but yeah.
Right, I think I know what they're talking about, because I saw some other comments about the 1v1s, which people are very excited about. So I think
But that's not today. That was yesterday.
That was yesterday, but Mr. Beast India has been excited since yesterday about it, apparently. So
it was yesterday as well. I remember as well.
Okay, so let me explain. Let me explain, guys, to everybody that's in chat. When we have the 1v1s, it's all of the people on the day that we have the 1v1. that is in chat, there will be a Google Forms list for you to fill in, and that is how you will participate on the day that we have the 1v1. So we had one yesterday. Yes, there was some technical difficulties and whatnot. The next one we're going to have is going to be on the 11th of August. So that is 2 weeks from now, all right? So the 11th of August, not today, not tomorrow, the 11th of August. Okay, so the link on the day will be available both in chat as well as in the description box below on the 11th. All right.
Right. And I did spot a message about holding trades over the weekend. For those who don't know, if you go to our FIVERS.com website, you can find all of the FAQs here. And we've got them nicely segmented out like this. So you can like click on your specific program if you want to know anything more about it. Or you can use our friendly search function here. So you can hold trades over the weekend. There is no issues with that. Some assets, though, do attract higher swap fees than others. And you have to think about triple swap over the weekends for most assets.
Friday. Yeah, on Friday, yeah.
And you can't hold a futures trade on the futures platform over a weekend. If you have a day trading account with the futures one, you can trade up until the end of day, half an hour before, then you have to close the trade. If you're trading the swing one, you can trade overnight, Monday through to Friday. You can't hold over weekends with the futures platform at all.
That's another thing. We did have a question before. Is it half an hour before or 10 minutes before rollover?
It's until just before rollover. So
isn't it 10 minutes?
It can be 10 minutes, but like the idea is still close
obviously
it
to
well
get out
in
before
advance.
that.
Yes. Close it well in advance. Yeah.
Hence the latest point is 10 minutes before. And like I was saying, don't wait until the actual 10th minute or even 11 minutes because your own personal clock on your computer or something else could be slightly off or wherever you're getting this time from. And then you won't be able to close it. And because people are asking if it's like an instant violation, account closed, or if it's like a warning if you do it once or accidental, or if you leave like some order in or you know what I mean?
You know what, LJ? I think people need to read the FAQs and read the information because it's there.
Yeah, I know that's what I was saying.
The stuff is there. It's just like
trying to give
It's a very straightforward thing. Like the answer is right there. It's like not reading the T's and C's before you sign a contract.
Yeah,
you need to understand the T's and C's. So you can hold a portion over if you on the swing trading one. And
on the swing trade,
it is a violation that will lose you the account if you are trading the day trading one and you hold it overnight.
There you go.
So people really need to just go and read it. It's very clearly stated that you will lose the account because it's prohibited practices holding it over the night. Yeah.
Yeah, and so similar to the CFD as well, like same deal on a Friday, like you can't close it out just before 7. Like it does close like 5 minutes before that. Same deal. Don't hold all the way till rollover. You won't be able to close out, that kind of thing. And I did highlight as well, especially with the futures, when we do have bank holidays, CFD might still be running because it's slightly different, but the futures contracts will close off. So that's typically often about 4 hours earlier than rollover.
Yeah.
Right?
So there it is right now. Can you hold positions overnight? Swing one, you can hold 1 mini contract or 10 micros overnight. Bigger positions must be closed to at least 10 minutes before market close. Day trade, overnight holding is not allowed. You must manually close all positions and cancel pending orders at least 10 minutes. So it's not going to do it automatically for you. You must manually do it. And if you leave it over, you're going to lose the account because it's not prohibited. It's not allowed. So, yeah.
There we go. There's the answer for hopefully people that asked that question some time ago. That may still be here or may not. But regardless.
So, PVT, you confirmed it was futures. So if you do need to go over the FAQs, just go to our website, click on Get Funded. you can head over to our futures FAQs section here, or the CFD's FAQs if you decide to pick up a CFD account. All the rules are there, including including holding overnight positions, weekend positions, all of that stuff is mentioned in our FAQs. It's not hidden. It's all front and center right there. Yeah.
Best place to go is just the FAQs for any questions that you may or may not have. So best place.
But speaking of futures, though.
Start there. Like, it's all pretty straightforward, like Rich did say. And then any other questions, if you have some kind of nuance, normally you can also go into the Discord, like we said before. You can also search in the Discord for similar questions people might have asked, and then either find the answer yourself, or if you can't find the specific answer, you can go into the specific questions portion, not in the no questions chat, the general chat, which is why we renamed it to no questions chat. So we keep that for general chatter. And then there is a questions ask the members segment in there. So you guys can ask in there and people can answer it. Or if there somehow is no answer or there's a bit of nuance, then obviously you go to support, ask support, go to the live chat or something like that to clarify. But normally most things are very simple, very straightforward. It's very clearly laid out, so you should be able to put it together. Sometimes there might be language barriers, which we understand. So that might be a thing. But hence, that's why we have each of those avenues to go through to figure that out. And normally someone along the way will be able to clarify it for you pretty well.
Yes.
And we also had a question on how speeches are treated in terms of red folder news.
So, so the red folder news, if it has a time associated with it, so if you go to, like for argument's sake, tonight's FOMC is at 8 GMT plus 2 my time, so 6 GMT. Or in your case, FOMC conference is at 7:30. That time, 2 minutes before and 2 minutes after, it's counted as red folder news.
So to clarify, it's not
the start of it.
Yeah. So it's not 2 minutes before the speech, then to 2 minutes after the speech. It's literally 2 minutes before the speech starts.
So you see this time right here. You see that time right there.
Yep.
Where it says for LJ, it says 2 p.m. for a Bank of England monetary policy report, 2 p.m. It's 2 minutes before 2 p.m. and 2 minutes after 2 p.m. The only time a red folder news does not provide you with that 2 minutes before and 2 minutes after bracket is if it says tentative, meaning it doesn't have a time associated necessarily, a scheduled time. So it's based on the scheduled time.
Okay, and for the speech, it's not 2 minutes before the speech begins, two minutes after the speech ends. How does it work?
This one, it is
the time.
This is the time. It says 9:30, so it is 2 minutes before and 2 minutes after. Otherwise,
2 minutes before 9:30. Yeah.
Instead of 9:30, so these ones say tentative. So it's just something to be concerned of, be aware of, but it's not necessarily the 2 minutes plus minus. The FOMC press conference, after we've had the rate released and the statement released, that has the 2 minutes before and 2 minutes after. 30 minutes later, we have the press conference. That will also have a 2 minutes before, 2 minutes after factor, right?
So for LJ, it will be 9:28 until 9:32.
Yeah. Oh, this is from the Discord. This is not for me. This is from
No, I meant like on the one that he's showing now. The one that
the one I'm showing.
Now. Yeah. It's showing 9:30, so it will be 9:28 until 9:32.
Yeah, so you guys can always find this in the Discord. We post the red folder news, the things to watch out for. Abe always makes these posts at the start of the week and normally presents all of them. So you can find it right there in the Discord, and you can see like here with Japan, like it is tentative. So Japan is also different. They sometimes come out a few minutes later or after as well, not right on schedule.
So there's no restrictions on the tentative ones, even though it's a red folder for JPY. If you're trading a yen pair USD JPY as an example, if there's tentative red folder news, you are safe. You can trade as per normal. Yeah.
It's more just a cautionary sentiment and sign.
Yeah. It's like just take aware of some volatility that might pick up during that time.
Yeah. Same deal. Sometimes we'll get like a Trump announcement in here. We haven't had it for a while, but some of the big announcements he does, like when he's talking to the entire nation or something, it'll be like a tentative speech for Trump. But it's just something to be wary of overall. But yeah, there you go for tonight.
Okay, so to be clear, we can place trades while Kevin Walsh is still speaking.
Yeah.
Only 2 minutes after he starts.
Correct. Yep.
Yeah. Yeah. The thing you always have to take in consideration with red folder news is the time. If there's a time associated, then there's a 2 minute before and 2 minute after that scheduled time that you're not allowed to open up a new trade or activate a new trade or take a new trade or place a new trade within that time frame. If it's tentative, you can trade freely. There's no restrictions whatsoever.
Yeah, exactly. Il Boy Views. LJ, get your book. I just requested a payout. Mate, congrats on your payout. Love to see it. Love to see it. Beautiful. That's what we want to hear. I'll give you applause. Congratulations, good sir. And hope to see more of you. Well done. Chat-wise, just trying to make sure we can miss anything else. I don't know.
LJ, you're cutting out. Yeah,
I think he's
we
back
can't
now.
hear you.
Am I?
Yeah, you're back now. Awesome.
Yeah, I couldn't hear anything from the moment that you played the claps thing. Couldn't hear anything from you.
Oh, okay. You can hear me now, though, just fine.
Yeah, I can. My NASDAQ trade just hits that break-even stop loss. So
we just had this.
We just had this. Yeah, I was gonna say. And the circus begins again.
Yeah.
As they say, not my circus, not my monkeys. In this case, these monkeys are throwing bananas, mate. Throwing bananas.
Yeah, okay, interesting.
I got slipped.
US strikes will take place against Iran in response to attacks on US targets in Jordan.
I got slipped on that one. Not much, though.
Okay.
Not much? No?
Yeah, not much.
Okay, that's good.
3 points.
I'm sat in this currently.
That's annoying.
See how this plays out.
That asshole just chewed up some of my profits, bastard.
So in summary, today's going to be a volatile day. My personal recommendation, enjoy the sunshine. Or whatever weather you have. Yeah, touch some grass. But I did see a comment about our boosters, by the way. Talking about a summer feeling and touching grass.
Yeah.
Yeah, if I can jump over to your screen, Boo, just for a sec. I also have a email just here I might have to actually respond to. So
okay.
Give me 1 second, I'll jump back in.
You can hop out because you're already like well past your like scheduled time, so you can go and enjoy the rest of your evening, mate, and we'll carry on, mate.
That's all right, I can hang around. You don't want me here, Rich?
No. Up to you, mate.
I'm getting kicked out. I'm getting booted out. Gosh.
Slowly taking over.
You're not getting booted. You're not getting booted, but you are like way extended, so you can go out if you want to. Like, don't feel obligated to be here.
Of course, I understand. No, it's all right. I'll hang around. It's FOMC day, big day today. Lots of fireworks, like we were saying. So I will stick around as long as I can. So yeah.
Right. So just to respond to Jörg Online, hope I said that correctly. The boosters look cool. for the summer plan. And I was actually eyeing these up the other day and strategizing how best to take advantage of these. So for those who don't know, if you get a futures account as part of our summer plan, you can also earn yourself some hub credits depending on how far you get along with these. So, you can earn 15 credits just for getting funded, 20 hubs if you get your first payout, and so on. And yeah, it looks like those prices are here to stay. And if you also check out the 5ers on X, I was strategizing and I noticed that if you use code ICT, those discounts that we have on our summer plans, they can be used in conjunction with them. So for instance, on the CFD account, you can get 100K for as low as $134 with...
Down from 149.
Down from 149 with some of the money going towards a good cause. And okay, I got confused for a second there because something just popped up.
That was 2 minutes ago.
Oh yeah, that's crazy. Speak and it will appear. So yeah, more details on the summer boost plan here. I personally would use code ICT or your favorite affiliate code if you so wish. Raise some money for St. Jude's, help a children's research hospital, get your accounts super cheap, and yeah, enjoy the summer. If you want to, personally, for me, like I said before, I'm also be rocking some summer merch. So one of these unisex tees and beach towel, that's what I personally have my eyes on. But if you want to check out that as well, we've got the store.5ers.com. And I'm just actually going to quickly, cheaply check on this. So we've got a special link to the summer boost plan now. And it's going to be for the CFD side, where it talks about our boosters on that side of things. So you can see for the two-step, we've got one for 179 and one for 149. Get 10% off that. That's your 134. And yeah, good vibes all around.
I'm also just quickly replying to a message here. Just give me a second.
Okay, no worries. But looking at trades, I know some people are hungry to get into some trades. I think I did see a shout out for gold. If there's anything you want me to look at in particular, let me know in the comments. Gold, as I mentioned before, I reckon we're going to see a bit of ranging consolidation prior to news. Okay, Trump has just scuppered a few people, but from higher time frame perspective, I'm just seeing consolidation. Even on, the NAS, which I heard some people got taken out of, it's still just chop. And I reckon it will be chop until we see that news coming out later on today, the federal funds rate. So, as I said, for me personally, I'm staying out. On gold, on a higher time frame, we have reached a base. Yes, technically, if we were to, so here we have a equal low. I'm actually just going to change this color. I'm actually testing out something new that MGN created. So more on that later, but hopefully this should have alerts coming soon. I'm just going to change this color to blue so I can see a bit clearer. Hopefully it's a bit more contrast. Yes, awesome. So you can see here we've got relatively equal lows. Now, if I go down to my 15-minute chart, I would say if we break out above there, so say above this FBG line here, let me zoom in a bit more so you can see it a bit clearly. We can see right now we're just consolidating, bouncing between this equal high and this equal low. If it breaks above here, that would be my target for... Yeah, the blue ones were changed for green as I test out a new version of this indicator that has alerts on it. Alerts, yes.
Alerts is a word.
Alerts is a word. But I've for those who've missed it, I've now put the blue ones, the blue watts back on.
Which ones?
The blue watts. The blue. I'm not going to say the word for those things are down
Why
there.
not? They're both. Right? They have two circles on your. screen there. It's two blue balls,
no,
mate. Like,
no,
you have
no
red
comment.
balls and blue balls.
So for me, if it comes back up above this line, I would say that's a long on gold. Otherwise, I wouldn't touch it. So I'd be looking for longs. That's it. Yeah. But again, be very cautious. FOMC does really mess with people's accounts. It's one of the big three where people lose their funding. So the big three being CPI, oh wait, FOMC, and NFP. Those are the big three to watch out for in terms of losing your accounts. Personally, I'd stay out. But yeah, saw a request for GU as well.
Connor asking, interested in a take on GU potentially targeting 134,500. Can you take a look? Yes, we'll have a look for you, sir.
Yep. Again, we are seeing a consolidation. We will have to wait until FOMC to kind of see the breakout, I imagine. If I go down to the 15-minute, we will see that we're bouncing between the equal highs and the equal lows. So the red and the blue. You're going to hear me say this for a lot of stuff on the chart, which is I reckon we're going to consolidate until FOMC takes place. FOMC will see a big breakout, will resolve to one way or another. I haven't got a crystal ball, so I can't tell you which way we're going to resolve.
Amateur.
And unfortunately, using my head as a crystal ball hasn't been a suitable replacement to date. I'm working on it, but I think it needs a bit more shine. But in terms of taking a long or a short, I don't know what to really say. Wait until we break out of this range either way. But then again, I would say take time off the charts. Personally, I'd say take the time off. Don't look for anything USD related, at least until we get that FOMC decision out of the way. That's my own personal 2 cents. I don't know what your thoughts are on that, Rich.
No, I agree. I agree with that. I'm also not going to be trading anything else from New York Open because obviously we have a bunch of volatile events that are going to be taking place today. And I don't have any edge in trading high volatility news events at all. So for me, best case scenario is I take a scalp and I have to close it within a few seconds because it's going against me, as an example. So I just don't. I just sit out. So for what you're saying, I think that is the best way that you can prevent a catastrophic failure in your trading career. Let's put it like that, because you could have prevented that. You did not need to trade FOMC. You did not need to trade the federal rate decision or anything like that. You didn't need to do it. And then if it happens and it eats you up, oh, mate, you're going to feel like crap the next day. Why did I enter? Oh, I didn't need to do this. You're just going to beat yourself up if you're wrong about it. So unless you're somebody that really, really knows what they expect is going to happen and they're willing to risk it, by all means, then go ahead and do it. But I wouldn't. Not with my accounts, I wouldn't. Demo, yes. Demo, I would.
Yeah. So you heard it here first. If you had a demo account, so not a challenge account, but just some random demo account, have fun, Yeah. If you want. On your challenge, on your funded, take it off. Just relax, chill, calm.
I think... Okay, this is obviously just my personal approach and whatnot, is it's not going to help me mentally by taking a trade knowing that I don't have the best way to approach it. that trading. Like, I don't have the best way to approach FOMC as an example. So I'm just going to harm myself mentally by trying to do it.
We've got someone who was trying to get your attention, I believe, but I'm not sure what exactly they wanted from you, Rich.
Yeah,
I just saw that B as well. Like, I was trying to find where was your prior comment?
Is it this one?
Engar.
Men, I was short from 40.48, but before news I cut out. Men, it will hit my TP3. Sad men. Why always men? I was exhausted.
Beautiful.
Rich, no reply today. Are you angry? No, it's just like I generally reply to questions, and if I don't see a question, I don't know. Or if somebody's saying hello, how are you? I'll be like hello. So if nothing is directly directed towards me, I don't.
And like Rich was saying before, like he's been busy today. He's been dealing with a bunch of stuff in the background.
Yeah,
so
there's stuff in the background that I'm constantly.
Rich is working stuff out as well. But yeah, if you have a further question, whether to Rich or myself and Buyu, we can answer it for you. If you have an actual
If you have a question, Mr. Khan, then why not? What is men? Usam, so I'm not going into that one at all. PG related stream and all.
Okay, but just to comment on gold, yeah, I reckon, it's sad that you jumped out of your short. It does look like it was a beautiful one. I reckon we continue consolidating. So you can see on the chart from Tuesday, we've kind of formed this high here at the equal highs. For those who are not sure about my strategy, what I look for is wicks that are relatively at the same height. So for instance, this wick, the height of it is 4047.195. And the height of this wick, or these wicks, are 4047.88, 4047.515. Basically, they're roughly the same height. And on the chart, what you'll see when I put my indicator back on is that a red ball is formed around those equal highs. I'm not sure why it's not popping up at the bottom, but the same thing by the same token, you'd also see blue circular things appearing around the bottom.
You could say blue balls, mate. Like, it's not a weird thing. You're making it weird now.
Maturity level to handle blue balls.
I was about to say, like, you're making this weird.
So the blue, they would be around there. So that is why I look for rejections from the equal highs and the equal lows. For me, I trade the higher time frame. So I look for the rejections on the 4 hour. So where equal highs formed on a 4 hour chart, I would then go down to the 15-minute and look for the last swing high or swing low before that happened. So for instance, in this case, we would have had, I think this was the equal high on Monday. So go back. Yeah, Monday. So just after the gap. I know it says Sunday 22nd, but that's the start. Sunday 10 o'clock. That's the start of the 4 hour candle. So that candle will run from Sunday 10 o'clock to Monday 2 o'clock UK time. And I would have gone short underneath that swing high there. So here I could have gone short, put my stop loss. So to let you know where I would have gone short, around here, where this swing low action was. Unfortunately, I didn't take this trade earlier on in the week, but that's where I would have gone short from. And then I target, other equal lows. For instance, here you've got the equal low, I would say here, of 399.915, which is equal to this one, which is 4,000.325. It's like a difference of 1. So you can say they're relatively at the same level. So that's where I'd be targeting if I was. That's just a general layer of how I trade. I trade level to level, equal highs, the equal lows, with my entry criteria being the 15-minute swing invalidation, whether it's last swing high or last swing low, depending on which way you're going on the chart. But yeah, as I mentioned, I'm staying out of the charts as much as I can today until I wait for news on FOMC to settle.
I think that's a fair assessment. It's the same with like Engineer Khan was asking here. So I was asking, my prime question here will be: is it good to go long on NAS with reflecting on what LJ said earlier? So it really just depends, mate. Like I don't trade FOMC, so I'll be sitting out for it. But yeah,
it depends on how much risk you're putting on the board. Right. You know, if you're trying to take a trade right now and then get it to punch like 5-10% off the announcement.
Yeah.
Probably not a good time. And you're probably looking at like a very like a shorter like target, TP target, and like a very tight stop. Because you will want to have a tight stop. If you're going to run this into FOMC and you do want to take that event risk, you do have to have a tighter stop to compensate for slippage. Because there will be slippage, especially on something like indices. It tends to slip a lot further than, say, like FX pair, right? And the contract sizing is also different, okay? So that's the situation. Now, if you're sizing appropriately and you do have the view on the market consensus, the majority consensus actually coming through, then you might want to take that trade, right? That would be in line, that would be logical and sensible with the market consensus that is currently priced. And you might see that because the rest of the consensus has to be priced out, and normally we don't have that big of a discrepancy, you could actually see a bigger push higher, but you're still going to stick on the market side. Fair play. But you do have to size these things appropriately and have a reasonable enough of a drawdown. Because as well, even if the statement comes out and it is very binary and goes one way, you can see a snap down because of algorithms. Because the thing is, particularly with things like the NAS or any kind of indice or stocks, 70 to 80%, almost, it's approaching 80% now, is run completely by algos, right? So they often snap back first, and there's also the market makers, which will shift. Then you get the actual statement input, they readjust, and then run, right? FX is a bit different. It's still only about 35% at most, so very different. The rest is more manual. It's upward of 40 to 45 for some, but that is in those like partitioning trades. The rest is traded manually. Like it's literally someone on a desk trying to find the best price. Whereas stocks, it just goes into a feeder funnel and is placed. Very different. So
yeah, I see
a little bit more context.
Yeah, a little bit more context needed for that. I see that there's a person in chat that is being rude to Usam. So Blackman1, if you're gonna continue being an arsehole to people in chat, coming in here with arrogant comments and stuff like that, then we're just gonna ban you because that's not cool, mate. Like what you're saying now is not cool. So
no worries, Con. No worries.
Yeah.
So
I think
yeah. So this chat, this stream is for everybody. So if you want to be rude and you want to come in here with an ego and being arrogant and whatnot, you're gonna get banned, mate. No, Usam, I know you can handle it. I know you can handle it, but this is not the kind of community that we're trying to create. So
I would also challenge from the original comment he made.
No, I mean, like, he's entitled to his opinions. He's entitled to it.
He made a statement. Not an
it's fine.
Right, post
it's
it.
Fine.
Post it. Do it.
Yeah.
No, you're gonna have a bad time, and we've got hundreds of hours of live streams.
Yeah, you're entitled to your opinion, and you can voice your opinion. But the moment your opinion starts being rude to other people in the chat, that to me is a no-go. So one more peep out of you that I consider to be rude, and you're getting banned. I'm just gonna say it straight up.
I agree with the novel navigator. Yeah.
Like I'm saying, Usman, I know it doesn't bother you because you don't seep to that level, but it bothers me that there's a person coming into the community with this arrogance and this ego that don't know us and don't know the community. So, yeah, I'm giving you an opportunity to do the right thing and be a part of the team and come here to be jovial and chat with us and talk with us. But if you come with that shit, you're out. Hello, Samir. What's up?
Hello, guys. I was in the background hearing. Please, guys, be respectful. Osam is a nice guy. I think he commented on one of my video. He's a nice guy, man.
Osam's a baller, dude.
I'm sorry. I'm sorry on behalf of that guy, but still, man.
Yes, Usam is a pillar of our community. He's always in here giving advice. He's always here chatting with us, asking good questions. He's acting like a moderator by answering questions that we don't always get to. So I don't see the point in trying to be sassy with Usam on information that you just don't know. Usam is losing money every day. You have no information about that at hand. There's no empirical evidence at hand that can prove that point. So you're just sitting here making yourself look like an idiot.
The comment himself expresses exactly the ridiculousness, right? Like, that's just...
Anyway.
It's just silly. It's so naive, so uneducated, whatever. Anyway, so...
Yeah. So, we can just go ahead and just say goodbye to him because he's about to get banned.
Yeah.
Okay. Hello, guys.
Bye.
All right. I'm seeing gold here. As I cannot understand this pair, it is just ranging overall. I don't know. Maybe you guys can share your point. I don't know where gold can potentially go. Okay, I'm just seeing gold now. So I think it's a BU chart. So what do you think about this asset?
So I was just discussing with chat that for many assets, I see us ranging until FOMC, and then FOMC will be the big driver that takes us out either way. I haven't got a crystal ball. I don't know whether FOMC is going to be bullish or bearish for us.
Yeah.
We were talking a bit about the interest rates earlier with a 1/3 chance, or they were saying there was a 1/3 chance of a rate hike. And we were discussing around that, which is a lot more split than we've had over the last few months. So where there's a split, that means the news either way is unexpected. You know, it'll be, if we keep rates the same, it's unexpected to a third of these, the 1/3 roughly, which is these guys. If there is a rate hike out of nowhere, then the 2/3, these guys, get unexpected news. Either way, it's going to be unexpected. It's going to be volatile. That means I stay out. It's gonna range. Okay, yeah, we've just hit the equal low. We might come back up. Who knows? Maybe even hit the equal high before news. I don't know. I don't really care. I'm just gonna stay out of the market until FOMC is done.
Yeah, I think all the USD, XXX USD pairs or USD in general, they are not gonna move a lot. Actually, I'm seeing US30 chart. We have moved quite a lot. Let me see how much points. It is like almost like 400 points. But I think now we're gonna range at least till the FOMC. Of course, till the FOMC, because that is a big news in the market. I know LJ is a fundamental type of guy. I'm just a technical guy. So maybe you can share your thoughts on this FOMC or how this particular thing can, put the market or maybe set the move for the market. What do you think about this FOMC or how it can impact if it came, positive, negative. What do you think? You are muted.
Sorry, I said hi to my
Yeah, now it's fine.
partner. Yes, I think you guys saw me waving. She just came in. Yeah, I think we're definitely going to have fireworks with the FOMC. Buyu was talking about this earlier as well, and covered this stuff with myself and Dirk earlier in the stream. We've got like we'll call it 70-30 split. 30% of a rate hike, 70% to stay put. Now, like I was saying before, the 30% for the rate hike is not always necessarily a hike itself, but it sometimes imputes future value for potential rate hikes going forward as well. There's a bit of a it goes over through like a spectrum of total rate hikes going into the future, right?
Okay.
Now, at this current meeting, though, there does seem to be a lot of people who do actually think we are going to get a rate hike, and that is where that number does actually have some probable volition from certain people, certain participants that do actually believe that. Now, I don't see it. Dirk doesn't see it. We've been talking about this for ages. Inflation is not printing higher. The Fed would have to be completely going against every single piece of data that we are currently seeing altogether. It's much like the Aussie. We've seen them punch a number of rate hikes. They actually moved first in the rate hikes. We saw 3 rate hikes. And now, ever since then, we've seen inflation come down. And it was already coming off before that. Right? So, definitely seems like a policy misstep. Now, the Fed itself, as far as the other participants, are very split. It's very 50-50. We've got Kevin Walsh in the middle, and he's the one that is going to tilt either side of the actual direction. Overall, from what he's said about how he wants to reform the Fed in terms of how they take in data, how they analyze this kind of stuff, it's more nowcasting and casting from like market inputs as well. Which, if you take that, we see inflation much lower than the actual prints. And on top of that, the actual prints, in the traditional sense that we've seen, are also coming in lower still yet. So, on the basis of probabilities, you should see him tilt slightly dovish. Now, the question is, like I was saying, whether that's today or the next meeting. I was saying with Dirk, it's probably today going to be more of a layup, but we'll get more information than the previous one. His first meeting where we got basically nothing. This is probably going to be a layup into the September Fed meeting where we get the dunk, right? And given where everything is, we've had the dollar run high more recently. We've had bond yields on the short end and the long end of the yield curve run up. And we've seen stocks come off, particularly in the NASDAQ. The S&P and the US 30 have been holding up pretty nicely. And that's also an indication point where on the broader market spectrum, I believe on Tuesday, we saw over 50% of all stocks hit new all-time highs, right? That doesn't tend to happen if we're actually going to see some kind of rate hike or right? So the majority, like the large players, are getting whipped around by this whole Korean chip stock.
No audio, I think.
Can you still hear us, audience?
No, it's gone.
No, I can.
We're back.
Yeah, now we are back. We are back.
Okay, awesome.
All right. Maybe EV Mux cannot take too much load.
Too many.
Too much
heat.
Too much macro information right there.
Too much heat in the market.
I don't know where this cuts off, but basically, in summary, Samir, the risk reward I'm seeing is potentially more to the upside overall, asymmetrically. Now, that doesn't mean in between, with the announcement, we're going to get a choppy back and forth, right? I would expect that, but the eventual direction, I would probably see us go higher as far as risk on assets. So that means things like the NASDAQ, the S&P go higher, dollar comes off, Euro sort of wanders high. Euro's probably the lackluster one, to be a bit more neutral. I think the Aussie and the pound will get much more bang for their buck going higher. And dollar yen is very interesting, but I think dollar yen right now I'd just stay out of altogether as far as its current condition. I think that's a later story. There's a much deeper story going on there. So
do you think like yen pair also? Do you think like yen pair also get some kind of effect with this FOMC overall, or it is just the USD?
I mean, yen potentially could, yes, but I think it'll be more choppy because, hence, I was saying like there's certain follow-ups that have to happen to confirm the yen position. Now, if we see the dollar coming off and we see the other majors coming up, therefore yen should actually appreciate, but less so because of the actual Fed meeting. It's just you see AUD yen running off, pound yen running off, and then we're going to get a split because in that sense you would see them actually run higher, AUD yen, pound yen, euro yen, but at the same time you see dollar yen coming off, right? So that's where you get this split and pull where it's not evenly balanced. So that's probably one I'd say out of overall. Now, you could jump into it because, like, obviously the yen pairs move a bunch more in terms of pip movement. And it is, slightly, like, tangential to the actual Fed announcement as far as being dollar-centric. But it does have that flow-on effect. I think you'll get a much clearer impulse from the majors or any kind of dollar cross pair rather than a yen cross. Only because of the dollar yen itself. Right. Now, if they are very much more dovish and we get the dollar yen absolutely tanking, in that scenario, you do actually get a perfect storm and you could see other stuff run off. But then you'd want to be in the dollar yen, not in the other major yen crosses. Because the other major yen crosses will be running up.
I think it is making all-time highs.
The other majors will be running up, but the yen cross will then be mixed. And it'll probably underperform the total direction, which you would want to be in the dollar yen instead of pound yen, euro yen, or Aussie yen, or otherwise.
All right.
Yeah.
And have you tried like positional trading? I think with that kind of knowledge, people do try this type of thing. I'm just curious. Like holding the trade for a lot of months. Holding the trade for a lot of months, something like this.
Yeah. I did that a lot more in the past, especially when I was trading earlier. Then the only thing I found, the trouble is when I was doing that back in the past, we had very low interest rates. So that was also good because the swap rates didn't impact you too harshly. But at the same time, you also want to find those trades that do have a positive swap and gain that carry at the same time as the capital appreciation. And now these days, like I find it better to be able to just trade more actively. Same thing with stocks. Like I had a lot of long-term investments and then liquidated a bunch of that to trade actively and not take on that duration risk from stocks because I found I made at least the same money and far more without taking on the duration risk. There are tax implications of doing the differential, but net, it's still, I've found it better for me to trade actively than long holds. So typically nothing
All
more than
right.
like a month at most. Unless it's like an options trade sometimes. So.
All right. Yesterday I was in US30 buy. It was really good. So if anybody from yesterday is still knows the buys that I was talking about, and I was already in the buy. So I mentioned that after the stream, I think the price was trading somewhere around here. So I mentioned after the stream or tomorrow, which is today, I will share the outcome of this trade. So this was a good trade here. Let me delete everything. I will give, if anybody is watching now or he or she was not there yesterday, let me break this trade down. And I also took a loss on NAS, but then I took a win on US30. So net, it was a positive day for me. But let's analyze this thing. So this 4-hour candle, it was a decent volumetric candle. So I was like, maybe next candle can wick down and can go to the upside till this resistance area. So this was the story behind the buy that I was planning. And I was having this resistance area, which could have turned into support. I was just eyeing on this area, and even if I extend it to the left hand side, still we have a couple of rejections here. So now if I go to the 30-minute, market opened right here, impulse to the upside. I'm sorry, it opened right here. It just impulsed to the downside. It just came into my level. I was like, on the 15-minute, I just used the Fibonacci. I was like, if I want to take this buy, it should at least be below the 50% area so that I can have some kind of equilibrium entry, so that I should not enter too high. So yes, it was near the 50% area. I just waited for the 5-minute good rejection candle, which was right here. I just took this trade here. Stop loss was around 110 points, and I was aiming for 1:2, something like this. So this trade covered my loss from NAS. Let me explain what I did on NAS also. I think the mistake that I did on NAS, I entered before the market open. I could have avoided that trade. I think that is the mistake that you guys also can learn. It is just part of the strategy that I follow. Never enter before the market open. So I was like, I do have enough room, but I was wrong there. Anyways, market liquidated me, and then it got to the upside. So I was having this area. So I was like, maybe we can reject from here. 15-minute time frame, we was already squeezing to the downside. Momentum was fading away. So I took this trend line, not this one. I think, yeah, I took this trend line breakout, and I placed my stop loss here. And I was also like, maybe this is a double bottom, and we can at least test these kind of areas. And I was wrong here. I think the timing was wrong here. This type of setup is not wrong. If I try to enter this type of setup in NYSE, I can have a better win rate. This is just a lesson for me. I'll not enter the trade before the NYSE. Of course, I can take other trades, maybe on other assets. But when it comes to indexes, if the trade is on the London session or in the London session, maybe I can hold it. But before 1 or 2 or 3 hours before the NYSE open, I think that is really a risk here, according to my strategy. So now, as yesterday is gone, let's analyze what US30 and NASDAQ can do today. For that, let's take a look at the daily candle.
Just before you do, Samir, I'm going to have to jump out just now. Final comments. I also saw this from Mr. OGG1. Definitely, I can run through that tomorrow, probably. I got to jump out now. My partner just got here, that kind of stuff. So, and I've been on for a while. So, final comments for Fed tonight. There is the chance that the statement is not very clear as well. So we could get like a drop down in a perceived perception that they do want to keep on that inflation concern overall. But then once, Kevin Walsh comes out with the conference, we could see a snapback. So overall, I would say fireworks today. Take whatever the general ATR is and probably double it. And even though, particularly on things like the NASDAQ or the S&P and that kind of stuff, we definitely had a greater than normal ATR, probably double that, and expect we could see either end of those things. Now, there's the other potential that if it is very straightforward, and we do go through, not have some kind of confusion. We do just jump right up. But I wouldn't be surprised if we get a massive snap down that's then bought into at very low levels, which regardless of the current situation going forward, they're very nice buying levels for long-term holds, etc. And we do see that pick back up, right? So be careful, that kind of stuff. We'll see if I'm able. I can't confirm, but I might try and hang around in the Discord later on tonight to update with this stuff, and I might jump into the voice channel to cover this stuff with you guys. Can't confirm, but give it like a 60-40, maybe 70-30 that I'll be there, right? I gotta sort out a couple other things, but I'll be around. So either way, good luck, guys. Leave you to it.
All right.
I will see you later on.
Right.
Cheers,
I
LJ.
think.
And on that cue, I'm also
care,
going to say bless, and I'm out. I will see you guys tomorrow. Stay safe for FOMC. Please, I don't want to be hearing horror stories about, people blowing all of their accounts and, having a hard time trading. Be safe, guys. I wish you all the best, and I will also see you tomorrow. Take care.
Just for you.
All right. I think today Victor is not gonna come. I'm not aware about it.
No, he sent me a message not too long ago, just saying that he has something that suddenly came up, and he apologizes. He is not going to be in. However, you will get to see Victor next week for 2 sessions in one day, because he's going to be hopping in twice in one day. So no Victor today, but you will have Victor. I think this afternoon with his regular Discord session, and then also again next week. Yeah.
Okay, no problem.
I had a banger trade on NASDAQ, a buy earlier.
Okay.
It eventually came and knocked me out at break even on, it was a buy on the 5-minute. And eventually with this sudden news drop that we had from a Trump tweet, basically.
This momentum stopped you out?
Yeah, that one. That was a Trump tweet. Yeah, that was a Trump tweet. That bigger candle that basically pierced through the what is that, the EMA that you have there.
Okay. That one.
Yes, that one pierced lower. It slipped me ever so slightly, but overall, I had already locked up 1.5% on the day, so it was good.
I think the approach that you just mentioned few weeks back, like taking partials, letting the trade run, I think that is working out really fine for you. Maybe you can put some light on this, like the way you was doing things before, and the moment you started doing this thing, how it has impacted your results or your psychology.
The psychology side of it is a lot better, because as I'm taking partials, I don't, let's say, fear having too much risk on the table. Let's put it like that. Because as I'm taking a partial, I'm also taking off some of the risk. In terms of the outcome of the expectancy, it's still very close. Obviously, a 1 to 2 straight up provides you with a better expectancy rate. Because it's clean. It's a clean 1 to 2. Where this one, the way that I'm trading it now, I am taking partial. Some days I take a TP1 and then to stop loss. Some days I take TP2 then to break even, and then some days I take TP3 to break even, and then sometimes take TP4s. So it's split a little bit, but I'm losing less when I lose. The only time I'm losing a full percentage or my full risk is if it doesn't hit TP1 and then it just straight goes to stop loss. But every time I am losing, if it hits TP1, goes to stop loss, I'm only losing half. So that has helped my psychology quite a bit. It's like, look, if I can hit TP1, I'm happy, because then I'm halving my risk in anyway. So every time I hit like TP1 or TP2, I'm like, okay, cool, great. My risk is off the table. I can go on to the next trade and I can look for another trade. So even I can leave that trade to run and do its thing, and I can start looking at another trade instead of thinking, okay, do I need to consider closing this trade? Or I don't want to risk another trade while this one is still running, that kind of like thing. So The psychology side has helped a lot, like genuinely a lot. Just kind of like taking partials. It's still a 1 to 2.5 R if all 4 TPs gets hit. But it happens less often than, for argument's sake, a 1 to 2 at full 2% risk, or 1% risk for 2% take profit. And I know you trade the 1-to-1 ratios, so obviously you require a much higher win percentage. I don't need as high of a win percentage. Mine is about 62% across all 4 of the TP points. That it averages around.
I think over the longer period of time, you still might be having similar kind of results with both of the approaches. What do you think about it?
Yeah.
Or you have found it, I don't know, over the year or two, I think both of the approaches is gonna give you similar kind of results. I haven't tested it, but that's what I think.
So the difference in expectancy was not that large. It was a slight difference in expectancy. The 1 to 2 R straight up, taking one trade, like full percentage, and take off the full percentage at take profit, was slightly more profitable.
I think this approach that you have. I'm sorry. I interrupted you.
No.
I was. I'm sorry.
That's all good.
I was gonna say, I think this approach that you are having, it is gonna work really amazing in futures as you have the trailing drawdown, because you are losing less. I think in futures market, this approach is gonna really give very good results. In prop firms, of course, if you are using the own capital, that is different.
Yeah. So if you're looking just from a straight numbers point of view, the 1 to 2 is still more profitable. However, the profits isn't everything. It's the psychology. It's how comfortable you are in a position. It's allowing the position to play out a little bit and getting used to certain aspects of trading instead of just saying, well, I just took a $400 loss and I could have had an $800 win. In this case, it's like, well, instead of taking a $400 loss, I took a $200 loss on that trade. Even though I took TP on one of them, I took $100 off. And then when it came back, I'm $200 down. So when you look at it from that point of view, you're only down 0.5% effectively. And you're like, it makes you feel a lot better than saying, I lost a whole 1% on one movement. So taking partials to me has become more of a psychological risk management side than it is it's more profitable or it's less profitable. I would much rather have a slightly less profitable strategy that allows me to have better psychology and better risk management. Because even though it's profitable, I cannot look at it and say, okay, I'm not going to have a string of losses. I'm not going to have a few trades go in, against me, like in a consecutively. That's the word I was looking for, consecutively. By taking partials, I'm locking up some profits here and there, and then when I do go through a string of losses, the loss is not that large. And that's kind of like the idea. Yeah.
That is really a good point. And when it comes to futures trading, risk management is really very important. I think this approach that you are following, I think this can make you secure a lot of payouts. I'm just, I'm just thinking this way anyways.
So I'll give you an example on the futures account. So I'll break it down for you. That exact trade that I took earlier, if we go to my screen, I'll show you quickly. Because we're about 38 to 31 minutes, 32 to 31 minutes away from from the New York Open. So I took the trade somewhere over here, all right? And as you know, I always have a TP1, a TP2, a TP3, and a TP4. So this effectively hit TP3, and then it eventually came down and hit my break even. On my futures account, if I had taken this exact trade, all right, I would have risked $400 at the bottom end as my risk for the trade. So $400, it would have been 4 micros. I trade the futures one slightly different. Instead of 40 points, it's 50 points. So risk. So TP1.
So you're using the fixed stop loss?
Yes.
Okay.
So I have a bracket that I use. So I would risk $400. So TP1 over here, if it had hit, would have been $100 that I lock up. And then TP2,
Okay.
if that had hit, would have been $200. TP3, 300, and TP4 would have been 400. So if all 4 of my TP points would have been hit, it would have been $1,000 that I take as profit. So 2.5R, which is exactly the same way that I'm trading on my CFD side. The only difference is, because you have this trailing drawdown available to you, if I take a $400 loss, it is $400 that is taken away from that end of day drawdown. So my next trade, I have to really think about, okay, am I going to go full risk? Maybe I'll go 2 contracts as an example. And then that's the runner. That's the one that goes beautifully into profit. And then I don't lock up as much. Because I'm not the kind of trader that starts building a position. So I'll go with one contract. It goes up a little bit. I add another contract. I don't do that at all. I want to trade like this. So if in this case, TP3 with CFD is 120 points, but TP2 with my futures one is 100 points. Okay. Yeah. So in this case, I would have reached TP2 and I would have moved my stop loss to break even with the future side. So I would have locked up $300 and I would now have removed the full risk. So I've locked up $300. Now I'm looking at, I want it to run. In this case, it wouldn't have run and it would eventually have come back and hit and stopped me out at break even. But now I've locked up $300. My next trade that I'm looking for, if I were to lose that trade straight, $400, I would be down $100 on the day. And my end of day drawdown would be $100 lower, not $400 lower. Where if I did the 1 to 2 without taking partials, it would have been $400 with $800 of profit. Yes, in this case, it would have hit it, but it probably, sometimes it's not going to, So I love the idea of taking partials now, especially on the futures platform, because of that trailing drawdown change. I want to limit how much I lose as often as I can and slowly build up. That's what I want to do.
Yeah. I think I have only 2 approaches in my mind. Either taking the partials and moving the stop loss to break even when it comes to futures prop firm, or using the dynamic risk. If let's say you lost $400, next trade or next trading day, you have to decrease your risk. I think as I was trading futures, of course, I think I invested around $1,000-ish, $2,000-ish dollars. I'm not gonna lie, I blew like 5 to 7 accounts initially, and then I was doing the same thing. Eventually I secured the payouts. So definitely I am not in negative when it comes to futures. But as I was trading futures, I think only these 2 approaches comes in my mind. Either decrease your risk after the loss, or take the partials along the way and decrease your risk that way, or risk exposure that way. I think I'll practice this thing. That is why I was asking you, because the day my foundation started this way, the TP or stop loss, as my psychology is not allowing me to maybe decrease the risk or use the dynamic approach, because it has been many years I'm doing the same thing with the CFD prop firm. So that is why I was asking, using the dynamic TPs, how it can affect the psychology and results. So definitely I'm going to try this in futures. CFD side, I'm going to do the same thing, use the static risk, because we don't have trailing drawdown here. So that is a plus point. So future side, I think these 2 ways are the only ways if you want to make some money in futures. Of course, I know many people, they buy multiple accounts, they full port the futures account, but we are not that kind of people. We are having limited capital, so we cannot do that. And that is not a good approach, actually. If you want to become a trader, that is not going to be sustainable. I know a guy, he risks huge amount of money, and of course, he lose huge, he makes a huge amount of money. But then when the things are not working out, your burn rate is gonna increase in that pace. You cannot handle that. So I think
may as well just go to the casino.
Yeah,
you may as well just go and put your whole entire amount of money that you have for the month on either red or black on roulette and just spin a wheel.
Exactly.
There's going to be a day that you're going to win. Yes, congratulations.
Yeah.
You've just doubled your account. but the amount of times that you're losing all of your capital, the amount of money that you need to make the next time to make up for that money that you've lost becomes more and more and more and more. It's just crazy.
Yeah, exactly. Abra is saying, I have limited capital, calling me homeless. No, I'm just, I have a limited capital. I don't have unlimited capital. But anyways, I was breaking down, I broke down the US 30 trade, NASDAQ, I took a loss. Let's see what NASDAQ potentially can do in this NYSE session. Of course, FOMC is later on. NYSE still will come up with the volume. So I think you can take some trades in NYSE, but don't hold it for a longer period of time because, there is FOMC. So let me take a look at the daily candle. Okay, this is the daily high. This is the daily low. This is having some kind of wick. I do think these highs or lows are gonna get swept in this NYSE. Let's see. Okay, we have this area also from where there was a slight rejection. So maybe we can use this as a support. This is a resistance turning into support. So this is point number one, or one piece of puzzle in this particular story that I'm trying to make here. Okay, we have this area also. That can be a reference point. If price decide to do something from here, we will know why it is doing that because we have some kind of area here. Going to the 1 hour. 1 hour, I am spotting this type of pattern, which is decent actually. After this impulse, now the continuation of that impulse is fading away. So I think there can be some kind of liquidity moves up or down. I think eventually this kind of nature will take the price higher. If we saw that liquidity maybe to the downside, if it breaks to the upside with a good volume, I think this pattern is going to take the price higher, at least to this area. Let me delete it. I'm going to just make it a little bit cleaner. Okay, this is the target that I'm aiming for if price decides to go to the upside. Of course, as I mentioned, there is FOMC, so I don't want you to hold the price or trade for at least this full 300 points. So let's go to 15-minute, which can guide us what price can do. Actually, 15-minute, yes, EMAs are to the downside. Structure is still printing lower lows. You can see never broke this high. This is the lowest point. So technically, this is the lower high and lower low. Now this becomes a range. Okay, again, I have to delete everything because I don't want to make the cluster. So now as we are ranging, we don't have any established trend. So I have noticed I have taken many losses this way following the EMA because now there will be multiple liquidity points. We don't know if this will be a liquidity point or price go lower and then I take sell and then price goes higher. So in this case of scenario, no trade on NASDAQ. If price liquidated this low, then maybe I can take a buy. And if price break this area, I don't want to take a sell. I still want to consider a buying opportunity only because this nature is telling me that momentum is fading away. Maybe we can go higher. Let me draw some reference point and I'm going to use some trend lines as a reference point. Okay, let me draw this. So if we retested this area, I think I'll plan for a bias. It can be near the FOMC. Maybe 10-20 minutes, I'll let the news settle down. I can take a buy here. In that scenario, I have to keep the stop loss a little bit big, maybe 250 points or I don't know, maybe 200 points depending upon the price action we are seeing here. But this is the only area that I will be looking for buys unless we break higher, do some kind of retest. And what areas I will be using as a retest, I will just draw my reference point. I will go back. I will see what kind of points we have. Maybe this area, but as it is coming in the range, so I don't want to use this. Let's go to the 2 hour. I will use this as a reference point. So I will use this as a retest. Break of structure,
wanting it
retest.
to push a little bit back into that zone.
So these two trade ideas I will be looking at, and this trade ideas doesn't seems like it is going to develop right at the NYSE. So I'm just gonna wait for the FOMC on NAS, but maybe on US30 we will be having some kind of opportunity, which I see maybe we can trade this in NYSE because we do have some areas closer to this price action. So let me draw some areas. Okay, this is some kind of resistance, and Okay, this is from where price rejected. We are getting closer to this area, and if you notice, this is also the EMA, and there is some kind of demand area here. So I will like to use this as a reference point. Let me go to the 30-minute time frame. Do we have any trend line that I can actually we are just breaking that trend line. So I don't mind breaking. This trend line is getting broken. The thing that I want to see is what kind of nature we are having after a break. If the impulsiveness is continuing, then this trend line breakout is a real breakout. Then maybe we can go even more lower, at least to this area. But if momentum is fading away, and what do I mean by that? NYSE open, huge candle to the downside, and then didn't follow through, and then we started to consolidate here, and then maybe a V-shaped recovery also fine, and something like this. So that will be the entry point for me. But I need to see if this is getting a hold. But if we will know if this trend line breakout is real, how will I know that? With the momentum or with the volumetric candle. Right now, yes, this candle is good, but what NYSE is gonna bring, we don't know that. So I have to wait. NYSE came, okay, tap of this zone, next candle, maybe it can break that. So for that, we cannot take an aggressive entry here, and then maybe it can regain also. We have countless possibilities. As you know, this price action can do anything. I can just make a plan. So if that happened, I can do that. For that, let me give you a few trade ideas here. Point number one, or trade idea number one: price tap this area, impulse to the upside, kind of a correction, can take a buy here. Yes, a good buying opportunity. If impulse to the downside, correction right here, maybe a little bit of break of that, that's still fine. Can take a buy here. Now trade idea number three. Okay, let me delete this. If we impulse to the downside and we retested this, some kind of consolidation, I think then selling will make a little bit more sense, as we are getting information from the market that yes, this impulsiveness is strong. Sellers are more interested in today's session. So we need to continue this, this impulsiveness. We need to trade in that impulsiveness. I think if we never tap this, if we just straight up impulse here, then I think I still will like to take a sell here. I know you might be saying you are ignoring the trend line. It might be regaining the momentum, but right now we have a solid area here. So that I will like to take as a reference point, and we will also be having EMAs. So these four trade ideas are making sense. So let's see what do we get. Yeah. Let's see what we get in this NYSE. And again, I'm not going to be
8 minutes.
Okay. We have 8 minutes. And I was saying again, I'm not really going to be aiming for huge targets. 1 to 1, 1 to 1.5 maybe. That is it. Because the NYSE, yes, will bring up with the volume, but slowly the momentum or the volume will fade away, and it will wait for the FOMC. So that is what I have noticed in these indices. So yeah.
There was a question here from Novel Navigators. Like, did you see what is better, trailing 40 points instead of break even at 1 to 2? So I have done both of those. The reason why I don't do the trailing is because sometimes you have a much deeper pullback than just 40 points. So let's say you take TP2 and it pulls back 60 points and then it starts picking up. So you can have a bit of a pullback, miss out on that potential follow-up. You are technically then locking up another 0.25%, but as it's pushing up again, you're going to miss out on that TP3 and TP4. It doesn't happen all that often, but I found that taking the stop loss to break even just makes a little bit more sense than trailing, because sometimes you have a bit of a deeper pullback, a little bit of consolidation, pick up and continuation up higher. And then Mr. Og is saying, at Richard, how many percent are you risking on futures and on CFDs? So on CFDs, I trade anything from 0.5% to 1% per trade. I don't go any larger, and I generally don't go smaller than that. For futures, however, I'm trading a 150K account, so $400 of a 150K account is 0.26%, 0.266%, something like that. So with the futures account, you only have 4% available of drawdown. So I don't really want to go 1% or 0.5%. So basically a 0.25% on that one. $400 per trade is what I do there, with a hope of making $1,000 on that trade if all TPs get hit. But that equates to 150k account, 1% is $1,500, and $400 of that is 0.266 repetitive percent. So basically a 0.25%. That's how much I risk. And I do that almost always. So if I start going into drawdown, deep drawdown, I would, if I was trading 1%, I'll go to 0.5% and then try and build my way out again. If we have high volatility days, I'll go to 0.5% as an example. Or if we have days where it looks like, let's say a Monday as an example, like we did on Monday, I would go to 0.5% as well, because Mondays tends to have that, it attempts to push up and then it goes in the opposite direction, can be a little bit more volatile. So the volatility is going to depend on whether or not I go 0.5% or 1%. And generally, the more momentous the movement is, I want to have a little bit more skin in the game. So I'll go up to 1%.
Yeah, that is amazing approach. And as you was discussing about the risk parameters, I was in the gym, so there was one of my friend, and he asked me very interesting question like, if everything is gone, how will you approach trading, or what will you do? So I think that was a really interesting question that I want to answer here also. And I said, I have to go slow. That is the only option that is available to me. I cannot really rush the process. I cannot really risk too much. As you was talking about conservative risk, 0.5%, 1%, if you were getting in the drawdown, you have to decrease the risk, because you don't have, or in my shoes, I was thinking about that I don't have enough of a cushion in the background, so I am not allowed to take or play this game in a risky way. So I think, guys, I'm considering our viewers to be in the shoes or the way I was few years back. So for you, conservative risk approach is the only way that is available to you right now. Maybe after a few years, you build the cushion, then maybe you can increase the risk. But right now, I think conservative risk, as Rich mentioned, going into the drawdown, maybe reducing the risk, or maybe taking the partials. That is really a good approach. And that is the only option available to you. If you haven't found success in trading, or maybe you're trying here and there, just go slow. That is it. And that was really a good question. If everything is gone, I will go slow. That is the only option available to me. And to you guys also, I believe this is the same option available. Again, as I mentioned, as you grow in trading, as you build a cushion, you can increase the risk. So I think that is okay. Maybe people will tell you, oh, you are risking a little bit more. Maybe 2% is so much, but people don't know the cushion that you have, that you have built. So everything is personal in this space. I think, again, as I mentioned, beginner trader or the trader who haven't found success, slow is the only way. So I will end this particular thing here. Maybe we can come to the charts.
I wanted to add on to that, Samir, because what you mentioned, I think, is the correct way to go about it. When you look at risk and risk appetite, if you look at professional traders, hedge funds, banks, all of that, they all talk about how they can marginalize their risk. They always talk about how they're trying to offset their risk. They're always talking about risk. And the idea is you go through cycles. There's cycles where you're risk on, there's cycles when you're risk off. So if you're risk on, the idea is I want to put a little bit more, I have a little bit more skin in the game. But when I'm risk off, I'm like, look, this doesn't look good to me right now. I need to slow down a little bit. So these big players, yes, when we're talking about billions of dollars worth of capital that they're trading around, the idea, the concept is what I'm referring to, not the differences. The concept is that even they look at it like, I cannot just full send anything. I can't just go full margin because I need to make this money or I want to make a lot of money. For them, it's about the offset of risk. And the same thing for us as traders should be that as well. Our risk appetite should change. It should adapt. So if I'm very risk averse, I'm probably going to struggle as a trader. But if I can take that risk averseness and adapt it slightly to say, look, I can be a little bit more risk averse during these periods of the cycle, and being less risk averse during these periods of the trading cycle, I can then start adapting. And where I could have made a crap ton more money, the inverse is also probable. I could have lost a crap ton of money if I kept my risk the same. So adjusting your risk and getting your risk appetite to increase or to decrease across your trading, across the trading year, across the trading cycles and stuff like that, is going to determine whether or not at the end of the day you're going to last in this industry. So losing money is one thing, but like losing a lot of money when you could have lost a little bit less just by being slightly less risk averse or slightly more risk averse can be the difference between you making it in this game or burning out very quickly. If I had to start over, I'd start slow. Same idea. I would hopefully retain the knowledge I have now, and I would do the same thing as what I'm doing now. Just, I wouldn't be rushing it. I wouldn't be trying to make the next big payout or anything like that. I would want to get consistent payouts. There's nothing more freeing than getting a payout and then 2 weeks later you get another payout in this industry, in the trading industry. So I don't care about making that $100,000 payout in one go. I would like to make that $100,000 payout across a year, as an example, 2 years, 3 years. So to me,
let me
yeah.
As you're talking about the payouts, I was gonna see when was the first payout I got from 5ers. Then I will see how much time it took me to hit the six figure. Almost
the 100K. For those who don't know, Samir has verified $100,000 payout with the 5ers alone. So, I mean,
all right. I can see the first payout that I got was on this date. I think the time is also there.
Yeah. So
Let
the
me
26th of
make it.
December 2023 at 2 minutes to 7. I'm assuming that's in the morning.
Yeah, I don't know what time zone it is, but this was the first payout and it took me 2 years. And trust me, for 1.5 years, I was going slow only, build the cushion, risk that, and the money that I made in 1.5 years, I made that in 6 months. So that is why I was talking about going slow and building the cushion and then using that cushion wisely. As you mentioned, you should know when to risk more, when to risk less. Of course, the way I'm saying risk more, it doesn't mean that you risk your whole account or 50% of your account. That doesn't mean that. Maybe you should have a reasonable size. So I think that dynamic approach, building the cushion, these type of things, they are really important and you need to follow these things. By the way, as I'm on USD CAD, I was planning for sell. I'm getting used to currencies. That's why I've added it here. So I'm just analyzing why I was planning for sell.
New York session open, by the way.
Oh, let's see US30 what it is trying to do. We have some levels there. Okay, let me delete it because NAS I'm not gonna trade today. I'm just eyeing on US30 today. Let me delete everything. Let's redo everything fast. Let me draw some levels. Okay, we have this level and I think this is a decent area. Yeah, this support is also there. Yeah, I would like to take buys around this support if I am planning for any buying opportunity. 15-minute, we are also away from the EMA. I think on the 5-minute we will be a little bit more away. Yeah, I can aim for that pullback.
But do you go down to the 1 minute when you're looking at the NYSE open?
I only my entry patterns are on the 1 minute. The way I analyze or the areas that I draw, it is based on the 4 hour, 1 hour, and the candlesticks I see, it is on the 15-minute, and only the entry pattern that is for me patterns, and I use the 1 minute time frame. Already we are having a fade of momentum. I think trend line like this, maybe a liquidity and then regain. That will be a good buy here. I need to gather some more information to take that buy. Let me see, what do I have? Okay, we have this candle, price took out this low. So this type of areas are also, it is just the observation. I don't even have the name for this. It is just the observation that these kind of candles take out the low price, test these kind of candles in future. Price maybe can react from these kind of areas. I don't even know who used this concept and what is the name of this concept. It is just the observation. So I think if you come to the charts, follow price action, price behavior, you can use these kind of information. I will. Yeah.
Yeah, NASDAQ at the moment is, we just had our first 5-minute candle, was a little bit bullish with a long wick below, just sweeping the previous swing low on the 5 minute. So I think there is a potential here to pick up a little bit.
Anything is interesting according to you in NAS? Maybe buys, sells?
Nothing specific right now. As you know, I don't trade the first, let's say, half an hour of the New York Open. I have the 4-hour candle here, the 1-hour candles, and the 15-minute candles. You'll see on the 4-hour candle, obviously, 24 minutes left before this one closes. We had a wick down. If we're going to close, it's probably going to try and push up a little bit, but the next 4 hours is going to be FOMC. So I don't expect
that.
Yeah. I don't expect price to move too high before consolidating and then deciding it wants to go down with FOMC or it wants to start pushing up. So in this case, to me right now, I like the fact that we swept this down here. So we swept the previous 15-minute low. We swept the previous hourly low. We did not sweep the previous 4-hourly low as yet. So this is anyone's game as of right now. So you can see we are a little bit flat across the day so far. So we didn't really have follow through to push up higher. We started pushing lower, went straight into consolidation. New York Open now looking like it wants to. It might be a fake out and then try and push lower. But as you said, there's no reason for me to get in right now because I'm a reverse trader. So I trade reversals or I trade continuations of trend. And there's neither here at the moment. So I can't get in on this.
Yeah, I'm seeing US 30. It is reacting from that support area. And I wanted to enter from... Actually, I wanted a 5-minute good closure. But it is way too high right now. So I cannot take a trade. That area is getting a reaction. But that doesn't mean that I will enter a trade here. I wanted to enter somewhere around here so that I can have a decent stop loss. Let's see if there is any, this candle close bearish, one more candle with a good rejection or maybe bullish engulfing. I managed to get an entry around this area. Then I can squeeze a little bit good risk to reward. Else, I think I'll just, I'll look at other opportunity maybe selling around this area. This is also not a good area to take a trade from. Why I'm saying that? Because it is in the middle. And EMAs are also not aligning with this area or... price is also not overextended the way I see it. So I'm going to delete this area because I don't want to trade off of this area.
Yeah, I think just being a little bit patient and then waiting for price to start doing what it is that you're looking for and then taking a trade is the best move. Once again, to everybody that wants an answer for what FOMC is going to do, that is still open to interpretation. So LJ gave his sentiment of what he expected is going to happen. But only time will tell now. So we will only have to wait and see whether or not that is indeed what is going to play out with FOMC. Especially with the federal fund rate also coming into play as well. There's a lot of volatility that we're going to see tonight. So please be careful, everybody. I will say that. Please be careful. 15-minute candle is 6 minutes left, and it is an undecided candle as of right now. The 1-hour candle on NASDAQ, like I said, swept the low, is still a little bit indecisive. We will see whether or not we can actually break this consolidation that we have on the 15-minute. So the section here, just really struggling to make a decision. So wick up. Potentially wick low, can see if we're going to break lower. If we do start breaking lower, I want to see follow-up attempts to try and push price lower. I don't want to see us just wick down, wick all the way up, wick down, all the way up. That's not the kind of volatility that I'm looking for.
Yeah, NAS is really stuck in the range.
And I'm not a range-bound trader. I don't trade ranges at all. This momentum, reversals, continuations.
Actually, if I see on the daily candle, we haven't swept any lows or highs yet. So I think whatever areas it is getting rejections from, maybe sell or buy, whatever it is, I think we can sweep the lows or highs accordingly. As we are getting rejections from the, price is trying to go to the downside. Seeing the current candles and the price behavior. I'm using this trend line. This is some kind of support and resistance area if you go on the left hand side. As prices start showing some kind of rejections from this area, if we follow through, maybe break this area, highly likely we can swap these lows or potentially tap this area that is this rejection area. But I am not looking to trade this. I want to take trade on US 30 today. If I take a trade here, my stop loss is very close to the support area, and my risk reward will be sacrificed. I don't have any futures account right now. I was having 150K. I blew it. I'll probably actually I'm on the summer plan. I just got the summer plan, so I'm trying to pass it. Let me see how much. I'm just up like 1.8%. No, the CFD one.
Oh, CFD. Oh, okay. Yeah. I got myself 2 of those. So
10% target, 8%. I'm sorry, 10% target and 5% target. That one. That was cheaper. So I bought it.
Yeah, I got myself 2 of those, and then I'm gonna slowly build my way through those ones as well.
Yeah, that is really, actually this is really no-brainer deal, guys. If you are seeing it and you don't know about our summer plan, you are really missing out. I'm telling you.
Yeah, that's such a good plan.
Yeah, in $135, you are getting $10,000 to play. I'm just gonna put it that way because I see it that way.
Yeah, to try and take a payout from. Abdul is asking, hey Richard, please, how do you set up the TLM high time frame indicator? Just curious to learn. 100%, my friend. Let me show you very quickly. You can literally just search for TLM higher time frame candles, and then you go to the inputs section. Okay. You can have a look here. I have 3 higher time frame candles currently running, the 15-minute, the 1 hour, and the 4 hour. So this box here on the left-hand side is the time frame, and the box on the right-hand side is the amount of candles you want to see. So I want to see 6 15-minute candles, 6 1-hour candles, and 6 4-hour candles. So it gives me 24 hours worth of 4-hour candles, 6 hours of hourly candles, and an hour and a half of 15-minute candles. This time frame visibility portion down here, you don't need to use this at all. You can change the styling. I changed the styling so that it mimics the exact same as my regular candles. I have 1 space between the candles and 3 spaces between the higher time frame ones. So if I'm on the 5-minute, there will be 15 minutes of space between the 15-minute, the 1 hour, and the 4 hour. Then you can have the higher time frame labels as well. That basically shows you the 1 hour time zone with the amount of time that's available for that one to close. And then the rest of it, like show swing lines, is like these little lines. If it doesn't close or doesn't sweep it, it gives you these little lines and stuff like that. That's basically it. I don't use any of the other stuff like this expansion and whatnot, or the fair value gaps imbalances or the trace lines or anything like that. So yeah. Anyway, back to Samir, because I think you look like you're about to take a trade.
Yeah, I'm just eyeing on this price action here because we are printing this. It is telling me that maybe we can hold this area. And if I can do this, maybe 50% of the time or 60% of the time I can get this thing right. I think that can be a really good win rate here. We are on the support area, trying to reject. I will take a trade here. Let me see the 1 minute time frame. Okay, this is also a good pattern. I think once we break this area, I can take a trade on this, aiming for this area to be tapped, and this is the 4 hour area. And if you go to the 4-hour candle, this candle is not having a wick. So I think we can make one. So we are also on the 50 EMA. Many confluences here. So the confidence level is okay. Of course, I'm not overconfident that I'll be risking my whole account here. But price action seems fine to me. So as I mentioned, break of that, I'll be entering the trade. Let me draw this trend line. This area need to be... I'll wait for a candle, and then next candle, hopefully it wick down. I can enter something like this.
Elgin, summer plan feels like a 50k account with that rule. It feels like a marketing gimmick with the 2k payout. We've explained it before as well. That is a really, really good account. Legitimately, it's a very good account. And we've spoken about it multiple times. The 2k payout cap is per account. Yes, you can maximally take 4k per month as a payout. So every 2 weeks, 2k. But the fact that you can do that for $149, and if you do the 10% discount with the ICT code, that's $138, all right? That's the first thing. You can have 2 of them of that one account. You can have 2 of each one of them, so 6 in total. You can get a max of 2k payout for each one of them. And the nice thing about it is that there's no profitable days. It's consistency only. So you are going to have these accounts for a very long time. And if I were to make 10k in profit as an example, I'm going to get payouts for the next 2 months without having to trade. Obviously, I have to open up one small trade to keep the account active, but you get the point. You get the point that I'm trying to make. So if you look at the math around this, it's an amazing account because you don't have to risk a larger portion of your account every single time you take a trade. You know that I can only get 2k maximally every payout cycle, which is 14 days. Why am I going to try and make $1,000 every time I'm trading? I'm going to try and make a lot less. $200, $300, $500, that kind of like stuff. So the amount of risk that you're putting onto the table becomes less. As the account scales, you're still going to stay with the 2k payout cap. You have to risk even less. And it's like having a job. It's like knowing that if I can go and just execute and I'm not going to be over risking at any point in time, it's a much lower chance of you failing this account or losing this account. So if you look at it from that point of view, you'll realize the value in these accounts. Honestly, my personal opinion, and you can clip this if you want to. My personal opinion is that is the best account in the prop industry, the best account. That 5%, 10%, or the 10%, 5% two-step one, best account in the industry. I don't think there's a better account to get for a CFD program.
Yeah, see it that way. You're putting the $10,000 in your broker and you're withdrawing $2,000 every 2 weeks. But you don't have to put $10,000 in your broker. You have to put 135-ish or 39, whatever it is.
Yeah, with the 10% discount, it's 139.
Yeah. So that is only the risk. If we have this skill, $2,000 bi-weekly, I think that is really good. Even if you put 10,000 of your own money, I don't think so. You should aim for like maybe 10,000 in 2 weeks. So that's how I think you can look at this. So yeah. By the way, I'm looking. This pattern is looking clean. One breakout, I will enter this trade here. Looking clean. So I'll be eyeing on this area as a target. Let me go to the 5-minute. 15. Okay, let me delete that. 15. Yeah, there is some kind of fair value gap. 30-minute. 1 hour. Even if I draw the Fibonacci like this, where is the 50% mark? It is around this area.
ICT. You can use code ICT, 10% off. ICT, 10% off. And that 10% is going to go to a good cause. So in checkout, ICT.
All right, let's see what gold is trying to do. Let's see. 5-minute, 15-minute. Okay, we are still in the range. I think I mentioned about this. We are in the range, so we are trying to bounce from here And this is the mid-range. If we are below this, we are tapping here. If we are above this, we are tapping this kind of area. So as we are below, I think if anybody is planning for sells, still there is a hope for that based on this analogy that I gave you. You can have a couple of analogies and rest it is all probability. Of course, the analogies should make sense. For an example, if price is moving lower or the price is trending to the downside, and if you're buying in that, you're trying to catch the reversal. That is not a good analogy, I think, in terms of trading. Let's say you see a huge impulse, and actually here, yeah, if you got the buy, it could have worked in your favor. But ideally, this thing doesn't work. Let's say you bought here, considering that price is too low, and you are not even using the stop loss. So this is a bad analogy here in trading. Do something with one or two logic which makes sense, which has some kind of back-tested results. As a new trader, of course, you can only have a back-tested results, and after a few years, you can have a forward test result by putting the money on the risk once you have that confidence. Okay, let's see what US 30 is trying to do. Okay, we are breaking to the downside. We never broke this area. So
NASDAQ also pushing a little bit lower. So they're a bit aligned.
Yeah, that low, I think we may can tap that area.
Currently in a bit of alignment there, so.
Okay, I think that trendline breakout is a real breakout. But if we still regain this, still there is a chance that we can tap that area. I'll be watching it on the 5 minute now, because 1 minute can give you false breakouts. So 5 minute good closure, so that can I can take that in consideration. Going to the NAS actually. Yeah, I wouldn't be trading this anyway, because I don't want to trade in between of these trend lines. So I'll be eyeing on US 30 only. Okay, this close was good, but that follow through, we didn't got that follow through, so no trade.
Yeah, let's give it some time to play out a little bit, and then we'll see.
Okay, I'm just gonna see it here. I think if we break and come here, we can use this as a retest area. Then these buys will not be valid anymore. But if we regain right from here, still I can use this area as a buying area. But if we impulsed too much, I think that will turn into a sell. Here on the 15. Okay, this was the opening candle. Let me delete everything actually. Yeah, we are impulsing to the downside. I think this low is gonna be taken now. Gold is also impulsing to the downside. If anybody wants to trade this breakout, I think it is fine, because as I mentioned, if we are below this area, price is stepping or touching this area here. Let me make it green. Nope, not this. I want to make it this. Yep, if anybody wants to trade this breakout to the downside, still I think there is a room for gold to go to the downside.
Nice. Aljin is saying, hey, or per day, I can take less than 3% on summer plan for consistency rule. I'm not sure about the 3%, because that is the day, like the end of day drawdown is not, it's not that. At the end of day drawdown is the amount of drawdown that you have available in total. The 3% is the daily stop loss. So you're not allowed to lose less than 3% on a single day. The consistency rule is 50%, which means that half of your profits in one day is not allowed to come from a single trade. So the way to think about it is you take the amount of profit that you've had and you divide it by the amount of trades that you've taken. So if you have $100 in profit and you took 2 trades, then that's basically $50 per trade, which gives you 50%. So the 50% of your profits came from a singular trade. And then this one, just stepping back in, if you made 4K, how would the next payout be handled if you're withdrawing the first 2K at 80% split? Would it still line up with the consistency and you can then just wait for the next payout? Exactly. So the consistency rule is dependent on the trading, not the profit. So you look at the amount of profit you've made divided by the amount of trades that you've had. Okay, so that's the consistency rule. And then whatever profit you've taken as a payout, the stuff that's left, you can leave for the next payout. You've already traded, so that's already been counted into your consistency. So in that case, no problem. Why is it ICT Inner Circle Trader? Because Mr. ICT is the one that started this. If you If you do some stuff, affiliations. There we go. If you do affiliations, then he's going to give portions of that money to a good cause. And then the 5ers are like, well, they want to participate. So what the 5ers is doing is they will match every little bit of payment that they give to that affiliate or to that good cause. The 5ers is going to match it. So every 10% that for every account that you buy, as an example, you can use the code. That code can be used to get 10% discount. The 5ers is going to take that discount and add another 10% as well to pay to the good cause. So that's why. No problem. Anyway, back to you, Samir. Sorry, I was just checking the time and I wanted to answer those two questions just very quickly, just in case we didn't get a time for it, because the stream is going to be ending in about 4 minutes.
Yeah, no problem. So as we are not holding this area, didn't saw a breakout. This was a breakout that I wanted to take, this breakout. So now it means this breakout is not valid anymore. But if we impulsed and again retested, that will be a good. But then if we impulse and retested, so we have two approaches now, but we have to see how price is reacting from this area. Yeah, that is the only thing available right now. Going to the NAS. NAS is going to take this low now because that trend line is in play. But I don't want to take trade in NAS because we are choppy here. I think this is the area that I can use as a reference point. If we actually, it is way too close. I want the price to go a little bit more lower. Why I'm saying that? Because we are still close to the EMAs. The analogy of the reversal trade that I use, I want the price to go way above or below, in this case, from the EMA. Then I can take some reversal trades. But it is way too close. I think we're going to break this area also. As we are moving in sync with the EMA. So I think this FOMC may can bring NAS more to the downside. Let's try to
there's
find
a potential for it. There's a potential for it.
Let's try to find few reference points. If
We're
price
about 50 points away from the low of day on NAS.
Yeah, it is very close. Yeah. Let's see what US30 is doing. Yeah, we are not holding this area. 2 hour. Can we use this as a reference point? For that, I have to go to the 15-minute. Yes, we are away from the EMA. And if I use the Fibonacci from, let me go to the 1 hour. Actually, we are already on the that 786 mark. And we are breaking that area, 7861. So I think the momentum is way too much. It can go even more lower. So I'll wait for a retest, some kind of retest. I'll wait for this, how this candle close on the 15-minute. Still, it is holding so much momentum.
Yeah, that looks good.
NAS is not doing anything actually. I captured 1 to 13. That's crazy.
1 to 13.
Maybe you took a trade here. Let me guess.
Yeah, that's insane.
Like this. Still, it is not 1 to 13. Maybe you got
it from the previous one.
This. Let me know. Maybe I'm doing it wrong here. Maybe you are in the trade from here. Actually, it would have been here. So I think you are here only, somewhere around here. Here. I don't know. buys coming on GU. Okay, I haven't taken a look at GU. Let's see. Going to the 4 hour. Okay, we have this area. Going to the daily. Okay, we have this area. Do we have any more area to the left? Yeah. If you want to plan for buys, I will plan for buys around this area. But if you're planning it right now, I will consider it in the middle. We don't know if it is going to go up or to the down. So I'll wait for this area to get tapped if I want to consider a buying opportunity on GU. Even if you go to the daily time frame, this candle is very strong. If you observe, we took out the high, we closed below the body, so it means momentum is way too much here. So maybe we are just retesting some areas to go more lower from here. Maybe we can pick up some buys. Who knows? But for me, buying area will be this. So I'll just wait for that. It rejected 0. Okay, maybe you are using like this. Okay, yeah. Yeah, this analogy makes sense actually. Okay, let me give you few points on this Fibonacci trade here. If you go to the 2-hour time frame, price is still trending to the downside. If you want to enter according to the story that you're trying to make here on the 618, I will see the break above from this structure. Then it will just be a break of structure, and then maybe you can use some retest area or order blocks, FVG, whatever you're using. That is a real approach if you're trading this type of area, which is the Fibonacci 618 zone. Just wait for every time frame to align. Right now, your daily time frame is aligned, okay, but the 4-hour, 1 hour, they are not aligned. For that, wait for a break of structure to the upside, and that can be your trade. Maybe you can also add the EMA. Break of structure, EMA, and maybe pullback. That can be a good trade. This trade idea is good actually. And that will also break that area that I was having.
All right. With that, we have come to the end of today's stream.
All right. So
just like that.
This is the end of the stream. But don't worry, guys. We will be back tomorrow. Same time with the same energy. And US30 trade I didn't got. But yeah, I'll see what I can do later on. But that's it for today, guys. Thank you so much. And thank you to Rich also for giving me company. And I'll see you guys tomorrow. Yeah.
Awesome. Thank you very much to Samir for joining us today. I hope everybody has enjoyed today's content. And please do trade carefully tonight with FOMC as well as the federal funds rate decision. And then if you haven't already, please drop us a like. And then as always, you are now going to be directed to the Futures channel. Go and give Dave some love over there on the Futures channel. And then we will see all of you guys tomorrow for the last stream for the week. Have a good one, guys. Cheers.